Ladies and gentlemen, please take your seat. Our program is about to begin. Please welcome to the stage Semafor co-founder and CEO Justin B. Smith.
Good morning, everybody. Good morning. What a great crowd. Let me please, before we start, just come on in. If you're out either side of the doors, there are some more chairs on all sides. We'd like to welcome everyone in. The legal capacity is still larger than this group, so please join us. This is a really, really wonderful day for us at Semafor. Good morning to all of you, and welcome to the inaugural, the first time we've ever done this event, the Semafor's Next 3 Billion Summit. It's held in the midst of one of the most consequential, busiest, most traffic-filled weeks of your life. Here at the UN General Assembly. I'm Justin Smith. I'm the co-founder and CEO at Semafor, which I'm thrilled to report for a young startup is now the fastest growing independent news brand in the world. And we're thrilled that you could join us today for what is really a very, very important moment for our young company and also our live journalism calendar. For fans of Semafor, and hopefully after today, future fans of Semafor, we turn 2 years old next month. We're 23 months old, so we're no longer in diapers. We're starting to walk, but our company spans now the globe with 5 million readers, 750,000 subscriptions, and editorial editions in the U.S., Sub-Saharan Africa, and as of last week, the Middle East. As you know, we started in Africa. It was actually our first geographic market alongside the US, and we saw a huge opportunity to put in many, many more journalists across Sub-Saharan Africa than any of the existing global premium news organizations. So I hope you read Semafor Africa, our great editor, Yinka Adegoke, who you'll be hearing from today. And of course, the background of Semafor is we launched with a very simple vision. We wanted to build, in this moment of real media confusion and media crisis, we wanted to build the most transparent, intelligent, impartial, global news product for leaders across the world. And every day we want this audience of leaders, many of whom, or all of whom, are people like you today, to wake up to a common, sophisticated news source that you can all trust importantly, across ideological and geographic boundaries. And amongst our first founding ideas was the idea that Semafor needed to combat Western centricity in news, which is why we chose the word semaphore, which is the same word in 35 different languages, including Swahili and Xhosa, as I understand. That brings me to today's summit, which holds special significance because it addresses one of the most critical issues facing our global community, connecting the unconnected. Today, over 3 billion people remain disconnected from the internet, excluded from basic services like healthcare, education, and financial systems. This is one of the greatest challenges, but also opportunities of our time. This disconnect isn't just a social challenge, it's a vast, untapped place for innovation and growth. There's some positive opportunities here, but realizing that potential requires completely new thinking and unprecedented collaboration across many different sectors: government, technology, finance, health, education, cybersecurity, energy, and more. And that's why we're here today. The next 3 billion is about bringing people together, leaders from all these fields, to engage in real, actionable dialogue. Of course, independent quality journalism, which will be the thread throughout all these conversations, requires the support of great brands and collaborators and partners, which is why Semafor is so grateful to a number of organizations who have supported us today: Verizon, Cisco, Salesforce, the Shell Foundation, the Bill and Melinda Gates Foundation, the Partnership for Digital Access in Africa, and the Africa Finance Corporation. So, sorry I went on too long. I just wanted to share the Semafor story and the Semafor Africa story. Welcome again. And now, allow me to introduce the Deputy Editor of Semafor Africa, Alexis Akwe-Jiram.
Well, hello and welcome. It's wonderful to see a full room here. It's packed. This is great. And I know I speak for the whole Semafor team when I say that we are excited to have a day full of insights. I'm Alexis Akwe-Jiram. I'm the managing editor of Semafor Africa. I co-author and edit the newsletter that hopefully many of you get 3 times a week. And I'm delighted to be joined by Sim Shabalala, who's the CEO of Standard Bank, which is the biggest bank in Africa by assets. You operate in 20 countries across the continent. So, Sim, you have built your track record on digital banking and innovation. I wanted to start off, given that we're here today to talk about connecting people, I wanted to talk about digital transformation. Specifically, what do you see as being the next wave of digital innovations in banking across emerging markets?
Thank you very much indeed, Alexis. It's a real pleasure to be here. And thank you to Semafor for inviting Standard Bank to be present. Standard Bank, as you know, is the largest financial institution on the continent with assets of $170 billion. It is by far the largest. It's been in existence since October 1862 under the same name, although when it was formed, it was called the Standard Bank of British South Africa Limited. We've since dropped the British. It's now the Standard Bank of South Africa. And we've seen innovations throughout. And the big point I want to leave you with is that, banking changes, but banking stays the same. And let me just explain what I mean by that. We know that for over 4,000 years, banking has existed in temples where people on top of a bench would bring their valuables, and they would be taken by the money changer, who would then advance those funds to somebody else who was in deficit. Nothing's changed. It's been the same for 4,000 years. So that's on the retail front. On the corporate front, we know that Aristotle, 4 centuries before Christ, speaks about Thales of Miletus, who designed the first option contract, which was for olive presses. And so accelerate that to September 2024, and where do we see banking? We see banking, particularly on the continent, leapfrogging what has happened in other parts of the world. We see cryptocurrencies in large parts of the African continent, with Nigeria being the lead in terms of both the knowledge and the usage thereof. We're seeing South Africa introducing interesting regulatory processes to register and allow crypto exchanges, to allow cryptocurrency to operate as a financial instrument as long as it's regulated. We're seeing taxation laws being implemented to make sure that people, account for the taxable receipts. But importantly, we're seeing a tightening in other parts of the African continent because of the risks associated with crypto. And we've seen the failure of a number of cryptocurrency firms. The second thing we're seeing is the advent of hyperscalers working closely with the incumbents. Salesforce, I think, was mentioned as one of the sponsors, working with the incumbents, such as ourselves, to improve the customer interface, because most people want to have the same experience in banking as they have in all their lives, to use the phone. We have a mobile app in our bank where you can do all your banking on the app, whether it be risk management, buying insurance, making payments, and you can open your loan or your payment in a number of seconds. The third development we're seeing is central bank digital currencies, which have been ubiquitous using blockchain, but we also know that a number of countries have had challenges in implementing them, with some interesting lessons, but we'll be seeing those CBDCs in the wholesale space because of the use of blockchain. I could go on for longer, but let me stop there. But those are a couple of the examples. A lot of challenges, regulatory challenges, but we're seeing, the main point I wanted to make is the incumbents, such as ourselves and our competitors, competing with the hyperscalers, competing with the telcos, and competing with the fintechs.
And I really want to dig a little deeper on some of these points you made about crypto, blockchain.
Yeah.
I think so much that we're going to see in terms of digital transformation is energy intensive, and you need the infrastructure as well. You need the fiber cables and so on and so forth. Now, in terms of developing that infrastructure across emerging markets, and specifically in Africa, we see there's a risk premium when it comes to credit agencies and just getting the credit needed for these projects. So the African Union plans to launch a credit agency. I wanted to put to you, how effective do you think that would be in de-risking projects? I mean, specifically digital infrastructure projects, but just projects in general.
Again, Alexis, like a classic member of the Fourth Estate, you've managed to pack a lot into one question. So allow me to address the point. So the first one is, there is no question but that the African continent requires vast amounts of infrastructure, and therefore it's going to cost us a lot. Our corporate and investment bankers calculate that we will need roughly $3.4 trillion in the next while to put in place the energy, the logistics, the roads, the bridges, the fiber, the towers, and so forth. So vast amounts of infrastructure, lots of money required. The second, which then comes to the last part of your question, the second proposition is these innovations like crypto use vast amounts of energy. Yeah. The mining thereof is mind-blowing. And yet on the continent, we are gifted with solar and wind, and therefore there's an opportunity, I guess, to use renewables for that mining. So that would be the second point. The third point is that as a banker, I'm agnostic as to what rating agencies there are. I mean, I'm not a politician, I'm just a humble banker. And what we are interested in is the efficacy of what rating agencies do. Now, there is no question also but that there is indeed an Africa perception risk premium. The IMF economists wrote a great paper late last year on exactly this topic, the Africa perception risk premium. And there's lots of data to point to its existence, and one of which, for example, is we know that Cote d'Ivoire issued a bond earlier this year at a yield of roughly 6.6%. A country in the developing world, not in Africa, with a similar rating, issued its bond at 6%. And in what world is that country better run with more fiscal rectitude, more monetary policy, better industrial policy, etc., than Cote d'Ivoire? And it's really hard to explain that premium. There's lots of statistical work that people have done to suggest that the premium may not exist, and that to address it, countries need to focus again on fiscal rectitude, transparency of budget planning, reducing the size of the informal economy, liberalizing their currencies, and so forth. So there is that proposition. The argument by the AU that we need a rating agency, again, there is evidence to suggest that some agencies make decisions based on idiosyncratic factors that have got nothing to do with the data supporting those outcomes. There are many examples people use, one of which is the Nigerian example, where one of the rating agencies downgraded them, and the reasons given were about the ability of the country to execute its fiscal policies. And having engaged with the country, they still downgraded them to the fury of the Nigerian authorities. And so it is argued that such an agency by Africans would address the problem. I would only say that what matters actually is the transparency, the sophistication of the models, the professional discipline, is what would matter to users of those ratings by such an agency. So, for example, if all that agency did was to replicate what current rating agencies do, it's hard to see what its competitive advantage would be.
So, essentially, they'll need to do something different
Yeah.
if they're going to be effective. There's one other thing I really wanted to touch on with you, which is the situation in South Africa. I was out in Johannesburg earlier this year. I covered the election.
Did you purchase a home?
No, maybe next time.
Well,
maybe
then
next
the
time.
conversation's done.
I was distracted by the election and the reporting of that. But I've been struck by the fact that really there's an opportunity for South Africa to have a reset in terms of so many things, in terms of government policy and its agenda with this coalition government. So what I wanted to ask you is, what can the new government do in terms of reforms to attract more capital and become an investment hub?
Firstly, South Africa has got, with all humility, one of the best constitutions in the world. It is well crafted and contains a Bill of Rights which compares with the best in the world. Secondly, it's got a judiciary which is very good. It's got a business sector which is strong. It's got a labor movement which is very, very strong. It's got a business sector which is strong. It's got banks which have implemented, for example, the Basel rules on banking supervision, on capital and liquidity. It's complied with the rules that relate to recovery and resolution, well ahead with what the rest of the world has done. It's got mining houses that have got vast experience. It's got universities which are very strong. The point I'm making is it's got incredibly strong institutions.
It does, although it's had a very tough time before the coalition government. We saw what happened with Eskom,
Yes.
load shedding for years,
Yes.
Transnet. I mean, and the difficulties, the logistics.
Yes.
So that's what I'm asking. This is a real opportunity.
So I would submit to you that the factors that you're referring to are consistent entirely with what happens in a country that was run by a former liberation movement, and that we were being tested, like all other countries that have been run by liberation movement, and I would submit to you that we've come through that test with flying colors. We are an A student. What is the data to support that? Firstly, the electorate pronounced, and the moment the elections results came out, the government accepted them. The ruling party accepted them, and they agreed to a coalition government. They completed the negotiation of a coalition government in 2 weeks. Another country in the Northern Hemisphere, in Europe, took 589 days to do the same. The country is Belgium. And South Africa took 2 weeks.
Yeah.
It formed a government of national unity, which is constituted by, yes, the former liberation movement, which got 40% of the vote, and is in partnership with the Democratic Alliance and a number of other smaller parties. They have got a contract in terms of which they will be executing against these policies that you're referring to. Mm-hmm. And indeed, I had the privilege of spending the whole day with the president, with his coalition members, all singing from the same hymn sheet. The need for South Africa to participate in the Africa Continental Free Trade Area and do the right thing by the AfCFTA. The need for South Africa to contribute to the human rights and ESG principles associated with the extraction of critical minerals, making sure that we reduce and make it easier for people, goods, ideas, and capital to move throughout the continent. And then importantly, to fix the infrastructure, the electricity, the roads, the ports, necessary for the move of those infrastructure, of those rare minerals, and then have light and heavy manufacturing in the country and in other parts, of course, of the continent, rather than simply shipping out those critical minerals unbeneficiated.
And do you believe those are the reforms that are needed to attract more investment?
Indeed. So those are the reforms that are currently happening. They are being accelerated by the 7th administration. South Africa is playing increasingly an important role with its partners in the AU and the African continent to make sure, Alexis, that this is indeed the African century.
So Sim, just to summarize, it's been wonderful talking to you. You've taken us from Aristotle and the history of banking through to explaining that $3.4 trillion would be needed to really provide the digital infrastructure needed for the transformation that we're going to be talking about throughout the day. And then as well as that, you've explained just the types of reforms that this new coalition government in South Africa is going to be rolling out in terms of engaging more with the rest of the continent, through the African Continental Free Trade Area, but then also in terms of work on logistics and ports. Sim, it's been a delight speaking to you, and thank you very much for your time. And please, if you can just give Sim a warm hand of applause. Thank you. Thank you so much.
Please welcome Mark Suzman, CEO of the Bill and Melinda Gates Foundation and Semafor contributor and co-host of the Mixed Signals podcast, Naima Raza.
Hi, good morning, everyone. So, Mark, you and I have traded spaces because you started your career in journalism and now work in development. I started my career in development and now work in journalism. Which of us has done it right, you think?
We've both done it right because you need both. You need to be able to shine a sharp spotlight in journalism on how critical development is. And I think I took my journalism training to help focus on how do you actually make sure development is focused on real, measurable, tangible outcomes and not just a lot of what we have too much of at the UN this week, words.
Words, okay, great. So we'll use few words and get to a lot of outcomes in this conversation. But today's theme, connectivity, there's a way to look at it and say, okay, this is really about Sustainable Development Goal number 9. It's about industry, infrastructure, and innovation. But that's not how you see it at the Gates Foundation. You see connectivity, I think, more as an enabler, right? Could you speak about that?
Yeah, it's both and. So at the foundation, we are constantly looking at where innovation can really have a transformative impact on scaling up interventions that are going to help the poorest and most vulnerable on the planet. And that's a particular need right now, as we've heard, where the world is struggling to meet the Sustainable Development Goals. Mm-hmm. And digital connectivity in particular we believe has the potential to be a transformative platform that really bends that curve in a fundamental way, because it is the critical building block that we're going to be able to do through AI and other tools, layer on services, financial services, as you just heard about, but also a range of other interventions from education to healthcare. So I think there's a lot of hype. In this case, the hype is deserved, provided we focus on the right investments.
So let's speak about the hype, because I remember, 10 years ago when I was working in sub-Saharan Africa on development, there was a lot of talk about the continent leapfrogging in terms of technology, and being able to get this population rapidly online. A dozen years on, 3 billion people still offline worldwide. I find myself curious, is there always going to be some residual percentage of the population that is offline? Or is it possible to imagine a future, particularly with AI, where you really have everyone connected?
Oh, we absolutely believe there is a future where you can get everyone connected. The point with any technology, and digital connectivity first, and remember, digital is not AI. Digital is a platform on which you can then layer on other services, including what we hope is the vast potential of AI. The point is, with any new technology, and we're definitely seeing it with AI, the benefits of it will go disproportionately to the wealthiest. First, the wealthiest countries, then the wealthiest people within low and middle income countries, unless there is a degree of intentionality by governments, by multilaterals, by philanthropies like ourselves, where we can use our resources to actually incentivize and require. You need to have applications. You need to have requirements that mandate low-cost access towards online, whether it's in a schoolroom, whether it's in a primary healthcare facility, whether it's a banking system or structure. And then you can drive down the cost of that connectivity to really very low levels that then can become that platform. But it requires intentionality. It's not going to happen on its own. If you just leave the markets to do it, and my boss, Bill Gates, is a big believer in free markets, but will acknowledge the markets alone will not make sure those benefits come down to the full critical mass that we need.
Which governments have you seen have that intentionality as you're out working?
Well, globally, one of the real leaders, and we've worked with them for really over the last 15 years plus, has been India. And India really did do a pioneering digital identity platform on which they've layered up a set of financial and other services, and now education and healthcare, and we can continue to work with that, and that's required a strong regulatory framework, a strong digital identity platform, and then an array of services and incentives and structures to make sure those services are available for the poorest. And we've actually seen that now rolling out across a number of African countries. I was recently in Ethiopia just a couple of months ago. They're rolling out a big, ambitious new digital identity scheme, which is actually built off an open source platform called MOSIP, which we, the foundation, and other partners have helped. There are over 25 countries, a majority of them African, but also ranging from Morocco and the Philippines, who are using those platforms. And then once you create that infrastructure, you've kind of got to look through what are things, how can you use digital government payments to try and actually put people, particularly women, online and connected. And once that connectivity exists, you can start to layer on the other services.
So when you think about that, I wonder 20 years from now how we're going to look back at the pandemic, which has been kind of a great wake-up call for these digital public infrastructure programs in countries that had identity, ability to track identities, bank accounts, et cetera. You were able to disseminate support. You were able to do tracking for healthcare. You were able to provide virtual education to students. How much has that really accelerated or lit a fire under the governments, particularly that you're working with, and the innovators that you hope to make grants to?
Well, first on the pandemic, it's important to acknowledge the pandemic has had a massive adversarial impact on global health and development. That when we look back at the Gates Foundation and we put out an annual Goalkeepers report, we had an event last night. I encourage all of you to go and have a look at it. Just look up Goalkeepers and you'll see the report. In this case, it highlights nutrition. But we originally developed that report after the launch of the Sustainable Development Goals because the world didn't understand how much progress was happening. And we wanted to identify those stories of progress and show this is a world, we live in a world where preventable child mortality more than halved between 2000 and 2020, from over 10 million deaths a year to under 5 million deaths a year. We saw massive improvements in extreme poverty reduction, and these were global improvements. These were across the continents of Africa, Latin America, and Asia. We now look back, COVID was a moment where that progress stalled and has not recovered.
Still to this day.
Still to this day. The world has not reached the vaccination rates it had in 2019 in 2023. Over 60 countries, many of them in Africa, still have per capita incomes below 2019 levels. At a time, no high-income countries has that. And that's partly because the knock-on effect of that, with resources, the lack of resources, that rich countries were able to borrow heavily of very rich capital markets, which lower-income countries weren't able to do, and exhausted their resources, and you see the fiscal challenges. Right. So that's the bad news. The silver lining, just to be clear, has been that it did precipitate a big focus on enhancing digital connectivity, trying to get basic payments to low-income countries. We had, dozens of countries actually rapidly accelerated, and hundreds of millions of people came online for the first time. That connection now exists. The opportunity we have now is take that. The baseline shouldn't just be for government payments. It should be to build this array of much broader health and development and financial services going forward.
And where do you think, it totally makes sense, and very much understand kind of the way in which the pandemic is an overall setback and a potential accelerant in this vertical. Where does the solve come from? Does it come from the likes of the Gates Foundation? Does it come from governments? Or does it come, from tech Zions, Zuckerbergs, the Strives, the Mo Ibrahims, and their philanthropy? And of course, you're going to tell me it's all of them, but stack rank them in the next 5 to 10 years.
So it is all of them. So in terms of the stack rank, the one thing the private sector is doing, and the big private sector companies, is that's where the technology accelerants are happening. So the models of AI, the scale, the expense of it really requires deep-pocketed private sector actors to be. But they are maximizing and looking to maximize profits. They're marketing it to businesses. They're marketing it to high-income countries. Where you need philanthropies like ours, and obviously we're one that's very focused on technology, and where you need governments, is to come in and then layer on top of that. Governments can put in place regulatory incentives that are to seek to make sure that those AI benefits and tools, when they come, are going to be made available to tourists. That's exactly what happened in the financial inclusion space.
Right.
Many banks would not naturally go and look to try and develop those bank accounts or other tools and payments for the very poorest, had it not been a requirement for many governments. Once they're in place, you actually show, and there is a profitability, there are real markets available, these become self-sustaining. Philanthropies like ours, and we're doing some extensive investments now across whether it's agricultural tools that are providing better weather forecasting and credit tools for smallholder farmers, whether it is education tools where you can provide much more customized numeracy and literacy programs for children, whether it's primary healthcare tools. We can take the risk, because it's difficult for governments with scarce resources to take risks, to prove models, because not all models work. Which ones work? Once we do that, then we have to go back to the government, some of the multilateral stakeholders, and say, it's your job to scale this up, because this is going to be very high impact. So you can link the three together, but we need to do it simultaneously. Historically, there's always been a big lag. Those benefits have taken 20, 30 years to reach low and middle income countries. We need to make sure that lag is in months, not decades.
What country has done a really good job in AI so far, you think, in terms of clarifying the playing field?
Well, to be honest, the field of AI is so nascent and fast-moving, there aren't really the great models. Nobody has an AI model of we've scaled up basic education in a way that we know is transformative. But literally just last week, I was learning from our team some trials we've done at significant scale. We're talking millions of students. These have taken place in a couple of Indian states with a partnership we have with the Central Square Foundation there, which has actually shown learning effect sizes on numeracy and literacy in very low resource settings of an increase of up to a year, sometimes 2 years of learning outcomes. Those tools are now ready. Now we have those to start being scaled up, and we're working with partners in Africa and elsewhere. We're working with partners like the World Bank to take that up. So the moment is now. It's actually not, they're not great models of the last 2 or 3 years. We are at that very pivotal moment. People always say, this is a truly catalytic moment. This is a truly catalytic moment. We are at that cusp moment where we're just shifting from having the talent, being able to use the languages, being able to have primary healthcare centers speak in local languages to local patients.
So India again, and he's not being flattering, I'm from Pakistan, just in case anyone is nervous about that. Last year in your annual letter, you called on the wealthy to give more money faster. Have they, yes or no?
Collectively, the wealthy, what I point out in my annual letter is even if the world overall got poorer during the pandemic, we had massive economic setbacks, there was one particular cohort on the planet who got much wealthier in the period 2019 to 2024, and that is the world's very wealthiest people, particularly billionaires. The number of billionaires grew across every continent and every country, and the wealth of existing billionaires grew. And so, obviously, working for Bill and Melinda French Gates and Warren Buffett, who have been extraordinarily generous, and with a range of other partners, we feel one of our roles to say is that wealth could and should be used to provide opportunities to others. One of our core messages is where you're born shouldn't matter and shouldn't define whether you live or die or what opportunities you have. And so we've had some very encouraging examples. We hope to have more, but I don't think it's at the scale and range that is either possible or necessary yet.
More money from rich people is needed. Speaking of that, you mentioned Warren Buffett. Melinda Gates obviously recently stepped down as co-chair of the foundation. Shortly thereafter, Mr. Buffett, who had, I think, resigned as a Gates trustee a while back, made a $4 billion donation to the foundation and then told the Wall Street Journal that the Gates Foundation has no money coming from me after my death. What impact does that have on the foundation? He's obviously been a huge...
So for both Melinda and Warren, so both on Warren, what Warren has been incredibly generous from his original gift in 2007 is he made a commitment that during his lifetime, and he is now 94 and in amazing health, that he would be giving us annual payments of a portion of Berkshire Hathaway stock, and because he thought that the work we're doing is very powerful and impactful. And to date, he has given us the extraordinary total of $43 billion. It is the most generous contribution of one philanthropist to another in human history. And so we are incredibly grateful for that gift. We fully understand, and it's always been clear that his commitment was after his death, then his children are going to think through how the distribution of his estate, but he's still making sure that that is going to be earmarked for philanthropic pursuits.
Right.
And so it hasn't really changed our model, but we wouldn't have been able to do what we've done without that incredible generosity from Warren.
Last question. Who is going to be the next Warren Buffett for you? Who do you have your eyes on as that perspective? Next $43 billion.
Well, I don't think for us. I would be lying if I said I think any other person is going to be giving us over $40 billion to spend directly. I think what we're much more interested in is seeing, can we deliver partnerships? Can we show the power of philanthropic partnerships where you can crowd in a range of leaders, and actually we have some incredible leaders and partners from all over the world. We work with Aliko Dangote in Africa and a range of health interventions, especially in northern Nigeria and West Africa. We work with philanthropists in India. We work with philanthropists in Pakistan, across the world, and we say what there are incredible partnerships. We actually highlighted one last night as part of the thing which we've launched. I'll do it as an encouragement to anyone in the room who would like to. There is an amazing new fund hosted by UNICEF called the Child Nutrition Fund, which we're partnering in, other philanthropists are partnering in, governments that can scale up interventions now that will save literally millions of lives. So it's about crowding in a healthy set of partnerships rather than giving more money to the Gates Foundation. We have a lot.
You have a lot. And so it's not going to be Elon Musk, just to clear that up.
Well, we're open. We really don't mind if whoever comes in with philanthropy. We just believe that the primary and most important role of philanthropy is trying to help generate human opportunity.
Right.
And giving back and providing that platform for people who otherwise wouldn't have it.
Be a catalyst. Thank you so much, Mark.
Great.
Really appreciate it.
Thank you.
Joining Naima now is Michael Schlein, CEO of Axion Group, and Claudia Belli, Head of Inclusive Finance and Relations with Civil Society for BNP Paribas.
Thank you guys. Sorry, I am going to leave this stage at some point, but not quite yet. It's so lovely to be with you today, Claudia and Michael, and my paper clips. Sorry about that. So thank you for being here today. You know, we wanted to have this financial inclusion discussion, which is billed as, I think, the financial inclusion revolution. So first question, is it a revolution right now?
It's going to be, and has been.
It has been, okay.
And is going to be.
Oh, I think by far it is a revolution. But if you don't mind, I wouldn't mind taking one step back and saying, why should anyone even care about financial inclusion?
Right.
You know, we're here in New York where you can take for granted that there are banks on every corner and ATMs and credit cards, and you can get insurance for your family and your home. And but for 2 billion people, they have none of that.
Right.
And their lives are so much harder than they have to be. And we now have the technology and the innovation and the revolution that can really change that. And so there's this, we've seen, and Mark Sussman was just talking about it, there's an incredible moment in human history where we have seen, over the last several decades, hundreds of millions of people move out of poverty.
Right.
But now that's all stalled.
Right.
And being reversed. But we've also seen a revolution in digital technology that is affecting all of our lives, but has enormous consequence for how we can reach people who have been left out. So it's a very exciting moment in our field.
Very exciting moment. Sorry, just a moment. I'm going to ask if we can close the door in the back, please, just because we're getting a lot of noise in, and I think if anyone near it could close it, that would be amazing. So obviously, Axion, global nonprofit. You have BNP Paribas, a private financial institution. Do you two see yourselves as competitors? Do you see yourselves as partners? How do you think, and have you worked together actually? What's the relationship?
So not yet with Axion, but we see each other all the time, and we are completely collaborating, so not at all competitive. I would say in this sector there is no competition. I mean, and until the moment there is one single person who is out of the banking system or who is trapped by poverty, there is no competition, we're just collaborating. So this is the first point. And then, of course, you are doing an incredible job through the microfinance institutions that you have been creating across the world. And those institutions, in the end, are small banks, but they are not having the status of a bank, so they need financing.
Right.
And so the role of other companies like we are, so the financial institution, is also about financing those small financial institutions. And so it's really a complete collaboration, and which starts with philanthropy. We have been hearing about this. And after the philanthropy, there is the need of funding.
Right.
And with the funding, then there goes also the spectrum of the support to be given to the micro borrowers, to the non-bankable who are benefiting by this help.
Yeah, so talk about this idea. So you see private financial sector as being a kind of catalyst, a opportunity for scale, it sounds like, and a market maker. But you talk about, this idea of people who are, quote, too expensive to serve. Mark, I know you've thought a lot about that, and you think it's a myth or a misnomer. Is that correct?
So it used to be, in the world of financial inclusion, trying to reach people living in poverty, it used to be that people thought the distances were insurmountable.
Right.
Today, there's no such thing. It used to be that the transaction sizes were too small to be commercially viable. Today, there's no such thing. It used to be really hard to know your clients remotely, but today with data and data analytics, we can know and understand our clients' needs remotely. And so all of that is changing. So the assumptions that used to be there are no longer the case. And just coming back to your previous question, we don't see any competition. In fact, this is a movement. We need everybody. We're trying to reach 2 billion people for whom the banking system just fails. We need all the help we can get. There's a movement.
The market is bigger than the number of people competing for that market currently, it seems.
And this market is also here. So it's in all the emerging countries, but it's also here in the States. It's also here in New York. For instance,
Yeah.
there's Grameen America. It's here in New York, and they're doing a great job by banking women who are out of
Right.
the banking system. So, and it's also Europe. So it's not only these 2 billions are mostly in the emerging markets, but it's also people that you see every day,
Right.
and that is lacking the access to a good financial system.
Makes sense. And I'm curious, you know, I know, Michael, you're particularly excited about new technologies. Both of you have a kind of a front door view. I'm sure you're constantly having technologists come in and show you their new products, and you're thinking a lot about AI maybe, and how that helps you with either due diligence or rural access. Tell me what technologies you've seen, each of you, that are going to help overcome this kind of too expensive to serve. And the more specific you can be, I think the more helpful for people in the room.
So I'm quick to point out, everyone's talking about AI, but the rage is generative AI is the new, but
Yes.
AI has been around for more than a decade.
Right.
Truly original, you know, old-fashioned AI.
Just
I
like
can't
the
believe I'm even
algorithm.
saying that, but like data and data analytics at scale is allowing us to see people who have been invisible until now. And there's been the real explosion, the real revolution is all sorts of new sources of data that allows us to really understand the needs of our clients. It used to be the only way you could get credit from a bank is if you had already gotten credit from a bank and
Right.
give a FICO score. And then the revolution in microfinance was circles of women vouching for each other. But now we have phones, and we have global satellite data, and we have all sorts of new sources of data that is allowing to and it's artificial intelligence, it's AI, it's algorithms, and decision analytics that's allowing us to really see people we've never been able to reach before.
Right. And yourself, Claudia?
Well, I think the largest revolution for the sector of the financial inclusion was the mobile banking, because thanks to the mobile banking, everybody could access to the mobile services, and then it's not communication, it's also the banking, the possibilities to get a loan, to reimburse the loan, to get a payment, to pay, to have a credit score in the end.
Right.
And this goes back to the AI.
Yes.
So this is
Mobile
really-
banking, digital
yes.
public infrastructure was the big catalyst.
And then the second point, which is very digital, is the training. Because thanks to the digitalization, everybody can learn, everybody can access to the education, to the financial education, or to any kind of educational tools that can exist. And this creates an empowerment.
You were asking for a specific technology.
Yeah.
So in the last few years, global satellite imagery has gotten super high quality and extraordinarily cheap. And we're seeing companies that are using that technology to see and understand the needs of smallholder farmers in remote locations. So all of a sudden with satellite data, you can see when there's a drought, you can see when there's a flood, you can actually monitor soil condition and cloud coverage, you can provide agronomic advice, and all of a sudden a remote smallholder farmer is insurable. And this is a person who, you know, in an area where she may be subject to droughts and floods, and until now we've never been able to insure her. And this is a big, this is really, really
kind
important.
of information that empowers
especially in the
you.
climate crisis. Exactly.
But there's also the downside of this technology, right?
Yes.
And the financial sector has seen this. There's been huge numbers of hacks. I mean, one of the challenges of generative AI, as kind of warned by the FTC and other Cassandras here, I would say, is around safety of that information, right? The hackability, the vulnerability of people to scams, the ability of generative AI to kind of mimic at scale different accounts or humans. What advice do you have to governments, to technologists, to people, as we think about bringing a whole number of people online who haven't been doing mobile banking? What safeguards should be in place from a safety perspective?
A few different issues there.
Yeah.
One, you're absolutely right. Generative AI and the large language models can only be trained on the data they have, and that in and of itself can be exclusive, right? Excluding.
Yes.
But go back to AI over the last decade. Algorithmic lending has transformed, again, how we can reach people we've never been able to reach before. And I'll give you an example. We're a very active investor in early stage fintech companies that are using new technologies to reach the poor. Many of them use how you use your phone as a proxy for, are you likely to repay a loan?
Right.
And if you think about it, you know, it makes a lot of sense. If you top up your phone and recharge your phone regularly, you're more likely to repay your loan than someone who fails, you know, who runs out of money or runs out of power. All that makes intuitive sense and is built into algorithms, except for one thing. Women have the family phone. Men have their own phone. Women's phones systematically run out of power and money, and so we are designing algorithms that systematically discriminate against women. We have to get much more sophisticated about this.
Has the system not gotten more sophisticated around women?
Yes, but it's still early days.
So what is the actual,
And they're black boxes.
what is the gender inequality in terms of banking right now? Maybe share some data with the audience. Do you have?
It's still 5 basis points of difference. So
5 basis
the
points.
excess of the digitalization and the excess of banking services, women still lag behind. And although this was 9 basis points like 10 years ago, now it's decreasing, but it's still there.
So, okay, it's gone from 9 to 5. And you mentioned before that the market for these products is not just in Asia and Africa and Latin America, it's also here. Is that gender inequity visible in kind of Western markets as well?
Yeah, the gender inequity is hidden many times. You really don't see it and you do perceive it. If you just go to an example, when you think about economic abuse, domestic economic abuse, this is all over. It can go from a village in Africa where the woman doesn't have an access to banking payments, to any access, but it can be here. It can be here by a partner saying, you don't have to work, I'll consider everything. And then several years after, why did you spend so much? Why did you buy this thing? I didn't give the permission. Why are you doing so-and-so? And then after a while, this partner could also say, my wife has lost his credit card, while it's not true.
Right.
And then you're trapped.
So that domestic economic abuse.
Domestic economic abuse. So this happens all over.
Yeah.
And it's about also the empowerment of the women.
Right.
So this is so important, empowering all the women to understand what the financial services are, why the independence, the economic independence is so important, and how to use this economic independence for the best, for the good of everybody.
Yeah. Marcus, you want to get in?
Big picture, the gender gap over the last decade, we've gone from 3 billion people being financially excluded to 2 billion. We've made remarkable progress, but it's been a really stubborn gender gap of 9% over that decade. But in the last Global Findex, it was reduced to 6%. So that's a very significant increase. It looks great, except for one thing. It's almost exclusively India.
It's almost exclusively India.
India has made incredible progress.
Is India the new China? I mean, it came up a lot in my conversation with Mark, too. I mean, China, of course, is famed for over decades having lifted so many people out of poverty with their industrial policy. Is that what you're expecting in this current day in India? This kind of...
Well, India and China have basically almost so much of that progress over the last decade are explained by those two countries.
Yeah.
And on the gender gap, you're still seeing, if you go beyond India, if you go beyond China, you're seeing double-digit gender gaps, and you're seeing real discrimination and cultural issues that are really hard to overcome.
So I'm curious, where do you think the solution to kind of banking the next few billion comes from? Does it, you know, it's a similar kind of question. I know it's everywhere. It's the public sector, it's the private sector. But if there were one thing you could wave your wand and say, you know, this is the thing that's standing in the way for, you know, a wide swath, like what would it be?
I would say it's about climate change and empowerment. And so it's putting together the problem of climate change and the empowerment of the persons, of smallholder farmers. So it would come about what is a just transition for smallholder farmers, for instance. So smallholder farmers, for instance, wherever they are, they need loan, they need lending, but they're trapped by this climate change. What you say, by flooding, by drought. So how can we help them to overcome this? So this makes me think about what we just signed last week. We just signed a loan. It's a 5th of our series. It's inclusive sustainability linked financing. So we can announce it here. We signed a loan for Al Amana, which is a Morocco-based microfinance institution that will help these smallholder farmers they serve, so they who have a loan from Alamana, to be trained into a more accessible farming, which is going to increase productivity, but also biodiversity, thanks to all the data that are gathered and that exist, but they wouldn't have access. And how are they going to do that? Through the agents of Alamana, through the banking agents who are going to be trained about all those topics. So we understood that if you touch that chain, which is those who go on the field and who also are in risk, because if their clients lose their production and lose their farming, they lose themselves.
So you just wanted to make some news there about your new partnership, and I'm going to be greedy and ask for more news. Is this a pilot? Are you going to go to more countries with this same program?
It's a fifth that we signed. So it's a pilot in Morocco.
Yes.
And we already signed one in France, one in Italy, one for a farm in France, and one in Brazil.
What's next?
And the next would be India, Indonesia.
Okay, Indonesia.
And maybe also South Africa.
Fantastic.
So, and Netherlands.
Great.
So we really are very proud of this tool because it brings just transition
Yes.
to the most vulnerable.
Fantastic. And Mark, wave, last question, last word to you. Wave your magic wand. What's the one thing in the way of really this being a revolution that takes off?
Digital public infrastructure. We are seeing, first in India, then in Brazil, and now 50 countries around the world are making real significant investments in what are really the rails. And they're building the rails on which we can then build the products and services that'll reach people we've never been able to. It's very, very exciting, but there are also some downsides. We have to make sure that these investments stay innovative. You have to make sure that governments protect privacy, your question earlier. So there's a lot of issues around them, but it is the path forward to how we're going to reach those 2 billion or the 3 billion people we're trying to include.
Great. Thank you so much, both. Appreciate it.
Thank you.
Thank you, everyone.
Please welcome Jonathan Berman, CEO of the Shell Foundation, and Semafor co-founder and CEO Justin B. Smith.
Perfect. Jonathan, so
Justin.
this is honestly was one of the highlights of my day today because Jonathan Berman, let me introduce him, is the CEO of the Shell Foundation. And in my view, I don't think I've ever encountered a nonprofit organization, or let alone any sort of ambitious social organization with as focused and precise and ambitious of a mission. And so I thought maybe the best place to start off would be to ask you, what brings you here to New York City in this crazy week? And tell us about the mission of the Shell Foundation and what you're trying to accomplish.
Yeah, sure. So thank you, Justin, and thank you to Semafor for taking the leap to host the next 3 Billion conference. And as you said, it's not just a conference, it's a platform that we hope will have an ongoing engagement with Longitude throughout the year. It's an important and necessary platform, particularly amidst the good and the great that come here on Climate Week. You know, what brings me here is Mukesh. So I spoke with you a bit last night. While upon arriving here a couple days ago, I happened to have a conversation with one of the pedicab drivers. You've seen these pedicabs around town that have lots of flowers in the back and a nice New York State symbol in front and driving people around. So I wound up meeting one of the drivers, Mukesh, who was doing some tending to his vehicle, and asked him about, you know, just his life, his experiences, where are his pain points, how long does he work, where's he driving in from, all that good stuff. And then I asked him, how do you power the pedicab? Is it your ped? Is it your foot? He says, no. For about a year, I've had it electrified. And he showed me, you know, pulled up the seat and showed me the battery and the engine that's driving the pedicab. He says, but don't tell anybody, because this is illegal in New York City. pedicabs are not allowed to electrify in New York City. And I'm savvy enough with the city to understand sort of the political economy that would inhibit pedicabs from being electrified. But I also, that can't be, that status can't be, that you're inhibiting guys like Mukesh from electrifying their vehicle if we're going to achieve an inclusive green transition, right? You can't, and I know why it works here, that he's inhibited from that, because he's experiencing poverty. It's because he's, I would guess somewhere between 70 and 80% of a net living income on what he's doing on that pedicab. And if we continually exclude that group from the green transition, then the entire green transition will collapse, right? It has to be a transition that is raising incomes while lowering emissions, and it has to be on a commercially sustainable basis.
All right, so let's just stop there. When I referred to the tight, precise mission, you just said it, raising incomes and lowering emissions.
On a commercial basis.
On a commercially sustainable basis.
Yeah, and the commercially sustainable basis is important to us, even though we are a philanthropy, because the transition to enable the next 3 billion to earn a living income while decreasing emissions, that costs about $350 billion. We costed that out. You'll never get that amount of capital from the public sector. But there's $7 trillion of institutional capital that is already committed to emerging markets or allocated to emerging markets and already committed to net zero under the GFANZ alliance. So within the context of $7 trillion of putative capital dedicated to this effort, 350 billion suddenly seems a little more feasible. But you have to make it commercial to access that money.
All right, so raising incomes, lowering emissions on a commercially sustainable basis is your 24/7 mission. Can you just give us a glimpse into a kind of a case study or an example where you've done this at scale, which can inspire both the financial players but also the entrepreneurs on the ground across the world?
Yeah, so let me give one macro example because to show how it works at scale, and I can give a micro, if there's time, I'll give a micro example to show how it works at the firm level. So at the macro level, you can look at electronic vehicles in India, 2- and 3-wheel electronic vehicles in India. These vehicles cut emissions, as you might expect, by 70 to 90%, especially in a coal-fired economy like India. They cut emissions by 70 to 90%. They raise the net income of the driver by 30%. I've been with those drivers in India and asked them in rupees, what's the difference between the electric bike and the diesel-powered bike?
How many of these individuals has your initiative touched?
Right, there are, so we've been working in this space for just about a year, and that number is in the tens of thousands. But the number of people on a bike who have already made the journey, right, before we even got there, went from 1% of the total to 13%. And the total is about 256 million bikes registered on the road in India. So you're talking about tens of millions of people who have made that transition, right? Our role is to enable that transition to go down to lower income people. So we work with the Small Industries Development Bank of India, one of the largest banks in India, to to de-risk lending to a low-income person, to a person experiencing poverty, to acquire that bike. Otherwise, even though the total cost of ownership is lower, the upfront purchase price is too much. I'm sure many of you in the room have encountered that situation. So we enable essentially asset financing that is affordable within what that bike will generate, within the revenue that bike will generate. We enable that by providing a second loss guarantee to the commercial banks in India. And 5 commercial banks have taken up that second loss facility in about the 6 months that it's been operating.
So this proof point that you described, which is so inspiring, 30% increase in incomes, 80% decrease in emissions. I mean, do you see a kind of a light at the end of the tunnel where once you get to the end of the tunnel, there actually is $350 billion or $500 billion that actually can be deployed and matched to projects like these? And is it the Shell Foundation that's going to do that, or that's probably too large of a task for one organization?
Yeah, would that we could, right? Yes, I do see the tunnel. So then the question is, how long are we providing that support? Is it a permanent subsidy? So we're very committed that it not be a permanent subsidy. When we engage with the commercial banks in that case, or with commercial partners around the world, we start with, what does the business case need to be for you to continue this on your own? We will de-risk the uncertainty at the front. We're talking about, many cases, new customers, new technologies, and in the case of global companies that are working with, sometimes new markets, right? That's a trifecta of uncertainty. And if there's one thing business and money doesn't do well with, it's uncertainty. They can manage risk, but complete unknowns, that's much tougher. We try to de-risk the initial unknown. So you don't know, for example, what the resale value of those bikes are if you have to take them back. You don't know what the non-performing loan rate is going to be on those loans until you start doing it. So we take that risk out, but we expect to see dwindling use of our guarantee over the lifetime of that project. That's a 6-year project.
So, I mean, let's just to radically simplify this. If on the one hand you have the capital, on the other hand you have all these projects to be funded, but you need to find the entrepreneurs, you need to find the opportunities. It's not just in e-mobility or mobility, it's probably in all sorts of areas. Are the obstacles to success, to the light at the end of the tunnel, more on the capital side, or are they more on the finding the opportunities and executing those opportunities at a standard which results in the outcomes you're looking for?
So here you see the benefit of working with Semafor. They know how to distill, and tell a story. So for me, the answer has to begin. So the capital is important. I would not say the capital is the tougher problem. The tougher problem is creating something that is meaningfully absorbed by the driver in this case, right? And so, because you can see across the emerging markets, I bet everyone in this room has had this experience, some sort of technology that came from outside of the market or was not sufficiently engaged with the problems of the driver or the farmer or the micro-entrepreneur, and they just failed, right? Adoption never occurred for reasons that were hard to see because you didn't spend enough time with that person. So you have to begin with engagement with that individual. And even as a foundation, we work with partners, NGO and corporate partners on the ground. Even as a foundation, we are as customer-centric as we can be. And by customer, I mean who we serve. And we try to spend as much time with them as we can. We are in market where they are. So you start with the problem statement with them, work with who can provide the solution. Sometimes that comes from abroad. We talked about an example last night that I can come back to. But wherever that technology solution comes from, the problem statement has to begin with the user, I'll put it that way, we call them customers, and end with them, right?
So sadly, we're running out of time, but we have one question which is related to your answer, which is if more of the challenge is in finding the opportunities to deploy this capital, finding the systems, the entrepreneurs, the execution ability, what can you ask from the people of this room today, or what would you like to ask of the people of this room as relates to that or other parts of your mission?
So the people in this room are both a broad set and an expert set. I had an opportunity to read through the list of people who's in this room. It's frankly humbling to be on this stage because there's a lot more expertise collectively in this room than I can muster. What I would ask is whether you are with a global capital provider or an on-the-ground entrepreneur or entities that link the two. We work with both. From BlackRock to Mukesh, frankly. And what I would ask is, as you're going through this week, this UNGA week, in which lots of people are talking about raising incomes and lots of people are talking about lowering emissions, if they're not talking about the other, ask them about the other. Are you doing something to raise emissions while you're achieving poverty alleviation or prosperity? Are you, especially of our environmental colleagues, Are you addressing poverty if you're looking to cut emissions in the global south? Encourage that conversation. That's the first thing I would like. The second thing I would like is connectivity. One reason we wanted to partner with you on this is because we knew you would have people from both of those worlds in the room. Connect with the other people in this room, start a conversation, and connect with us if you think that we might be able to help you on your journey.
Great. Jonathan, as always, thank you so much for your work, but also thank you for your partnership. Great conversation.
Likewise, thank you.
Please welcome Nisha Biswal, Deputy CEO of the Development Finance Corporation, and Sadak Waba, Chairman and Managing Partner of I Squared Capital. Semafor Climate and Energy Editor Tim McDonald joins to moderate this conversation.
Thank you. This is such an amazing turnout. I'm so happy that all of you could join us this morning. I know it's a busy week for everyone, and really happy to have you here with us. And especially thank you to Sadak and Nisha for joining us to have this, I think, what will be a really interesting conversation about. There's clearly such an urgent need that I think everyone in this room is aware of for building out the sustainable infrastructure that the Global South, and frankly the entire world, needs. And then there's this big question of how do we pay for this? And I think the work that DFC and I Square are doing together is a sort of model for a way of doing a public-private partnership to finance sustainable infrastructure in an effective way and try to get more capital going into these kind of important climate-related projects that are so urgently needed. And I wonder, Nisha, to maybe start with you, if you could just say a little bit about sort of where this collaboration or partnership originated, and I don't know if, to some extent, if DFC and I Square together maybe are strange bedfellows in some way, or if maybe this is a natural partnership, or maybe just tell us a little bit about where this came from.
Sure, and such a pleasure to be here with Semafor, that's doing just really phenomenal work in advancing critical issues. But to be here with Sadak, who is also just a real force in how he's looking at climate infrastructure and the Indo-Pacific, and it's been a great collaboration. But I'm going to back up just a minute and talk about the fact that why DFC was created, right? Which is in recognition of the massive gap that exists in financing for the infrastructure, the energy, the development and economic activity that increasingly countries are looking to. We know that public financing, public sources of financing, grant-based assistance, ODA, is simply not sufficient to meet the needs of emerging economies. We know that countries are falling behind on SDGs because they don't have sufficient capital. So when Congress created the Development Finance Corporation, it was to bring to the global market the US offering and bring the tools, bring the capital and the kind of de-risking that is necessary to really mobilize private sector investments to meet big global challenges. And so that brings us, in a sense, to today's topic and also to the collaboration that we have with Sadak and with I Squared Capital. It really was born out of an initial investment that we had back in our OPIC days, looking at the Asia Fund. And as we started becoming more and more focused on kind of the climate aspects of it, the second fund came to being, in which a DFC investment of $300 million is part of an overall nearly $900 million fund that's looking at the specific ways in which we're looking at energy and infrastructure across the Indo-Pacific.
Mm-hmm. Yeah, right. Sadak, can you say a bit about I Square's sort of thesis for sustainable infrastructure in the Global South? And we were talking backstage about some of the sort of obstacles or barriers that you might face in the absence of this kind of partnership. I mean, talk a little bit about how you kind of approach this space and the opportunities you see there.
First of all, thank you very much for having me and for this extraordinary audience here. When you think about investing in infrastructure, in high growth economies, whether it's in Southeast Asia, in Sub-Saharan Africa, or in Latin America, you want to look at the ability today to invest in infrastructure that ultimately not only has an impact in society, but is sustainable in the sense that the type of infrastructure that you make has the ability to be resilient from a climate perspective. We've seen over the last 2 years, for example, in the United States, where bridges have not been able to function because of an increase in temperature. We've seen an erosion of fundamental structures in buildings because of high water levels. All of these are due to fundamental climate change that is impacting all of us. So when we think about investing in infrastructure, we need to take that into account. So that is the basic thesis. The second element is, how do we look at investing in those economies where maybe the regulatory framework is not completely developed, or there is not enough critical mass so that people will have gone through trial and errors in how to go about investing and putting these structures together. Enters the DFC. So the DFC, which is part of the US government, is able to provide what I call important additionality. So that in some cases, the question is, would we invest without the DFC? And the answer is no. In which case, the DFC is able to provide a huge impact, because thanks to their ability to come and partner with us, what would have been maybe $0 or $1 becomes 4 or 5. So you have that huge leverage that comes in. What ultimately is the role of the DFC? The DFC's role from our perspective is to be able to provide that capital, but also everything that comes with it, because the DFC comes in with its own underwriting, its own diligence, from an environmental perspective, from a social perspective, and that gives a lot of comfort to ourselves, to our partners, to our investors. And so what we look to invest in terms of our climate fund across Sub-Saharan Africa, Asia, Latin America, what is $300 million provided by the US government can become and will become $900 million on top of that. So you have over $1 billion that is going to be invested thanks to the role the US government is playing over the coming years.
Yeah, well.
I couldn't have said it better, and I hope somebody's recording this so we can send it to Congress, because as we get reauthorized to make the case for why this is so important for the United States and actually around the world.
Definitely, yeah, they'll be watching. And so can you say a bit more, Nisha, about, just to kind of cut through this jargon a little bit, when you think about sustainable infrastructure, I mean, what does that mean for you, and what are some of the sort of specific priorities? Are we talking about clean energy, or you know, what is it that sort of comes to mind for you? And I would love if there's like, if there's any case studies or, you know, examples of projects that you think are sort of illustrative of how this can work well. Yeah.
So just to kind of build a little bit on what Sadek was saying, you know, as we think about our investments at DFC, you know, we're organized around sectors. So we have energy, infrastructure, health and agriculture, and then support for small businesses and private enterprises. But across all of that, we have two major areas of focus. One is climate, and the other is inclusion, economic empowerment. How are we making sure that these investments are hitting the right communities and are being done in inclusive ways? But on climate, for example, I'm going to use an ICT investment that we have in Africa with the African data centers, right? Obviously, digitization is a huge priority, incorporating the digital infrastructure, and data centers are a key component to that. And yet they are a massive consumer of energy, massive intensive energy consumption, water consumption to operate one of these state-of-the-art data centers. So in working with African data centers, what we have tried to make sure that we're building into that is, one, how are we looking at efficiency so that we're reducing the energy consumption? Two, how are we supporting that with renewable energy? And then three, you know, closed system on water, so that you're capturing the water that you need for the cooling and the running of the operation, so that you're not drawing on these resources away from other needs that the population has. That's a way in which you're ensuring that you're creating a resilient and sustainable infrastructure to support the digital economy needs, but in a way without creating adverse impacts on the climate
For the
side.
climate and emissions, right, exactly.
That's right.
And if I may, look, I'll give you other examples that are ones that we're working together. You're looking at renewable power. In the Philippines, we're looking to install 500 megawatts of solar power. 100 is currently being constructed. In India, there's about 1 gigawatt that is being developed and installed as we speak. Another is smart meters for gas and electricity. You want to have efficiency. You want to be able to have people pay their bills, the right ones, and not having a little bit of idiosyncrasies associated with that. What we've done together is install for over 30 million people in India smart meters and manufacturing those smart meters in India. So we're using local technology, local manpower to be able to build that, and we're looking to build up to 5 million smart meters a year over the coming period. That's huge, and that's done all organically within the Indian economy.
Well, and Sada, can you say too a little bit more about how you view your sort of risk and return calculus for this type of project, and especially when we talk about climate technology or sustainable infrastructure, sometimes these are innovative new technologies. Maybe they haven't been done a lot in other contexts. That could, some infrastructure investors might see that as higher risk than what they are normally comfortable with. How do you sort of approach your risk tolerance and what your expectations for returns for these kinds of projects?
So I think you should look at this as different risk-return profiles. So when you look at technology that can have a direct impact on infra-related type of assets, which itself has an important climate component, it could be energy efficiency, it could be the development of smart meters, it could be cybersecurity protection. So all of these elements are part and parcel of what you do. I think venture capital has invested a lot in all kinds of technologies over the last decade, and we've seen the benefits of that. But there's been less focus on technology that has a direct application to infrastructure. And that is what we're trying to encourage. That kind of risk profile would be very different than developing a renewable platform in India or in sub-Saharan Africa or in Latin America or wherever. On the other hand, once that technology is mature enough, then you can adapt that to the type of project that you're looking at. A simple example, mechanisms that move the panels up and down to optimize. Those mechanisms are being developed everywhere. Some of them are very successful, others less so. But once you have that critical mass, then you're able to quickly adapt and adopt these technologies into that kind of projects. And that's what we're looking to do.
Yeah.
No one is looking to combine both so that you effectively have more risk than you otherwise would have liked to.
And I mean, and from the return side of the equation, I mean, you're expecting sort of normal infrastructure type returns when you do these investments, or how do you think about kind of what your expectations are going into what you want to get out of it?
So the returns on a classical infrastructure project will be the kind of returns you would expect with the cost of capital that you would see for a mature infrastructure project, which of course will be very different than if you look at technology that has that ultimately looks to solve a climate issue that would be adopted to infrastructure. Those, of course, are more venture capital returns, but once they mature and they reach scalability, then you're able to, and commercialization, then you're able to adopt them at a very different profile.
And one of the ways in which DFC partners with funds is, one, it introduces efficiency for DFC in that the funds are able to then invest kind of at an earlier stage and work with these companies. Oftentimes that results in a more scalable opportunity for a direct investment in some of the portfolio companies as they grow, right? So we're able to work together to ensure that capital is flowing at an earlier stage and then also at a growth stage. And
Nisha, can you just say a little bit more about how, for this type of work, where these sort of projects are often originating? I mean, are you getting guidance from partners that you have in the countries where you're working here about what you should be prioritizing or what is needed in these countries? And I wonder if you could say it too a little bit about where you see the goals of a collaboration like this fitting into the bigger picture of U.S. kind of climate targets, and whether there's any, do you have any restrictions around, financing gas or fossil fuel projects at all through a fund like this?
Well, first of all, so we have a pretty broad intake valve in terms of how project ideas, project proposals come to us, both from a kind of policy perspective of what are the policy priorities that the administration is trying to drive towards, and our team will go off. We have a robust climate team that will go out and kind of look at alignment with that. But we also work with a lot of partners around the world to identify what are the priority opportunities, and then we diligence them to make sure that they're sufficient. So relationships will come through the business development that we do, but it will also come through USAID or the Department of Energy or State Department Climate Office. I know John Podesta and Dave Turk, for example, were just in India essentially doing a conversation about clean energy supply chain and how do we drive more investment into diversification of manufacturing for clean energy. I went in 2 weeks later and hosted a roundtable with a lot of the companies that are working in that space to say, okay, now how do we operationalize these priorities? How do we bring our tools to bear, whether that's the debt financing or, and oftentimes one of the most important things that we can do is to help de-risk investments, whether that's through our loan guarantees, our political risk insurance, et cetera, to bring these various investments to life. And we, so let me leave it there.
Right, yeah.
And I think the important thing is that it's mutual, right? In other words, we identify opportunities both through our existing investments. So we have an investment that has been installing rooftop solar. That investment was able to look at opportunities in Kenya because we have a partner that had on their manufacturing plants, we had installed the solar, and they said, come in and help us in our plants in Kenya. So think of it this way, investments beget investments. And so when we look at an opportunity, we go to the DFC and say, does that make sense? Is that something that we can do? And they say, yes, this is very interesting. In fact, let me put you in touch with these partners. So it becomes a virtuous cycle.
SADC has been a great source of new investments for us. And some of that is through, companies that the fund will have invested in, and then they'll come to us and say, hey, we think these guys are ready for kind of a growth stage opportunity. I think we're working together in the Philippines on a couple of ideas. I think Hexa is one of them, which is a renewable energy and energy efficiency platform. And often companies that have worked with us in certain capacity in a certain project will bring us either new ideas and new proposals, or they'll bring us new partners. And so that's another huge way of trying to expand. And then we work with governments, our host partner governments, so that, I was in Sierra Leone just a couple of months ago where we were doing the groundbreaking on a power plant, but working with, for example, MCC that is going in to really scale up investment in the renewable energy, and our investment in the gas sector was to really help bring the grid stability that will then allow the layering on of renewable energy on top of that.
So I think we're out of time, unfortunately. But Sadek, maybe the very last word quickly. Do you have any? What would be sort of your exhortation or ask from your colleagues in the investment community about how to get more capital going into these really important kinds of projects?
Never lose patience, because the fact is, to invest in high growth economies will take longer. But I think it has a huge value add from all perspectives. And so it takes longer, but at the end of the day, it's extremely rewarding, not from just an economic perspective, but from the sustainability perspective, from the social perspective, and we should not lose track of that.
Couldn't find a better way to end than that. So thank you both so much
Thank
for your
you.
time. Yeah, thank you.
Thank you very much.
Thanks, everybody.
Thank you.
Yeah.
Joining us now is Eno Ebong, Director of the U.S. Trade Development Agency, and Semaila Zubairu, CEO of the Africa Finance Corporation. Semafor contributor and PBS NewsHour co-host Amna Nawaz joins to guide the conversation.
Okay. Hi, good morning, everyone. No, it's too early for that. Good morning, everyone.
Good morning.
All right, there we are. Thank you so much for being here. Thank you so much to my two esteemed guests. Just in the way of a brief introduction, Eno Ebong is the director of the U.S. Trade and Development Agency. Semaila Zubairu is the president and CEO of the African Finance Corporation. Please join me in welcoming them. Thank you. So we are here to talk about strategies to bridge the continent's infrastructure gap and to unlock its potential. This is a phrase we hear a lot. I just want to start with how you look at that phrase. I know, kick us off here. What does it mean to you when you talk about unlocking the potential of the continent?
Well, thank you so much. And can I just say, it's fantastic to be here. I love the energy in this room. I love the diversity in this room. I am excited, as you can tell. But just to bring it right back to the question, it's interesting. I think I feel a little bit conflicted about unlock. Clearly, the potential is there. We know it, we see it, we feel it. And for those of us who are working in the continent from there, experience it every day. But it is true. There is a gap, particularly in financing, for the innovative projects, transactions, activities that can close the infrastructure gap. So I think of the need to attract financing, and in particular, I think about it in the focus we must face, really, in building and developing projects that can be financed. So U.S. Trade and Development Agency is an infrastructure-focused agency, and we're focused on supporting that development of infrastructure projects, defining them at the early stages where the risk is high, but where the possibility is, and bringing financiers to it. It needs partnership, which is why I'm really happy to be here with Semaila, and it means being creative about unlocking the financing, maybe not so much the potential, but we can debate that.
We'll go into more detail on that, but Semaila, what about you? How do you look at that phrase?
So thank you for being here, and good morning to you all. So for us, we don't have time to discuss the African potential, so I'm going to try and keep it brief. So the way to look at Africa is that we have the youngest population in the world, so that means a growing market, a growing middle class. We also have significant natural resources. We also have significant energy renewable sources on the continent. And I'll try to use an example of a case of how Africa is really pivotal to net zero and how Africa can work for itself and the rest of the world. So we are currently engaged on a transaction as lead developer for Lobito Rail. And that's a rail line between Zambia to Angola, and then from Angola to the port of Lobito. We're the lead developers on that stretch, and we're also financial advisors on the main Lobito line from DRC to the port of Lobito. Mm-hmm. Now, that is the copper belt. That is also significant forest cover for carbon credits and carbon markets. That is also significant agricultural potential, because Africa has 60% of the world's uncultivated arable land. And we also have over, I would say, 39% of the world's minerals that are required for the energy transition. We also have 10,000 gigawatts of solar potential, 110 gigawatts of wind potential, 350 gigawatts of hydro potential, 15 gigawatts of geothermal potential, and 400 gigawatts of thermal gas potential. So we are currently embarking on decarbonizing a mining operation that is going to produce green copper. And we're doing that because we've expanded, the capacity of a mine from about 900,000 tons to over 1 million tons.
Mm-hmm.
And we've expanded the capacity to process the copper ores to concentrates. And we're building a smelter that will further transform that to copper anode. Why is this important? Because this is an example of how we can all work towards a viable energy transition.
Mm-hmm.
So in this operation, we've reactivated one of the Inga dams. So we're going to use hydropower to process the ores and the smelter. And that will reduce the amount of shipments from Africa to Asia, for processing. So most times when you see a ship of ores, it could be 50 to 70% of it is just waste. When you process in Africa at the source of the resource, you can capture and retain more value, create more jobs for this amazing population that I talked about, and also reduce the emissions that come from the shipping journeys. So when you focus on the African potential,
mm-hmm.
it means looking at how to get the resource that we have work better for Africa and the rest of the world.
The energy potential is a huge part of this, specifically on the infrastructure part, which we're talking about both physical and digital infrastructure here. And let me put this question to you because there was a recent estimate by the African Development Bank that the continent faces an annual infrastructure financing gap of $100 billion a year. Just put that into context for us. Does any other region or continent face that kind of gap? And what does that mean for the scale and the type of projects that aren't being built?
I think it's a really important question. I think it's the largest gap that we see in the world. So the focus does have to be laser. What it means is that there are many projects that do need to be scaled. I think that the point that I started with in terms of project preparation is key to that, but even that has to be scaled. To start a project, it's an extremely expensive and risky proposition. Lots of challenges even before a shovel is put into the ground, where developers are spending millions of dollars. It is hard when you're starting to find that capital. So agencies like ours provide grant funds to be able to kickstart that effort, but it needs to be scaled. It absolutely does, and you need to bring in partners along the way to do that. Not just project partners, that is key. Industry, government, private sector, both on the continent and in the United States. But you also need to bring in strategic partners. And for us, even though we're in at the early stages, this means financiers. So we work very hard to partner with 6 of the continent's major financiers. AFC is amongst them, and I'll just preview that there'll be a hint of another partnership that we're going to celebrate later on this afternoon. If you're not doing anything at 4 p.m. at the lot, please come and join us. But that kind of partnership is critical, because you have to bring the financing, and the way to do that is to accelerate the project pipeline so that your partners are aware of what you're doing, you know what their interests are, and you can develop projects that are well suited both in energy and in digital, which are huge parts of our portfolio as well.
I'll just say you can't drop a hint like that and not expect a journalist to follow up. So what more can you tell us about what this partnership might look like?
Actually, Samaila hinted at it also in describing the work that's being done very, very, I think to the great benefit of all the stakeholders that he mentioned along the Lobito corridor. So absolutely related to that, I can say no more. You have to come and join us.
It's a tease if ever there was one. So Semaila, talk a little bit more about this, the public-private partnership part of this. How crucial is that to making it work? And sometimes the concern is that, well, there's a dissemination of responsibility. No one really takes the lead. In the end, it's the people on the ground who need the benefit of these investments and projects. How do you look at the collaboration between public and private entities?
So, I mean, most infrastructure projects are public-private partnerships, and what is key is the risk allocation between the public and the private. There has to be an understanding that the public is supposed to provide certain goods, and if they cannot, they need to de-risk and enhance for the private sector to come. And what that typically means is you just need to honor the contract. You know, if we've agreed that this is going to be done, it needs to be done. And we need consistency in the framework for how things get done. Our approach has always been, we need to find the reasons to get things done, and we're focused on how they get done. So at AFC from inception, we're focused on project development, which is what she referred to as the key to unlocking the infrastructure opportunities that are on the continent, because the need doesn't really translate into a project. So we have to work together, and we've kind of assembled a team that allows us to develop to the risk opportunities and their examples. So for example, the government of Djibouti wanted to be 100% reliant on renewable energy. So we had a partnership with them. We built the development team. We de-risked the project. We invited FMO, which is the Dutch Development Finance Agency, Climate Investor One as well. And we put in place a construction finance instrument to build the plant. We commissioned the plant last year, and they have over 60 megawatts of electricity, and they are meeting, they have 60% of their energy requirements, and we're expanding that. So what is important is through innovative financing and through early stage de-risking capital, you're able to deliver a project at scale, even through the COVID pandemic. And that's an example.
If I may, what does innovative financing look like?
So it means focusing on outcomes, focusing on the parties that you're going to work with, and adapting the instruments to the requirements of the project. Yeah. So I mean, it will be the same debt or equity, but you will introduce certain conditions to it that makes it more user-friendly. So that is really what we do. And because Africa doesn't have much capital, we need to find ways to first leverage the capital that is on the continent and then attract capital externally. I want to kind of focus on how we get more capital on the continent. So what is important is that we need to understand that Africa needs to own its development and it needs to finance its development. And we have to do that by working with the savings that we have. We have to work with our domestic savings. We need to find ways to capitalize our banks, capitalize our multilateral development banks, and find ways to unlock savings from the pension funds to invest in infrastructure and in industry. We have a project called the Infra Credit in Nigeria, where we've de-risked for pension funds and insurance companies, and we think that can be replicated at scale. So we need to first own the development. We are the ones that will develop our continent. We have to use our own local resources to develop our continent, and we need to find ways to get it done.
Let me bring Eno in on this.
I just wanted to give an example on the other end. It's a scale, but smaller scale, of a Nigerian company called Hotspot. And this will show all of, I think, what Somalia you're talking about, that a USTDA feasibility study helped to power its mobile communication bases with solar power. And this is a completely homegrown project idea. Hotspot's a Nigerian company, and they were able to co-finance with infra credit, which helped along with the blended climate finance facility of UK's FCDO, Foreign Commonwealth Department. And the interesting thing about this is that the project was done with Naira-denominated debt issuance, and that's what's innovative, right? It's a little bit of necessity being the mother of invention. Foreign dollars are not accessible, but the creativity is there, along with partners, to come up with a strategy using local currency and the support of the partners then meant that 9 institutional Nigerian investors then contributed to this project. So already 100,000 people are experiencing increased connectivity using solar power. So I think that it underscores at both ends of the scale, large and small, there is creativity on the continent. What is needed is an ecosystem of partners, and I would venture to say another element that is critical is communicating this and getting the word out and changing the narrative a little bit to the fact that, oh, what's going on, nothing's going on. There is a lot going on, and it's a very healthy ecosystem that we can all participate in.
So Milo, we have 30 seconds left. I'll give you the last word on what you hope people in the room take away from this conversation.
Again, we have to own our development, and we need to finance it. You know, we just need to own our development. We need to take responsibility for the future of Africa, future generations of Africa, and make sure that we're focused on good outcomes for them.
Clearly, we need a lot more time to talk about this. Thank you so much for being with us here today. Please join me in thanking our guests.
Please welcome Dr. Akinwumi Adesina, President of the African Development Bank Group. Semafor Africa editor Yinka Adegoke joins to guide this interview.
Okay. Am I live? Yes, I am. Thank you, everyone, for being here. My name is Yinka Adegoke. I'm the Africa editor for Semafor. I'm incredibly excited for all of you to be here to hear our discussions about the next $3 billion. You know, it's an incredibly important conversation for us to have. We're really trying to make sure that we expand the kinds of conversations that we have about development on the continent. And I really could not have a better qualified person, a more passionate person to have that conversation with. Dr. Adesina is president of the Africa Development Bank, and we're going to have some conversation towards the end about your legacy, but you've been doing very important work, and if you could just give a very quick overview on the topic at hand today, which is just the role of digital infrastructure, digital development in the broader conversation about development on the continent.
Well, thank you very much, Yinka. I think when people think about digital world where we live in today, we need to recognize that Africa actually had been moving very far with regard to that. If you take a look, for example, in terms of mobile money accounts, yes. Globally, you have today 50% of all the global money accounts are actually in Africa. And if you look at what the fintech companies are doing, every single day, they move about $2.3 billion. So Africa is really at the forefront of that compared to what the global average really is. Now, but to your point about the infrastructure, the key is infrastructure is like the backbone in your body. Right. Whether it's energy, whether it's child infrastructure, water, sanitation. If you have a backbone, okay, you sit up straight. If you don't, you can't sit up straight. No economy can grow without investing in infrastructure. And we as African Development Bank, you know, we've invested more than $55 billion in the last 7 years alone on infrastructure, from energy to water to sanitation, for road transport and all of that. But to the issue of the infrastructure for digital technology. And so one of the things that we've done was to first actually develop the connectivity infrastructure itself. So over time, we've invested in the submarine fiber optic cables. The main one, which is in West Africa, we invested in the easy one, which was in the East Africa part.
We should let people know that's easy, EASSY.
Yeah, easy, yeah.
It's an acronym.
It's an acronym.
It wasn't an easy project.
It wasn't an easy project. Absolutely not an easy project. It's a very expensive project, too. But we also have the land terrestrial lines, fiber optics that we also have. which is the trans-Saharan cable that goes all the way to Niger, Chad, and linking all the way to the Mediterranean and all of that. Yeah, landlocked countries. And if you take a look at an area where connectivity is quite low, which is the Central Africa region, we've invested also in the fiber optics to connect that. All of what that is doing is bringing down the cost of internet.
Can we talk a little bit about the innovation you've had to, take on to make sure these investments can happen?
Well, first and foremost is that you just have to realize that it's the backbone. So we started by basically saying, let's build first the backbone. But every infrastructure is as good as the utility that you get from it. And so, for example, if you look at governance more in general, we started off by saying, with this infrastructure, people will be able to know, for example, how governments are run. Government should never be a black box, right? How the utility is functioning, what am I getting? Am I going to get things in terms of identification card? How am I going to get financing, tax payments, and all of that? So there is no substitute to transparent governance. And so this kind of digital infrastructure allows us to be able to do that. We have something, for example, in Lesotho, we have also in Tunisia, which is e-governance systems and things like that are good. But I do want to also say that the issue of digital financial inclusion, which is part of what you guys are really talking about, is so important. You have a lot of millions of people, today that can access basic internet. They can have access even to mobile phones and things like that. And yet you live in a world wherein you have, people, financial institutions want to lend, but there's no way of identifying people. So if you can't identify your customers, how are you going to lend to them? Things like that. So we at the African Development Bank, together with the Gates Foundation and also with the government of Luxembourg, we have something called Digital Financial Inclusion for Africa that's trying to bring 338 million people, right, into that. Yes. But linking that to the infrastructure also requires that in doing that, you have interoperability of systems. So for example, in the West Africa Economic and Monetary Union, we're working with them to make sure that all the systems can talk to each other, speak with each other, which is important. But we got to also go beyond all of these things and look at the future, which is the youth. If you take a look at the issue of skills that you need, it's not just a physical infrastructure, but the young people must have the skills to be able to use and take advantage of artificial intelligence, robotics, big data, all these things that we have to do. So what are we doing to prepare the youth for that digital future, right? It's so important. And so we decided, for example, we are something called Coding for Employment. We're working with Microsoft and making sure that we have about 130 centers of excellence where people, more than almost 250,000 young people are trained, digital literacy and all of that. I'll give you a good example, was in Rwanda, for example, where we have a Rwanda Innovation Fund that is supporting digital entrepreneurs to do stuff. We have something in Nigeria that's called iDice, a $614 million program looking at digital and creative enterprises that we are supporting for them. And so I think this is what we are trying to do for young people to be able to connect into all that. But I am so proud of the fintech industry in Africa today. You look at, maybe about 5 of them now are basically unicorns and so on. So I think that's a lot to celebrate about Africa, but there are many areas that still don't have connectivity.
One of the issues is obviously funding for those private companies and actually just the way African economies in general are sort of measured, if you like, in the sort of global finance system. And we know about the African Union's being ambition to have a homegrown credit rating agency. And I was kind of interested to hear your take on what role that might play, what impact it might have on the future of African finance and the way African economies are measured.
Well, first and foremost, I think African economies, okay, we've been talking about the reforms of the global financial architecture. Yeah, I don't think that global financial architecture is serving Africa's interests, So take the whole issue of access to capital. It costs you 3 to 4 times to access capital in Africa than it is to have access to capital in any part of the world. And this is based on risk, but mainly in terms of perceived risk. Well, I'm sorry. Your perception is not my reality. I'm not going to, you have to properly assess the risk and the returns to investment in Africa. So take, for example, two countries.
But just because of time, I want to make sure, because time is...
Oh, sorry.
I want to make sure that we just touch on that point about what
the credit rating,
what that agency can do or not.
That credit agency is not a political institution. It will actually provide a counterfactual to existing credit agencies so that Africa's risk is properly addressed, whether it's market risk, financial risk, political risk is properly addressed. And us at the African Development Bank, when people don't want to invest in Africa, they say it's because of risk. I'm sorry. You take a look at the whole situation, Moody Analytics. We asked them to look at the returns, losses on infrastructure assets across Africa for 14 years. What did they find? Losses in Africa, 1.7 or 1.9%. In North America, it's 6.6%. Latin America, 12%. Western Asia, 4.5%. Africa is the least risky. At the same time, it's the one where the cost of capital is quite high. So it's not a fair rating system that is being used for Africa. And I think that you have to level that playing field. And that's what this is going to really do.
You think the agency will be able to?
I think so.
Let me ask you about, just take it to the macro. We had the US Federal Reserve cut interest rates last week by 50 basis points. What impact might that have?
Oh, that is going to be big because if you look at what has happened, it's a whole series of problems. You have war in Ukraine, you have COVID, you have depreciation of currencies, you have global inflation and all of that, which has actually made the cost of servicing debt extremely high. Look, in 2010, Africa was paying about $17 billion, Yinka, in servicing its debt. Last year, it's paying $74 billion to service that same debt. And so when you actually have this, the lower interest rate will also make sure that the cost of servicing that debt actually goes down. But even talking about debt in a minute, I don't think that everything should be based on simply taking foreign debt. That's a lot. Last panelists, I was just listening to them as I was coming in, the importance of mobilizing domestic capital markets. Look, nobody can develop for you. You have to mobilize your domestic savings to develop yourself. When people talk about Africa, we've got $3.5 trillion of institutional capital, whether it's for sovereign wealth funds or whether it's pension funds or insurance pool of funds. Well, if it's a pension fund, you're supposed to actually retire, hopefully, and get annuity payments for the rest of your life. But if there's no good hospitals, no roads, no power, that's a miserable retirement. So we've got to make sure then that we are aligning the asset allocation by our institutional investors into dealing with the critical infrastructure needs that Africa has. So I think that this is very, very important, that you got to develop with pride, and the way to do that is to mobilize your own capital.
Fantastic. Your passion is something that you can tell from the audience, and wherever I see you speak, everyone loves it. You're coming to the end of your term next year in May, your second term, and it'll be 10 years in May when you leave the bank. What are you hoping for? How do you hope your legacy will be built on with whoever takes over next? What kind of characteristics and philosophies?
You can drag me to all that. No, I just want to say that I couldn't. When I took on this assignment, I said this is not a job. This is a mission. There's nothing more important than being asked, giving capital, giving the confidence and the responsibility and accountability to go developing the continent of my birth. And that's how I look at it every single day. And I thank God I have great staff. I have extremely supportive shareholders. And since we started in 2015, three things I would say. First is that the capital of the bank, when we started, was $93 billion. Today, the capital of the bank is $318 billion. Secondly, is that 2 years ago, the African Development Bank was ranked as the best multilateral financial institution in the world, right? And we also last year were ranked, and this year as well, as the most transparent financial institution in the world. And so you're looking at changing narratives to doing the right things. This African Development Bank have great staff. We issued the hybrid capital with the first multilateral financial institution in the world to issue hybrid capital as a part of our capital stack that allows us to leverage more than 4 times. We also are the ones working together, myself and Ilan, president of the Inter-American Development Bank, on the SDR, the special drawing rights. We cracked that, And now the IMF board has approved that we can use up to $15 billion of the SDRs as hybrid capital. What that means is that becomes $60 billion, just like that. So that's what the power of innovation is. So, I'm proud of the government's support because, I don't work alone. I have great staff. I think I have some of the best staff one can ever hope for. I also think that when people ask me, how do you want to be remembered, it's an honor to be asked to serve my own continent. I'm proud of what we've actually done. I think our work over the last 7-8 years has impacted more than 400 million people, and that's what it really matters: water, sanitation, energy. Myself and President Ajay Banga, President of the World Bank, when Ajay was nominated to become President of the World Bank, the first place in the world he came to was me. He came to Abidjan. And I sat down with Ajay Banga. I said, Ajay, 3 things I'm going to ask you. First, Africa must have universal access to electricity, period. 2, we must feed ourselves. 3rd, we must have jobs for our young people. And I'm delighted to let you know that today, at the spring meeting, Ajay Banga and I announced what's called Mission 300, which is we are going to connect 300 million Africans to electricity by 2030. It's a totally different way of working. We are not going to industrialize in the dark. We are not going to be competitive in the dark. And look, we just tired of being in the dark, and we're going to take things up on ourselves and do what we need to do to make Africa develop with pride.
Thank you, Dr. Adesina. I hope that we will get you one more time before you leave.
I hope so.
Enjoy your passion. Thank you so much.
Thank you very much. Thank you.
Please welcome Co-Vice Chairman of the Partnership for Digital Access in Africa, Fred Swaniker, and AFF Foundation President, Co-Founder, and Managing Director, Jordan Blaszczyk. Semafor's EMEA Market Lead, Guillaume Doan, joins to moderate this session.
Hello, hello. I'm so happy to be doing this interview. I was really excited about this opportunity. Partnership for Digital Access in Africa is such an effective proof point for what we're trying to do with this event. You are truly connecting the unconnected, and you're doing it in this very coalition-minded, very galvanizing way. And I'm very, very pleased to bring to the stage, first and foremost, Jordan, who leads America's Frontier Fund, which is a key partner of PDAA and instrumental in expanding partnerships, and Fred Swaniker, who's the vice chair of the board of PDAA and a founder of the African Leadership Group. So thank you very much. We're obviously here to talk about connectivity, broadband, expanding internet access, but I would love to kind of start with this one first world question. I don't know about you, but I lose my mind if I go 1 hour without Wi-Fi. But I'm curious what one lifetime looks like. And so, if I could take it to you, Fred, first and foremost, what does that look like? What does one lifetime without Wi-Fi look like? And can you quantify it?
Well, one lifetime without Wi-Fi means a lifetime without access to knowledge, a lifetime without access to health, a lifetime without access to entertainment and inspiration, a lifetime that is actually cut short because your life expectancy is reduced. And it's a lifetime without income because you're not able to work, especially when we live in a global labor market. So it ultimately reduces opportunity for everyone, and it means entire human capacity that is lost if you're not connected to the internet.
Jordan, you're able to look at this from an American perspective. What's your view on it?
Mm-hmm. I think our most valuable thing in life is time. Time with our families, time with the things we're most passionate about. And I think the thing that internet connectivity does is it gives us more time. I mean, think about how difficult it would be if you had to walk miles to get to a library and then spend time browsing through the library looking for the right book, and then going through that book, looking for the one fact that you were looking for, that's hours and hours and hours that the internet could have given you in seconds. And so time is what internet connectivity gives us. And that measured over the span of a life is invaluable. I think that's the bottom-up way to see it. I think the top-down way to see it, the McKinsey Global Institute predicted that if there was full digital inclusion on the African continent, that would result in $300 billion more dollars of GDP across the continent. You abstract that now over a lifetime, 75 years. That's $20 trillion of value that is lost as a result of not having internet connectivity. And that value, again, is measured in time. Time that could have been applied to such richer, fuller, better things for every individual on the planet.
You mentioned $300 billion a year. How does that represent percentage-wise as a GDP impact?
Say that again.
GDP impact, $300 billion per year, just so we get a sense of the scale of the impact.
I mean, 300 billion. You could think about that in so many different ways. That's 300 billion in growth that gets applied to the individual's income. So every 10% of new connectivity results in a 1.3% GDP growth for the continent. Again, abstract that over 75 years. That is just the difference between living in the 1920s and living in the 2020s. It's that big of a difference.
PDAA is a relatively new organization, really created on the back of the Digital Transformation with Africa initiative that President Biden launched a couple of years ago. Curious to know, for the audience, what exactly is PDAA and how did it come about? Fred?
The PDAA stands for Partnership for Digital Access in Africa. And it's a large coalition that's come together to really make this vision of connectivity real. So it's got 3 pillars. The first pillar is connectivity, where the goal is to connect 1 billion people to broadband by 2030. Today, only about 500 million people are connected. So this is about another 500 million people that would get access to high-speed connectivity at low cost. And so this is about bringing together fiber and mobile and satellite things, using things like SpaceX and so forth. So, the World Bank Group is part of this coalition, and they've committed $15 billion towards financing this aspect. And SpaceX is part of this, and several others. Obviously, many of the telcos in Africa. So that's the first pillar, connectivity. The second pillar is about devices. It's no use having connectivity if you don't actually have devices. So again, looking at how do we reduce the cost of devices. For example, 30% of the cost of a mobile phone is just because of IP. It's the licensing you're paying to Qualcomm and Broadcom for their technology in there, How do you think about bulk buying? If you're going as a collective and you're buying 100 million phones, suddenly, Samsung and Huawei and ZTE and Apple or whatever, will reduce the costs of those phones, right? And so, it's about reducing the cost of access and also increasing the equity. So ensuring that young women have access to devices, right? So we want to make sure that that's a key part of it. And then the third aspect of it is digital skilling. How do we skill millions of people with software engineering, data science, but also basic digital skilling? How do you use the internet and everything so that they can participate in the global economy? And that aspect, MasterCard Foundation is committing, several $1 billion to educate about 330 million people, on the continent. So those are the 3 key pillars. What I like about PDA is extremely measurable. We are setting up mechanisms to track all of this impact, to be able to see exactly, is this capital flowing? Are the lines being laid? Are the devices being financed? Are banks coming together and providing low-cost financing and so forth, so that this actually comes to fruition?
Digital connectivity, devices, digital skilling, the blueprint for success is very clear. How do you take it from there? How do you double internet access from 500 million to 1 billion, Jordan?
Mm-hmm. And I want to foot stomp on that number of 1 billion people. 1 billion people, that's such an incredible goal. And that's going to take getting 500 million new people connected to the internet. PDAA, as Fred just described, sees it in these 3 buckets, but the first 2 are really how you get people connected to the internet. First and most importantly, there has to be access, affordable access to connectivity. Some of the ways we're thinking about providing this are first, leveraging new technologies like Starlink from SpaceX. Starlink's already on the ground doing pilots for how to provide community portals across Africa. Leveraging that new technology can enable low-cost, easy access in areas it wasn't previously possible. The second is using innovative financing mechanisms. So another thing Fred mentioned is bulk purchases. If you can bulk purchase internet from telcos or from SpaceX, you could then provide it at lower cost to populations. And so we're working with partners at the World Bank and others in order to figure out how we can do a bulk purchase across the continent, leveraging the buying power of African governments to then drive that cost down. So providing that internet access is step 1, and then step 2, as Fred mentioned, is the device. So the studies have shown that affordability is really at $20 per device. And right now, the cheapest devices on the continent are roughly $80. So we have to bring that down. And I think there are 2 ways we can do this. One, we could work with the suppliers like HMD, Nokia, and others in order to just create cheaper devices. So work on the raw inputs, figure out new mechanisms of production, and get those devices cheaper. But the second is financing. How can you figure out new financing models in order to make the payments easier to bear for individuals and drop that cost over time? So we're also working with groups like IMCOPA in order to create better financing models so that individuals can buy those devices.
Just as a last question, Fred, we started with the bird's eye view. What does digital access in Africa look like from an American perspective? I'm curious to know what it looks like on the ground. What does this initiative mean for the citizens of Africa in very, very concrete terms? What is the impact? What is the yield?
Well, it means several things. For example, it means the ability to digitize government. If you digitize government to digitize government services, this radically improves transparency because it's much easier to track payments that are going through the system. It improves access, improves performance, and so forth. So this improves governance. It means the ability to deliver healthcare at radically low cost, education at radically low cost. For example, there are digital methods of delivering education. I'm involved in this. I'm training about 200,000 software engineers and data scientists in Africa right now. We're the largest trainer of software engineers in the world. We're doing this at radically low cost. Something that costs $85,000 a year in the US, you can deliver that for $200 in Africa, right? Once you leverage technology. And so, it means jobs. It's an opportunity for Africa to become like the next India. We have the largest youth population in the world. But today, that's a population. It's not talent. Once you educate it, it becomes talent. And you can then build a massive digital economy. Like India generates $240 billion a year from its tech talent, sitting in India, but foreign currency coming into the continent, right? And we can do the same, right? And it's about building a creative economy in Africa. Like what we see Nigerians have done with music. How do we do that with film and art and fashion, all these other things? There's so much that we can do once we have access to technology. But ultimately, this is what I end with, is it's a chance for us to redefine what development means. Today, The Economist had an article about how the world's poor are being left behind. And they were measuring it by GDP per capita, saying that GDP per capita has increased in the rest of the world relative to Africa's. And I think that's the wrong goal. Because the West is at $50,000 per person. It's going to keep growing. Africa is sitting at $1,000 to $2,000 per person. Trying to chase that goal means you will almost never catch up. But what technology does, it allows us to reduce the cost of getting the same standard of living, but within the GDP per capita that you have today. So why should we try and, you can make $200,000 a year in New York and still not afford healthcare. We shouldn't be trying to copy that. You can make $300,000 a year and not be able to get good education. How do you reduce the cost so that someone who can get the same maternal visit, instead of costing $300 in New York, costs you $2 in Africa because you've leveraged technology? And then who are you to tell me that I'm poor when I have access to the same standard of living as you at a much higher GDP per capita?
Absolutely. Terrific. A great note to end on, and thank you very, very much both for your excellent comments. Thank you.
Thank you.
Joining us now is Sina Lawson, Minister of Digital Economy and Transformation for Togo, John Giusti, President of the GSMA Foundation, and Misabisi Jonas, Chairman of MTN. Amna Nawaz returns to the stage to guide this conversation.
All right. Well, everyone, joining me now are three major players in expanding digital connectivity. That's what we're going to be talking about today. You just met, of course, Sina Lawson is Togo's Minister of Digital Economy and Transformation. Next to her is Mcebisi Jonas, who's Executive Director of the MTN Group, that's South African mobile telecommunications provider. And John Giusti, to my left, is Chief Regulatory Officer for GSMA. It represents the interests of mobile network operators worldwide. Please join me in welcoming them. So John, let's talk about how big the problem is when we're talking about the usage gap. Billions of people who aren't yet connected on mobile internet services despite having coverage available. How big a problem are we talking about? And what is standing in the way of those particular folks being connected?
Yeah, I mean, I think, and I like to look at it as the opportunity, because we know that through investment, the coverage gap keeps getting smaller. And it is this usage gap, the number of people who could be accessing broadband services but aren't. And so if you look globally, that number is 34%. But if you look at Africa, the number is 58%. So that's a huge opportunity to bring a large part of the population into digital inclusion. But I think what we need to look at, and it's fantastic to have both industry and government here today, because nobody can do it alone. Mm-hmm. We have to think creatively how we can confront the barriers. And I think the two biggest barriers are affordability, and particularly device affordability, and also, of course, the digital skills. So how can we make sure that they have the skills and tools to use it? How is there make sure there's relevant content for them as well?
Minister Lawson, do you agree with that assessment that those are the two biggest barriers to better internet penetration? And we should also point out Togo has seen a massive increase in the amount of people who are getting connected to broadband services. So share your secrets. How did you do that?
So thank you very much. I'm very happy to be here today. There are few comments I want to make. The first, in terms of broadband, the challenge that we face today on the continent is really to have fixed broadband, and I'm talking about fiber. It's true that when we look at the internet and the history of internet on the continent, it was all about mobile, but we are a young continent and employment is a challenge. So, and no corporation will ever go to any place because there is good 4G or good satellite connectivity. They will go to some place because they know that there is reliable broadband. So that's a challenge, because when we talk about fixed infrastructure, we talk about spending an awful lot of money for unproven business case on a continent where people are poor. And so that requires from government to step up or step in, I don't know, and try to find solutions to support investment so that the prices of services be low. And that's a project that we've been doing in Togo with the World Bank. And the project aims to connect to fiber all schools and hospitals and provide them with services at very cheap prices. So that's one thing. The second, when we talk about usage gap, goes beyond broadband. It's about content. Why do you want to connect people? You want to connect people because you want them to have access to relevant content. And relevant content is also, as you know, a challenge on the continent. We need not only educational content, but we also need content that have been developed by us that reflect our cultures and our values, and we don't have that so far, you know? And thank you very much. And the third aspect is, of course, device affordability or accessibility. In Togo right now, 40% of phones are 2G only phones. And we ask telcos, and all our networks are 4G networks, but if people have 2G only phones, then they don't have access to the internet. And we need to solve this, and we've been looking into various solutions with other countries to try to bring the prices down.
Mr. Jonas, Minister Lawson mentioned the potential role for government in all of this. You're in the private sector now, but of course previously you did serve as the Deputy Finance Minister in South Africa. So tell us a little bit more about public-private partnerships. Should governments be doing more, both to invest in the physical infrastructure, but also make devices more affordable? Subsidies, for example. What's your take?
I guess I mean, I will add a third issue, which is content, local content. I mean, so it's affordability, digital literacy, as well as content generally, which is a problem generally. On affordability, it's very clear that, I mean, the whole look at digital equity and is important because it takes a shift from just looking at access to looking at how people are connected into the digital economy, how their lives are improved, social mobility, and all of those issues. And all those issues clearly are interest areas for governments, I mean, basically. I mean, if you think about it. It also has a huge potential for improving political transparency and economic transparency across markets and policy transparency across markets. So my view is that essentially the debate is about what forms of partnership can you develop between government, the private sector, and multilateral institutions. Because I think solving device cost and device prices, I don't think it's only a function of what telcos are doing. It is also a function of what government puts into there. The second part is obviously regulation. I mean, it's very clear that, I mean, the continent has moved very fast in terms of creating the regulatory environment, but we must admit, over the last couple of years, in terms of the investment climate in the continent, it has retrogressed in many serious ways. As a result, I think we need a new conversation about what is the right environment in the continent for continuing to encourage and increase the levels of investment in infrastructure, telco infrastructure in particular, but also in other areas, as it were.
John, say more on that in terms of what is the right environment. Where have you seen examples of successful partnerships, healthy environments that foster this kind of investment and expansion of digital access? What are the examples that can be iterated on in other places?
I mean, well, let me start by actually saying the context of where we are, because I think too often we think about the mobile industry 20 years ago. And actually now we're in an environment where we see 40% year-on-year traffic growth, which requires investment. We see return on capital employed below 10% globally. And we see all of us share a desire not to raise consumer prices. So if we want to be competitive and invest, we need to think about where can we remove the cost. So it can be, and this is where government and industry could partner together, because to make sure that their digital ambitions are matching with the policy landscape. I mean, it's hard. Obviously, governments need revenue, and these companies are in the market. So therefore, and it is right that we pay our fair share of taxes. But I think one of the things we also need to be thinking about is what role does the broader digital economy, especially those companies coming in, riding over the networks, making money from the citizens, what investment should they be making into Africa? So let's think about the role they play. But I think we see some great examples across the country where we see leadership, like the minister here, thinking creatively about how to get more of the citizens connected and reaching out to the right players to make sure that it's done in partnership, whether it be with the World Bank, whether it be we were speaking before about can you build scale by working with countries across the region so you're actually buying in bulk, or working with the operators across the region. So I think we can no longer look country to country. We need to think from the regional perspective, how can we drive Africa's ambitions in a way that will work for Africa and make sure that the infrastructure is in place so they are competitive with other parts of the world.
Minister Lawson, tell us more about what's worked in Togo.
Yeah.
When you see that growth of expansion, how did you get to it? And also, what's been the downstream impact of that, specifically around economic growth?
Yeah, so I would say that for our countries, we can't make it happen without working with international organizations such as the World Bank and so on, because we need patient money. We need to fund infrastructure for the future. And so the idea is, of course, to work with the existing private sector. We are not the ones deploying the networks, but we are the ones contributing to fund them with some money that is grant money rather than anything else. Because we need to, when it comes to Africa, often people tend to want to forget that market economies can function. And so a lot of times people will come to you and say, can you do it for free? No, I can't do it for free. What I can do, and I don't want to, by the way, what I can do is to make sure that the price is low so that it is sustainable. And so that's why to have patient money, to have money contributed by the World Bank, others, is very important. And so that's the type of models that, that can work on the continent, that are going to be working. And same for devices. What we are looking to do, working with UNICEF, is to come together with many other countries so that we can buy in bulk at lower prices terminals. And when we talk about devices, it's not only smartphones, but it's also tablets and computers, because you do know that even within universities today, not all students have computers. And so the model would be not only to come with other countries to buy in bulk, but we also need to find some kind of a financing mechanism. Is it come up with some guarantees so that we cover the risk for distributors in case of default? Or is it working again with international organizations to fund something? Because these are recurring costs. And why international organizations? It's because you do know that we have a lot of other projects to fund as a country. So it's important, especially when it comes to consumer goods and so on, to work with money that comes from outside of our countries rather than fund solely on using our budget money.
When it comes to the usage gap, Mr. Jonas, within that gap, we often see a gender gap as well, in terms of lack of access, lack of connectivity, lack of opportunity. Is that prevalent here as well when we talk about this usage gap? And what is the economic and social impact of that?
It is centrally a component of the conversation, broadly speaking. I must say that sometimes we use the term Africa and we think that is homogeneous. Yeah. I think there's no one Africa. I think different countries have different problems, different challenges. There are commonalities, a lot of commonalities, but I think we must appreciate that there's a kind of differentiation of what you find in different countries. This actually, for me, raised another question about how do you ensure that there is at least uniformity or alignment of policy across different markets in the continent. But that's probably another area that we should actually be talking about. And as far as gender inequality, I think you've got interesting examples in different countries. I mean, how women, through digital connection and access to digital networks, they're able to better access health, they're able to better access economic opportunities, they are able to actually participate in financial inclusion, etc. They are also able to participate in politics, basically. So I think it is not just a debate that is narrowly about society as a whole. It also cuts across different sectors. The youth, women are probably central in that, how to find jobs, etc. Digital access becomes a critical component around that. I wanted to end by saying that if you think about it, that when I came in, the last speaker was saying, our spend on one subscriber in the continent is about $5. I mean, the spend of one subscriber is $5, and in elsewhere it is $50. So that shows the difference. But the amount of money you put into infrastructure is the same. So that's why I think the debate about financing mechanism is crucial. You have another elephant in the room now, which is the geopolitical environment. Mm-hmm. It also influences the choice of technology very substantially. And I think it's a real material issue for different markets. I mean, the issue of how do you choose technology, how do you mix technology, as it were, given the current geopolitical and the weaponization of trade, which is the reality that we have at the moment. And the continent probably has to kind of navigate the path and in a very sensitive way in order to ensure that it will continue to drive development, as it were. But I think there has to be a broader understanding that developing economies are affected by the geopolitical dynamics in ways that I think at the moment have not been built into the models about digital equity, etc. And that's dangerous, I think, in the long term.
Mr. Lawson, can I get your take on this briefly? Because you raised the interesting point about the geopolitical moment, but also this idea that closing the usage gap means a greater connectivity for people to be involved politically, to express their own content, to be able to engage with elected officials. Is that something that you've seen in Togo as the usage gap closed?
So we're a small country, and we try to stay away from, geopolitical, I would say, to picking sides and so on. So the issue for us is to find devices that are cheap and corresponds to our needs, and we should stick to that. I think you're right that there is the geopolitical issue, but I also think that as a continent, with all the other issues we face, we should maybe look at what we need first and be only concerned about that. But so that's the first comment I'll make. The second comment I'll make is really follow the money, because we're talking about having these devices cheap. We're talking about finding the funds to acquire them. So it depends on the type of models that we will see emerge that will solve our needs, I would say.
I thank you all so much for joining in this very important conversation. Please join me in thanking our panelists, Mr. Lawson, Mr. Jonas, and John Juste. Thank you all.
Please welcome Google SVP for Research, Technology, and Society, James Manika. Semafor Tech editor Reed Albergotti joins us to guide this conversation.
All right, wow. Okay, James, thank you so much for doing this.
Well, I'm so glad to be here with you, Reed. Oh, what an incredible room.
It is amazing. You're not only the Senior Vice President for Research and Technology at Google, you're also co-chair of this UN AI Advisory Board. And you just came out with this final report. And one of the things that really stood out to me is that, all these 7 AI initiatives like Bletchley Park and Seoul, only 7 countries are party to all of them, and 118 countries had absolutely no involvement, and most of those are from the Global South. And I want you to talk about what are the implications for that? What does that mean for AI in the Global South?
Well, first of all, it's such a pleasure to be here with you. We're actually delighted that our recommendations from the UN high-level body were part of the Global Digital Compact and the Compact for the Future. So we're thrilled that they were actually endorsed in the vote that happened in the UN General Assembly a few days ago. But you're absolutely right. So thank you. You're absolutely right that it was quite stunning to us when we were doing our work. So the body itself, the high-level body that I co-chaired, we had 39 members from 33 countries. And as we were doing our work, it became very, very clear that while there's been a raft of all these summits and declarations and so forth, only 7 countries had participated in all of them. And as you said, there were about 118 that had not participated in any of them. And the vast majority of the 118 were in the Global South. I think that's actually quite important in the sense that if AI is going to be as transformational and impactful and has all these incredible consequences, both some of which are beneficial, some of which we're going to have to work through as potential risks, I think it's important that, in fact, the whole world be involved in this. And I don't think it should be acceptable that the Global South is not part of this, both to benefit from it, but also to shape how this technology is governed and how it impacts humanity. So we felt that was quite important to highlight.
Yeah, one of the other things from the report that I thought was sort of, made me think is that there's this huge AI funding gap, right? Over $1 billion a year needs to go into more than needs to go into building, the infrastructure that we need to make this happen. And how do you fund that?
Well, I think it's important, first of all, to recognize the nature of the problem. And we were very concerned on the high-level body that the existing digital divide doesn't also turn into an AI divide in ways that leaves out the global south. So I think if we're going to tackle this digital and now potentially AI divide, we're going to need a few things. It's going to be important that the global south has access to what I think of and what we think of as the ingredients for AI. So compute, access to models, and so on. But in addition to that, it's also important to have what we call in the work we're doing, the enablers, so digital infrastructure, connectivity, and all of those things. That's what makes it such a huge capacity gap for the global south to fully participate and capitalize on this technology. So I think somehow the world's going to have to come together to think through how we finance that. Now, I think that the financing and funding of that is going to have to be a public-private set of initiatives and efforts. I mean, we're trying to do some of that at Google ourselves with the investments that we're making, a lot of them in the global south, to try and help bridge some of those funding capacity gaps.
Undersea cables, I think you've been doing for years, but now as you do these other projects, right, looking forward, what's the strategic value, or is there a business purpose for all of these projects at Google?
Well, first of all, just to describe what we're doing, I think what we're doing falls into a few categories. One is infrastructure, and here we think both giving countries and entrepreneurs and businesses access to cloud computing and infrastructure, but also connectivity. I mean, most of the global south, whether it's Africa or many parts in Latin America, connectivity is not what it should be. That's why we're doing all these cables. For example, now we have the Equiano cable from the top of Africa all the way down to the south, to the southern tip, with many countries having the option to connect to that. We just did the Umoja cable recently from Central Africa down, connecting to Australia. So infrastructure is a big part of it. But I think there are a few other things too. I think it's going to be important to work on things like languages to properly reflect the rich diversity of the world so people have access to things. I would also add some of the people capacity issues, whether it's skills or helping entrepreneurs, funding entrepreneurs, and all of that. So all of these things are things that are going to be quite important. I think in many respects, we have to do this in ways that tries to get to everybody. I think, for us, at least at Google, we're guided on this by the core mission of the company, which is to make information universally accessible and useful everywhere, to everyone. So I think that's a lot of what our motivation is, to try to get to everyone.
So it's not something that pencils out financially for the company. This is another motive, I would say.
Well, I think you have to go beyond. I mean, take languages, for example. Take languages. I mean, I think if you think about, what languages might pencil out, I think you would probably stop at about 40 languages or something if you're going to do translations. But if you're trying to get to everybody, I mean, right now we're already at like 246 languages, and we just added 110 of those in the last 6 months, touching another 500 million people. In fact, our goal is to get to 1,000 languages pretty soon. I think the goal there is, driven by both needing to give access to as many people as possible, and that's what we're trying to do.
Yeah. We've talked a lot about Google's sort of responsible AI initiatives, and everything you do kind of has that running through it, and in some ways you kind of hold back. I wonder if you could I hear this contrast between what you do, and in the global south, it's less about that and more about we just need this technology. We don't want anything to hold us back. How do you sort of square those differences?
Well, I think it's it's a complicated set of considerations we try to do, and I wouldn't claim we get it right every single time. So we've had these AI principles that date back to 2018. And if you look at the core of them, there's 7 of them, so I won't take you through all 7 of them. But if you look at the core of them, they're trying to ask 2 questions. One is, could this be beneficial in any way? And the other one is, could this be harmful in any way? So we're constantly trying to grapple with that and try to get the balance right. Sometimes we get it right, sometimes we don't get it right, and try to course correct. But that's what guides those choices. So there are things, for example, that we said, this is not yet ready to put out into the world. Let's do more work on it. There are things we put out in the world, so oops, sorry, that wasn't quite ready yet, maybe hold back. So we constantly try and be guided by those core principles. And we always get lots of feedback. Our users give us lots of feedback when we get it right and when we don't get it right.
Another issue, I think, with AI in the Global South is, and really connectivity too, is data sovereignty. I mean, all these countries want to have their own data and their own, borders and control it. But that also requires more investment, right? I mean, that's a bigger investment. So how do you think, is that an issue that you've thought about, and how do you solve it?
Well, I think in some ways the data question is often misunderstood, particularly with regards to AI, in the following sense. If you think about how many of us around the world are building these foundation models, these large language models, it's mostly data on the internet. And that's available to everybody, and it's accessible. So, right, you can, if you wanted to train your model in, pick your country, you're mostly training on what's on the internet. That's what we're all doing, both the large companies and the small companies. I think the questions where what you want to be able to do in all of those is to make sure we're fully reflecting the rich diversity of the world. And often there's some languages, some cultures that are not as properly represented on the internet. So I think that's important. I think where the sovereignty questions come in is when you're thinking about questions to do with privacy, when you think about data that is much more about transactions, say financial data or transaction data. Of course, you want to make sure you're very thoughtful about that. But if the question is simply training these large language models, everybody's training these off what's on the internet.
Mm-hmm. I know you also talk with a lot of ministers, digital ministers in Africa especially. Who is doing things that right? Who are some interesting ones that are really thinking about this in the right way? And what are they doing? What are the big ideas?
Well, actually, one of the things that's been interesting to me is, as I do what I do, and there's some extraordinary digital ministers doing extraordinary things. And what's been remarkable to me is, I think, not because, but it just so happens that most of the ones I can think of are women, actually. So I think of, for example, one of them is actually here, Mrs. Sina Lawson from Togo, I just saw in the lobby. She's doing extraordinary work. Minister Paula Ngabire in Rwanda, she's doing incredible work, having extraordinary impact. I think about Minister Josephine Teo in Singapore, there are these extraordinary ministers who are having such impact, transforming their societies and their countries in very, very compelling and inspiring ways. And it's interesting to me that most of the ones I can think of are women, actually.
That is really interesting and promising in a lot of ways. I think I'll close out with this as we run out of time. I mean, what is give me like sort of your vision for, I don't know, over the next 5 to 10 years, what's the perfect way this goes, and what is a potential bad way this goes? I mean, the best case and worst case scenario.
Well, I think, first of all, the thing that I think about, and many of us think about, is the idea this is such a transformational general purpose technology. When you think about it that way, you suddenly realize that on the one hand, it has this incredible potential to transform what people do every day, what entrepreneurs, small businesses, economies, productivity, the possibility of advancing science. We're starting to see evidence of that. The potential to contribute to things that the world wants to see, such as the SDGs. So the opportunities and potential is immense in all those different ways. In fact, if you haven't seen that, there's some extraordinary work that the UN has done, for example, that shows that something like, of the roughly 169 goals in the SDGs, in the specific goals, something like 134 of them could benefit and be contributed to by AI. So there are all these extraordinary opportunities on the one hand. At the same time, there are some real risks and complexities, and I think we have to recognize those too. As I think of on the risks and complexity side, think about the possibilities of what I think of as performance issues. Sometimes these systems are not accurate. Sometimes they'll hallucinate, right? Nobody wants that. Nobody builds them for that. Sometimes they'll be biased. I don't think anybody's going out to build a biased AI. But those are problematic performance issues. Then you've also got the concerns about misuse. You can imagine these systems being misused for manipulation, deep fakes, misinformation. You worry about that. Then you've got complex impacts such as both beneficial and challenging about work and so forth. So I think we have to think about both of those things at the same time. So the question is, can we put in the right governance frameworks that both enable the things we want, such as all those wonderful beneficial things, but at the same time address. So my hope is that as we navigate this, and this is what we're trying to do with the high-level UN body on AI, to say, can we put in the right architecture frameworks that try to do both enable the incredible things that we think are going to be possible and also address the risk. So my hope is we get that balance right, and that's why I like the recommendations that we came up with in the UN high-level body.
That's a lot to think about. Thank you so much. We're out of time. I could talk about this forever, but really appreciate you coming out.
Oh, you're welcome. Thanks for having me.
Thank you for joining our morning sessions. We will now take a break until 12:55 p.m. Please note, if you leave the secure area, you must have your ID with you, and we will ask you to repass through security and ID check upon re-entry. Thank you. Please welcome back Semafor co-founder and CEO Justin B. Smith.
Welcome back, everybody. Please come in and take your seats. I hope everyone's had some lunch. We are, for those who are just joining this afternoon, welcome. We're thrilled to have you. We've had an incredible morning. We heard from leaders and innovators like Sim Shabalala, the CEO of Standard Bank Group, and James Banika from Google. And we have many more news-making conversations in store for you this afternoon, including the president of Malawi, Lazarus Chakwera. As our partners at PDAA note, approximately 40% of Africans are currently connected to the internet. That stands in stark contrast to the global average of almost 70%. Our goal here today is to help bridge that divide by having constructive, forward-looking conversations with leading figures from around the world. And with that, in terms of leading figures around the world, we have a very special one. I'm pleased to introduce Joel Embiid of the Philadelphia 76ers with Semafor's Max Tanney.
Joel, thanks so much for doing this, man. I have the most fun job of the day, as you can see from everybody taking pictures, which is to get to chat with you a little bit here. So thankfully, for those of us who are NBA fans, the season is starting again in less than a month. So, a lot of people who are, who are players in the league are ramping up their training. They're back in the gym, kind of starting to get ready for preseason. And yet, you're taking some of this kind of crucial time to be here this week. This is your first UN General Assembly, and you wanted to take, some extra time to talk a little bit about growing basketball in Africa and the opportunities that presents. You're meeting with world leaders. You're speaking to folks, asking questions and talking about some of those incredible opportunities. Can you talk a little bit about why you thought it was important to kind of start this personal journey of giving back to Africa, and what questions and topics you're going to be talking about this week?
First of all, thank you for having me. It's an honor sitting here with you guys, and to answer your question, I think being in my position, I've always felt like that was my duty. Being from Africa and seeing what we all go through, and having been lucky to have this opportunity to be sitting on this stage and to make it at this level, just felt like I have to do it. That's what I have to do, and it's really important, especially growing basketball, growing sports in Africa. I mean, some of the topics, that's some of the topics that we talked about. There's a lot of people like me, but they don't have the same opportunity. I got lucky. I wasn't even playing basketball. I was 16 years old, and I was playing volleyball, and out of nowhere, I got this opportunity to just, start and then to get to America. And I know there's a lot of us because, from a young age, that's also why I focus on youth, because from, Americans from the young age, that starts so little, and then they grow and grow. And with us, when you're born, your parents, they want you to be doctors, they want you to go to school, which school is also important, and, it all mixes together, education and sports. And I think, one of the reasons, why I want to do this is to just encourage people to look at my story and to believe that it is possible, because, I did it, but, and meeting with some of the people that I've met so far, I think my big emphasis has been to just, try to help as much as possible, trying to push, because I believe in us. I believe in Africans. We have the talent, but, we need help. We need infrastructures. We need leadership. And, but like I said, that's what I think is extremely important.
Yeah, and it seems like there's this really growing group of prominent Africans involved in the NBA, not just players, but also executives. You had dinner last night with Masai Ujiri, the president of the Raptors. and some other African world leaders at Tatiana. Can you talk a little bit about, and you discussed a lot of these topics, can you talk a little bit about what you guys discussed at dinner and where you think some of the opportunities are to start having conversations or opportunities for concrete growth?
First of all, Messiah has been a big part of this, a big key. He's done a lot, he's accomplished a lot, and he's been a mentor to me. So I want to learn. For me, the first thing was being part of this for the first time is a learning experience, and then also trying to add some input as far as what can we do, some options to do, and but the focus was really about just talking about some of the issues that we have, and how can we get better, what's the next step, what can we do to make sure that we reach that next level. The focus on youth, the focus on women, because women are extremely important. And since I've become a parent, I have a son, 4-year-old son, and I have a daughter on the way. So it put so much more emphasis in, what I have to do as a role model and as a leader. So those are some of the stuff that we talked about, and I keep going back to this. I think for me, infrastructures are a big part of it.
Yeah.
Without that, you can't really develop what you want to do.
Yeah. Are your kids already playing basketball? Are they?
I mean, that's no, they're not. My son is not that. It's difficult for me because I was in a situation where I play volleyball and I don't want to push basketball into him, which I'm not going to do. And it just happened naturally.
Yeah.
It wasn't like I was forced to, I got to be this, I got to do that. And to me, but then again, it makes it hard for me because I'm like, well, I started playing at 16 and I ended up making it, but everyone is different.
Yeah.
You might have to start a little younger, and because everybody's different, like I said. But no, they're not. But at some point, I think he's gonna have some pretty good genes. So, if he wants to, he can. Ultimately, I want him to be a Formula One driver.
Oh, that's awesome.
Or a soccer player, but Formula One driver, he's gonna probably be too tall, so that's not possible. And soccer
you need
players,
more guys like me doing Formula One.
Yeah,
maybe more people like your son do.
Or playing soccer, which I mean, if it's taller than 6'2" or what, that's gonna be a little hard.
So wait, to get back to this question though of growing basketball in Africa, this is obviously something that's been a big public push that the NBA has done. Adam Silver has said that there's a big opportunity for growth as a market for fandom and in terms of recruiting, which we've kind of talked about in terms of finding awesome talent. We saw a lot of that in the Olympics over the summer. Has Adam Silver, as you're the most prominent African NBA player, you were NBA MVP. Has he asked your advice about growing the league in Africa? And if not, what's some advice that you would give him?
I mean, it's a difficult subject because, as NBA players, it's kind of hard to be involved because of some of the CBA rules. But I'm always open to do anything because for me, like I said, being where I'm from, that's my duty. I gotta do as much as possible. And if there's something I gotta do, I'm always willing to do because I believe, Masai made a comment earlier. He said, by 2050, 1 in 4, people are gonna be from Africa, which is big. And he said, the median age is 20 years old. So I mean, Africa is coming. We just need, the help and the structure.
Do you see any other foreign? I think back to when I was growing up watching Yao Ming on the Rockets, and after his successful career in the NBA, he went and helped build up basketball in China and plays a really, really big part in the development of their kind of growth. Is that kind of something are people like Yao Ming and other, are there any players like that who you think are models for helping to grow basketball both in Cameroon, where you're from, but also in Africa in general. Is there anybody else like that who you think that's a good role model? That's kind of who I want to be after my long, successful career in the league?
There's a lot of them. I think Lungba Mute was the guy that found me.
You, yeah.
Yeah, so he gave me the opportunity to get started. And Masai has been a big part of it. I mean, what he's done. When I started playing basketball, 3 months into it, I went to Luke's camp, and then he sent me to South Africa, and then Masai was there. Masai has been doing this for years, and that's why I really look up to him. Joakim Noah has been doing a lot of great things. You mentioned Yao Dikembe has done a lot of great things. So for me, sometimes I get mad at myself because I'm like, I wish I could have done this sooner. But then again, I feel like everything happens for a reason. I'm at the stage of my life where, I'm 30 years old. I had time to build myself up and make sure that, I was in a position where I could make some big impact. And that's really my dream. I want to, have as much impact as possible, especially on the continent of Africa. And, like I say, yeah, that's my goal and that's my dream.
Yeah. So we only have a few minutes left, so I want to just briefly ask you, you got to spend a month or a little bit more than a month over the summer hanging out with some of the most iconic NBA players of all time as part of the U.S. Olympic team, LeBron James, Steph Curry, Kevin Durant. Was there anything about spending time with those guys that kind of surprised you that you weren't necessarily expecting?
Not necessarily. I mean, I've been playing against all those guys for a while now. No, but I think the Olympic experience has always been my dream. I always wanted to do this, so I was happy to be part of it and just experience it. And the group of guys that we had, they were amazing. I think we had, we had a great team, but I think those guys are also great human beings. Just being around them, and just everybody just being normal and just having fun together, just talking and just going at each other.
Yeah.
That was a fun time, and then going out on the at the same time and competing towards the same goal and winning it. Winning the gold medal was exciting. And then I went back to Cameroon. Spent some time with my family, enjoy. So it was really fun.
Yeah, you ready for the season?
Yeah, I mean, of course.
All right, Joel, that's all the time that we have for today. Thank you so much for being here.
Thank you.
Please welcome to the stage Semafor Senior Editor Gina Chan in conversation with Semafor Africa Editor Yinka Adegoke.
Hi, everyone. Thank you for being here for our afternoon program. We have a much shorter, at least in stature, panel up here compared to...
Definitely.
I'm glad I was not interviewing Joel. But yes, we're here with Yinka Adegoke, who is our Africa editor, has been covering the continent for years, and wanted to get his insights, given he was a key architect of putting this program together. So, Yinka, we've heard a lot today about Africa's transformation and this movement towards, connecting the next 3 billion, where that's obviously a big part of the mission of a lot of policymakers in Africa. What have you seen through the lens of your reporting on the ground and with the team that Semafor has there?
If I say thank you for having me, does that actually make sense?
We're thanking ourselves.
As well, Gina is actually the amazing person who puts a lot of this together. But it was something that Dr. Adeshina was saying earlier on about the privilege of being in this position, to be able to tell these stories about the way that this continent is evolving so rapidly. is just something that gets myself and Alexis, managing editor, and the team so excited every day, because there's always something new and exciting about the way the continent is developing. So the thing that's always been our ambition and our interest is, how do you tell these stories in a way that opens up the continent to people who are not necessarily from the continent or think they have no interest, and get them to sort of understand the importance and the centrality of Africa in the future of the world, right? Like you can't get away from how the world develops without thinking about Africa.
Yeah. Well, so can you give some of the people in our audience, who are hopefully all readers as well, sort of a peek behind the curtain of your reporting, the team's reporting on one of the major stories that you worked on this year?
We've had a few. And it's funny, Alexis and I were talking about this last night, just thinking about a story we have been doing out of, I think the topic of this event is probably a better way to think about it. Just telling the story about how everyone, that whole supply chain of what a digital is, from the small startups to the big telcos, the increasing realization that there needs to be more investment in this whole sector to develop the countries, right? Because a lot of the emphasis on development has always rightly been on agriculture and health, and these are incredibly important topics, but there's a sort of understanding now, and thanks to some of the big tech companies as well getting involved, that to live in a modern global economy, developing digital infrastructure, developing digital strategies in terms of governance and the way countries work will be a key to the way countries move forward. I put a stat this morning about Google had this stat that 1% increase in digital connectivity can add as much as 5.7% to GDP. And that's kind of like, you need to pay attention. We need to pay attention to that part of development, right? That there are these ways that countries, we can't sort of, there's always that thing about leapfrogging. I mean, we can't all leapfrog our way to development. There are some hard things that need to be done, right? Whether it's building roads and building infrastructure, all the kind of physical stuff, but also just thinking about how all those things are connected, that they're not separate issues, that they're all linked. And that's kind of the story, the narrative that we pay a lot of attention to.
Yeah. And what about, excuse me, the continent's growing influence when it comes to soft power? We just had Joel here. There's obviously a lot on sort of the cultural and entertainment level too. Fashion is also making inroads. How have you seen that evolve and sort of make its way into the influence of African countries, whether it's in Washington or Brussels or other capitals of the world?
It's an incredible story. So people who've known me for a little while will know I used to work at Billboard years ago and cover the music business. And if you told me back in as recently as 2011 or 2010 that African artists will have some sort of influence on mainstream pop, I would have just, it's just impossible. And it felt impossible to imagine, because when you're in those rooms and meeting very senior executives in the music business or Hollywood, they just had no conception of what Africa is and what its influence might be. We do have the internet to thank. Again, we come back to this issue of connectivity, for making the world that much smaller, so that someone puts a song out on YouTube, or these days TikTok would be more relevant, and it gets picked up by an executive in Los Angeles because they can see it within seconds of the kid putting up. The world is just getting much smaller. You can see that that change, and then that starts to influence other things beyond just the music. It influences TV shows. You see the influence of Netflix bringing in, creating African shows, and not just Nollywood movies, but also like reality shows. And everyone starts to pay a bit more attention because this isn't, it's that whole idea about the fragmentation of media, right? Like people start to find things that they find interesting, right? They're not waiting to have it beamed down to them and broadcast to them. They're starting to understand like, oh, okay, there's this one thing I really like out of this one country, and I'm just really into it. And then they start to find out other things. They start to find out about the fashion, and then they find out about the food, and so on and so forth. That's kind of what's so interesting about this. It doesn't stop at just that one thing that it started with. It extends into other fields. And I keep on coming back to that connectivity. The theme of our event today is a really big part of that. The world, we can see each other much more clearly, and we can see what we're interested in seeing. Yeah. And that's a key part to it.
Well, so in terms of seeing things much more clearly, or sometimes not, what do you think the Western media in particular gets wrong or, a bit off when it comes to reporting on stories in Africa? Because you and your team are really trying to cover it, frankly, not as foreign correspondents, as people who live there, who have years of experience there. What do you think are the stories that, aren't getting covered enough or are getting mischaracterized?
I suppose, the thing people always expect someone in my position to say is something like, oh yeah, stop covering the wars and stop covering No, we must cover the wars, and we must cover people going through hard times. I suppose what we have done at Semafor, and you're seeing increasingly more places starting to understand the importance of this, is that the problem isn't that you're reporting the poverty or the wars, is that that's still all you're reporting. Right? And that we need a more complete story about the various parts. Like we're talking about the culture, we're talking about sports, whatever the kind of stuff that Joe was talking about earlier. That's really what can change, needs to change. Like I remember when I started doing this back with Quartz, one of the things that worked was that I was kind of a little bit naive because I hadn't been a kind of typical foreign correspondent. So I just thought I'd cover it like I cover a business story when I was at Reuters or somewhere else, right? Just cover it the same way. And it turns out that when you do that, everyone sort of goes, oh, I suppose, yeah, you can talk about Africa on this same, or African stories, or an African country, or an African company in these same terms as you would any other American or European company.
And we're obviously all here on the sidelines of the UN General Assembly dealing with, all the ups and downs that can come with that. What do you see as the main goals for some of the African countries that are here, and are those attainable?
Well, I guess one of the big conversations will be many African countries are, going through difficult times trying to get through their kind of debt load and figure out ways to see that eased and have negotiations with Western, mostly, because we're UNGA, mostly Western lenders. Whether that will be attained will be, that's anyone's guess. I'm not so sure. But we're having some of the conversations are getting to be more varied now, more nuanced in terms of people figuring out partnerships rather than just money in the hand and what have you. Just really trying to figure out new ways of working together with partners.
A more symbiotic relationship. Yes,
definitely more investment.
Yeah.
Definitely more trade. That's become. This has been going on now for a few years, but that's now far more acceptable, more standard.
Sure. Well, we'll be looking for all of that to be covered in the Africa newsletter. Thank you so much, Inga.
Thank you. Thank you.
Please welcome Dr. Ngozi Okonjo-Iweala, Director General of the World Trade Organization. Semafor Africa Managing Director Alexis Aguigiram joins us to lead this interview.
Wow.
I mean, that's how to make an entrance.
Thank you.
Well, I mean, thank you. Clearly, we're all delighted to have you here. We appreciate you and your presence.
Thank you.
We're here to talk about evolving global economic landscapes and basically how this fits into the overarching theme of the day, which is digital trade. So I wanted to start by just asking you, what role do you see digital technologies playing in facilitating global trade?
Well, thank you. First of all, let me thank the audience and say it's so nice to be so warmly welcomed. Actually, it's it's very humbling. And I see some wonderful familiar faces. I won't say their names. But digital trade is probably one of the most exciting aspects of trade that is going on. So digital technologies is something really vital that I think the continent, I would say the young people have caught on to it, so we're not as behind as people think. Young people are actually quite comfortable and doing a lot of things digitally, but digital trade is the fastest growing segment of trade, and digitally delivered services trade, which is all the things that are traded. People don't realize they are trading when they're, selling entertainment on the internet, when they're offering services remotely, be it medical services, accounting services, education services. All these things are digitally delivered trade. It's growing at 8% per year, compared to goods trade, which is growing much slower at about 4.6%, and other services trade. So it's very exciting. That's where the future is at.
And I mean, obviously the excitement in the room is palpable. You clearly are excited about this, but obviously there are challenges with all of these things. And one big challenge we see with trade is protectionism and the rise of protectionism. So what challenges do you think protectionism poses to global trade?
Well, protectionism leads to fragmentation of trade. But before that, I think our biggest challenge on the continent with digital trade is infrastructure and regulatory frameworks. Bigger than protectionism. Just one fact, this trade we're talking about, digitally delivered services trade, where I think we have an enormous opportunity because we are so talented on the continent with the creative sector. This trade is worth $4.25 trillion now, and Africa has only 0.9% of it. But it's growing very fast in many countries on the continent. And I think it could grow faster if we were able to bridge the digital divide in many of our countries and establish the right regulatory framework. So I just wanted to put that on the table. But of course, if we have protectionism, if we have a fragmented approach to governing digital trade, it's going to make it very costly. We've actually done some work at the WTO that shows that if the way we manage data flows in the world, because digital trade is also about not only flow of goods but data, if we manage it in a fragmented fashion, each having its own way or blocks of countries having their own way and not a holistic approach, it could lead to almost a 1% loss in global GDP in the longer term. And it would be bigger losses for developing countries. So you're absolutely right that we need to find a cooperative approach forward.
And just to take you back to the first point you raised, which is a very valid point in terms of developing the infrastructure, well, what needs to happen? How can we overcome that challenge and develop the infrastructure that's needed on the continent?
There are two types of infrastructure. There's the physical, where many of us are not connected. I think young people are much more connected. I think 44% or more have access to the internet and do everything on it. Some of them have never even entered a bank. or written a check. Everything is digital. But there are large swathes of the population, we don't have access to electricity to begin with. So it's as basic as that. And then to telecommunications connections. So those two things have to change. And you know more than 55% of our population does not have access to electricity. So, and those who are in rural areas or secondary towns and have less access. Even sometimes in our larger cities, we don't have that good access. So fixing that, if we really want to be digitally on, and then improving our telecommunications, those are the two things. But we now have cheaper systems of satellites. Well, you've got to have electricity. So how do we focus on improving access to that? Then there's a second type of infrastructure, which you can call the software or the soft infra, which is our regulatory systems. You know, many of our countries don't have the right regulations to govern the way we trade or, you know, digitally or digital access. We just don't. Some do, 1 or 2 countries. My country, Nigeria,
Ghanaian.
Nigeria's regulatory framework is reasonably good, and we have a minister now who's quite versed. So I think we'll get it right. And so some other countries, Kenya and so on, we can name several that are doing well. Rwanda, obviously, is way ahead. But we have many countries whose regulatory frameworks are not in place. So we also need to solve that. And if you don't solve all these problems, access becomes an issue. Now, at the WTO, we've actually taken this on. We're not a financing agency. We have some money, but not like the World Bank or the IMF. But we have money for support to build technical capacity. So what we did is to enter into a partnership with the World Bank's Africa region. And we are working in 10 countries now. We have try and help with the digital divide with the World Bank, if they can try to help with the hard infrastructure. And then we come in and work with them on the regulatory framework, which is the soft infrastructure, and you need both.
Do you think there needs to be more joined up thinking in terms of regulatory frameworks across the continent?
I think so. I believe so. Anytime you can avoid regulatory fragmentation, it makes it easier for business to come in and not have in each and every country to look at a different way of approaching, a different way of doing business. So, and regulatory arbitrage. So I think, you know, more joined up thinking in that regard is also a good thing.
And how can that be integrated into the African Continental Free Trade Area? Because obviously that's something we looked forward to, it's been heralded, but in terms of the way it's been rolled out, it's been quite slow. I mean, how can this be factored in?
Well, I want to be sympathetic to that. They actually have a digital, they're already working on it.
Yep.
And they have a digital segment that they've been, that countries have signed on to. So they're onto it, and I think it will be very congruent with the things we're trying to do at the World Trade Organization. I think they just need to go ahead, and the governments need to work with them to get this implemented. Yeah. So we're on it. It's always a bit slow to go from knowing what to do to implementing. And we're trying to make sure that whatever we do from the global perspective aligns with what they're doing. And a lot of the things they do at the African Continental Free Trade, their protocols are also based on WTO protocols, but some of them are ahead, and which is good. I like that. Yeah.
And obviously part of this discussion is about the global economic landscape, and a big part of that is, well, we've seen last week the Fed has started its rate cutting cycle. So I mean, what impact do you think that will have on global trade and specifically on emerging markets?
Well, you know, each time, I have to tell a bit of a story to get there. Of course, when you cut interest rates, it means that borrowing costs will also come down. And you know that we have a debt problem on the continent. More than, you know, a great number of our countries are seen as being in debt distress. Their debt to GDP ratios are higher than they should be. Debt service to revenue is eating up a lot of the revenue stream that they get, so they can't pay for health. It's not good if you're paying more to service debt than you're putting in your health and education budget, and that's happening in a lot of countries. So, and when the Fed raises interest rates, it also impacts what happens, you know, in our economies and emerging markets. You know, their borrowing costs rise, and so when they bring it down, it's also a good thing. So hopefully that will impact positively. Of course, it will depend country to country because the macroeconomic dynamics at the country level differ from country to country. So even if the Fed cuts and your domestic issues are very severe, it doesn't automatically mean you have lower interest rates. But hopefully it will impact positively. For those who have borrowed externally, it will certainly impact positively in terms of borrowing costs coming down. And then with debt service being lower, they'll have more fiscal space to be able to finance other things. So I see it as going in the right direction. But we must look inward too to try to solve some of the fiscal and you know, some of the monetary policy issues that have to be dealt with, the fiscal issues, inflation, some aspects of that are more domestically driven than anything else.
Can you expand on that? Because, I mean, we have seen a number of different policies being rolled out in terms of an embracing of economic orthodoxy. We've seen in Nigeria a move to try to get rid of the subsidy. I don't know how successful that's been. In Kenya, same with subsidies. We saw that in Ethiopia, they floated the currency. Nigeria said it's going to float the currency as well. It has done. So we've seen what's happened with the Naira. So what terms of changes in terms of looking inwards are you looking for in terms of fiscal policy and monetary policy?
Well, you're asking an economist who believes that some of these measures are needed. Yeah. But it's the way you implement them. And when I was a finance minister, we did some of these reforms. And maybe it's the implementation, you need to look at the way. So as a former finance minister, I try not to comment too much because to hold my tongue, you know, you've done your time, now keep quiet unless you're asked for information. But you're saying Africa-wide, there's absolutely no contest that we've got to get a stable macroeconomic environment in each country. You can't operate, you can't really grow, you can't have growth, you can't invest if you have an unstable situation. If your fiscal deficit is too high, you know, your exchange rate is not being well managed, there's uncertainty, you don't have strong reserves, and I could go on and on. So you do have to deal with it. If inflation is too high, it's also biting on poor people. The ones who suffer most from inflation are the poor people because the costs of the daily goods they have to buy too high. So you need to get all those things under control. So yes, they need to stabilize the macroeconomy, but I think when you're doing these reforms, you need to do them within a medium-term context. So, and you need to show people you have a strategy and a medium-term plan so that the policies you're implementing are not seen as being scattered. They're within a framework. They've got to see what's the end result. At the end of the day, after I finish suffering, am I going to get something good? If I know that 3 years down the line, things will improve and I begin to see signs, then I can bear it. If I don't have any concept of where it's going or what the end result will be, then I'm not going to be patient. So I think the way the reforms are presented, packaged, must be very clear. Then you must realize, you have to realize there are winners and losers. And when you have winners and losers, the winners may not even know they are winning. So you've got to communicate to them they are winning. Otherwise, they'll fight you, along with the losers. And then the losers, you have to find a way to cushion the loss. So doing reforms requires a great deal of thinking and strategic planning and putting it together before you actually start. And it requires tremendous communication so people know it's all going somewhere and there's going to be a result at the end.
Dr. Ngozi, I could talk forever with you, but unfortunately we've run out of time. So I just want to thank you so much. I know.
Thank you.
Please welcome Dr. Raj Shah, President of the Rockefeller Foundation. Semafor's Tim McDonald returns to guide this conversation.
It's a tough act to follow. Tough act to follow, I know, yeah. 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 So,
we can wait a moment.
Yeah, wait a moment, yeah. I might wait a second. To regain the room, yeah.
Ladies and gentlemen, please take your seats. Our program has resumed.
Should I go? Yeah. Okay. Thanks so much, everybody. It's a tough act to follow. We've had this. I think that was the first standing ovation that I've seen today. Yeah. That was a very well-deserved round of applause. So that's amazing. Really happy to have her joining us, and I am so happy to have. That was someone else. So happy to continue this conversation with Dr. Raj Shah. We're going to be speaking about energy access and electrification in Africa. They have some great new work that they've been doing on this effort. And I wonder, maybe let's just dive right in. I mean, tell us a little bit about the news that you guys had from last week on this. Yeah, what's the goal here?
Well, Tim, it's great to be with you, and I just want to say to everyone gathered here, it's so wonderful to be with you. Ngozi is such a hero for so many of us that have worked on these issues. And I'll tell you, back more than a decade ago, I worked at USAID. I ran USAID for President Obama, and he and I and others decided that the most important thing the United States could do with respect to our relationship with Africa was investing in electrification broadly. And the first person we turned to at that time was Ngozi to help us bring heads of state, ministers of finance, ministers of energy, technologists, young inventors, women and girls, civil society, everyone together to develop plans and programs to actually give people access to energy, because she believed that that was what was required to lift up communities. That was what was required to improve labor productivity. That was what was required to allow hospitals to have ultrasound and cold chain and lighting for safe births in their clinics. And importantly, that's what was required so schools could have lighting and energy and air conditioning and teach even at night. And her lesson and her leadership, I think, has set an extraordinary tone for the continent and for the world. And so taking an extra minute to just celebrate Ngozi is entirely appropriate. I will say what the Rockefeller Foundation, together with the World Bank and the African Development Bank, and credit to Countries First, announced in May a commitment to finally reach 300 million people in Africa with renewable electrification. And that project, now called Mission 300, is anchored in 15 countries. At the end of January, on the 27th and 28th of January, the heads of state of those 15 countries will gather in Tanzania to sign and make public compacts that describe the regulatory reforms, the policy reforms, the domestic investment they will make in electrifying their economies and reaching universal coverage in their nations. And partners like Rockefeller, the World Bank, the African Development Bank have committed $30 billion of public finance to make that happen between now and 2030. And folks, it is a race against time because we are not making the kind of progress we need to make. This initiative, to be successful, we need to more than double the rate of electrification in sub-Saharan Africa, and it will have to ensure that there are resources for small businesses, entrepreneurs, hospitals, and schools to use that access to energy and electrification to lift their productivity and their living standards, and to create jobs. I was just in Nigeria in June, a country that has 3.7 million young people entering the workforce every year and an unemployment rate most likely over 30%. We simply are not going to have the jobs we need to absorb and help young African workers reach their full potential without access to electricity in a digital age. So I'm proud of this announcement.
Can you just say a little bit more about, since going back to this, even this USAID goal you were speaking under Obama administration, what are some of the biggest challenges that we still see in terms of, why is it so difficult still to get, for example, more private investment going into these kind of renewable energy projects? Because we've seen in that amount of time, a huge change in the cost of solar, for example, has come way down.
Yeah, way down.
So why is it still so hard to finance these things?
Yeah, so here's what's better and here's what's worse.
Mm-hmm.
What's worse, I'll start there, is the public financing environment. 10 years ago, there were net inflows of $225 billion from wealthy economies to developing countries to support public expenditure. Today, this year, there's a net outflow from developing economies to wealthy economies of $50 billion.
Wow.
Most of that is due to skyrocketing interest payments. There are more than 40 countries that are spending more on debt repayments abroad than they are on either educating their kids in their own country or providing healthcare services to their own populations. So the macro environment makes foreign direct investment very, very, very difficult. Here's what's good. What's good is what you said. Solar panels have come down 90% in cost. Battery technology you can't even really characterize because we didn't have the kind of long duration storage, lithium ion, robust battery systems that make these technologies viable. The net reality is today in Nigeria, in Kenya, in Uganda, in South Africa, we can provide solar plus battery, always on, reliable, productive power to small businesses for anywhere from 12 cents a kilowatt hour to 22 cents a kilowatt hour. And that compares to diesel backup generators that are loud, that are dirty, that are terrible to have to deal with. But most importantly, they're expensive, especially now, 80 cents, 90 cents a kilowatt hour. That is killing the African small business economy. And so in Nigeria, where 80% of all power consumed is consumed as diesel backup, at that price point, of course you have an macroeconomic crisis. So this is, we believe, the best chance we have to generate the kind of private investment alongside the 30 billion. The goal actually is to mobilize 90 billion total, 30 public, 60 private. Some of that 60 is from philanthropies, is philanthropic, but much of it has to come from local pension funds and local commercial banks with some guarantees from abroad.
Yeah. Okay. One question I want to ask too is about how the sort of demand picture in African countries is changing. One of the big themes from Climate Week, kind of around New York this week, has been about data centers and AI and the massive energy consumption that they require. And this is a challenge even in a sort of energy-rich country like the U.S. For African countries where we still see this big energy access gap, but of course they are also very keen to get into data centers. There's a lot of interest in developing that kind of IT economy there as well. Like, does that, is it possible to provide electricity for those things, or how do we see this sort of like demand kind of gap changing?
Well, so it is possible to provide electricity for those things, but most of the climate models that we've all relied on globally assume that in wealthy economies, energy demand tapers off and flattens, and developing economies, it goes up considerably, and that as it goes up, it'll shift to renewables. That's the underlying assumption set. None of that is actually happening. None of that is true.
Right.
The power is no longer going to flatten power demand in wealthy economies. As you just mentioned, it's
going up.
Data centers and AI alone have changed all the data models that all of us have been relying on for in just the last 18 months. And then in developing economies, there's this assumption that the change will happen. But over the last 20 years, for all the renewable energy that's built out all across the planet, less than 2% of it has been built in Africa. Less than 2%. We're not on path to get there. That's why we need new initiatives like Mission 300. It's why we need leadership from the World Bank. Ajay Banga, its new president, is doing a very good job of saying, look, let's focus our efforts on the driver of economic inclusion, on the driver of job creation, and on the systemic effort to lower the cost of doing business across the continent. And that will allow for economic vibrancy and rebirth. Without that kind of leadership to focus our energies where it counts most, we're not going to get back on track to achieve the Sustainable Development Goals.
One question about there's sort of two. We're sort of talking about two goals at the same time, with the sort of decarbonization and climate goals on one hand, also just pure energy access. Is there any sense in which those things are in conflict? I mean, would it be easier to close this energy access gap just by building a lot of small gas turbines, or what do you see as the role for fossil fuels in this solution, if any?
So I think in particular in Africa, the use of gas and other fossil fuels will be persistent over the medium term and even the long term. It's very hard to call something transitional when it takes 5 to 7 years to build out the infrastructure. The financing depends on that infrastructure being operational for 30 years or 40 years. So there's really no such thing in my mind as like new transitional energy infrastructure. But for an economy like the African economy writ large, which has been so massively deprived of energy access, you will have to have an all of the above approach going forward. The key is this, is we can't continue to build out coal. That is by far the most damaging, and we have to get off diesel. And in both of those cases, solar, wind, hydro, geothermal are connected to batteries, using smart meters, using microgrid and mini grid models that are integrated into the grid systems. These are new business models that have proven that they can be economically viable at supplying businesses, not just homes, not just turning a light on, which is important, but not productive in the same way. And we have to understand that new technology frontier and deploy it at scale. The last thing I'll say is because these tend to be smaller projects, relatively speaking, a push like Mission 300 is absolutely critical because it starts to build scale. We can get 25 developers together and say, let's all share in the procurement of batteries so we can get access to the global battery supply chain at 1/3 the cost. Let's share in the acquisition of solar panels and bring the price down. Africa still has, it's a systemically unfortunate thing where solar panels in Africa cost 130% what they cost elsewhere. Batteries cost 450% more in sub-Saharan Africa than that same battery does elsewhere for lithium ion. And the reason is it's because it's so disaggregated as an acquisition supply chain. So we do a lot of that shared procurement through the Global Energy Alliance for People and Planet, which is the partnership that is making Mission 300 possible on the continent.
Maybe the last question, Raj, before we go. I mean, if you think ahead sort of 10 years or in the 2030, post-2030 time frame, is the goal ultimately that philanthropy or development banks can, or public finance can sort of play a lesser role in and stand up more of Africa's energy economy through private finance or companies, and what would sort of your message, I guess, be to private investors, either here looking abroad or African entrepreneurs in the energy sector, to kind of get more of that kind of private finance going into this space?
Well, I'd say the message to African entrepreneurs is easy. It's like, now is your moment. There is, you're about to have the kind of regulatory and policy clarity in 15 major sub-Saharan African economies that you've been asking for 2 decades. hold your leaders to account, but they absolutely need to deliver that clarity by the end of January in the Tanzania summit. The public financing, no country on earth has ever achieved universal electrification without massive public financing. I say that as someone who loves seeing pictures of the Hoover Dam, okay? It's called the Hoover Dam because it was paid for by the government, right? And then we go to developing countries and we say, well, hey, we're not so sure we should spend public financing on your infrastructure. That's not fair. I mean, that's not fair. It's also not sensible given how every other economy on the planet developed its own sense of inclusion. So having this amount of dedicated public finance for electrification is unique, it's different, it's important, and frankly, it's our one chance to get it right. And then the final thing I'd say is to investors broadly, especially in dollar investors or euro investors, right now there's a lot of macroeconomic risk, but you can use your capital in super efficient ways to enable local currency to be available at scale to the developers and businesses that need to power this revolution. And that's how I'd urge those folks to think about it. And then finally, I would say to other philanthropies, this is your chance. Like, everybody in philanthropy loves doing small pilot projects. The chance to actually come together, partner with others, grab a hold of $30 billion of public finance, work with heads of state who are changing their policies and regulations, and do something at scale that can transform human opportunity on the most important young continent on the planet. This is your moment to have impact. And if you care about results, please join us.
Great. Take those marching orders away with us. So, Rashad, thank you so much for your time. It's a pleasure being here.
Thank you, Tim.
Yeah, thank you.
Please welcome Salesforce President and Chief Legal Officer Sebastian Niles and Semafor co-founder and CEO Justin B. Smith.
Everybody. Has everybody heard of the Joel Embiid of corporate affairs? No. I'm really, really excited to welcome Sebastian Niles, who's a friend and an incredibly accomplished executive. He's the president of Salesforce, oversees large swaths of Salesforce global public affairs, responsible AI portfolio, and so on. As we said hello a second ago, I turned to him and I said, how are you doing? He said, great. I said, are you having fun? He goes, yeah. And I said, the other day someone asked me, are you feeling healthy? And so I asked him that, and we thought, well, we should introduce questions like that into sort of executives getting together once in a while. How are you feeling?
Feeling great. Really delighted to be here with all of you. And again, just really thank you for you choosing, right, to spend your time and spend so much of your day, with us for this discussion. But just on this topic, which is again not part of the planned topic, is look, one thing that we were just discussing is that we must embrace that sustainable high performance is deeply linked, right, to purpose, to well-being, to wellness. And now we can go to the planned discussions, but it's a very important area.
All the corp comms people are going, what are you doing? Get off track, off track. So listen, Sebastian, we're here to talk about the, obviously the global digital divide. I don't know if you can close the doors back there, that would be helpful, thank you. And this whole platform that we're building at Semafor is called the Next 3 Billion, and thank you for Salesforce partnership on it. Tell us, your company and you individually do so much thinking about this digital divide. Why are connectivity and digital infrastructure sort of the backbone or the central parts of the solution to this?
No, thank you. Look, I think a couple thoughts. First, connecting the unconnected, absolutely fundamental, right? We must prioritize it. And yet, it may be a little controversial, but connecting the unconnected is an incomplete solution in our view, right? Which is, okay, once you connect the unconnected, then what, right? Do you ensure, you have this incredible idea, the next 3 billion? All right, connecting folks who have not had access to the technologies, not had access to the opportunities, well, then we have to focus on, right, how are we empowering right? All of these people, the communities, the opportunities. How are we bringing their ideas, their innovation, their entrepreneurship, right, into technology development, right? How are we also ensuring, and by the way, this also applies to many of those that fall into the connected bucket already, but how are we ensuring that people are, when I talk about it being empowered, are engaged, are, whether it's AI literate, right, AI upskilled, right, reskilled, and we think that's sort of a key element, which is, yes, we connect the unconnected, but then we have to figure out how do we train, develop, engage, and unlock, right, the potential in this sort of next 3 billion.
And so do you have an answer to your own question?
Look, we think we need, he's tough, right? No, look, there's a number of pieces to it. We think certainly we need some strong and sometimes refreshed private sector, public sector, civil society, community partnerships, and frameworks. Look, we certainly, just last week, we announced a whole sort of another set of grants to, global educational, focus sort of nonprofit organizations, to school districts, and the like, so that we can really uplift, educate, and empower, right, the next generation. But again, when it comes to fundamental elements about digital transformation, right, and using technology, and the like, we do think that, particularly when it comes to artificial intelligence and, what we're thinking of agentic AI, right, it's sort of, humans and agents, working together to drive success for all stakeholders. These are just areas where we're going to need resourcing, we're going to have funding. We're also going to need to ensure, again, that we have lots of diverse communities, part of both creating the solutions, but deploying the solutions, and also providing feedback, right, on the solutions.
So a huge theme here has been obviously the closing the digital gap, the AI gap that exists, and will make it bigger before it gets smaller. There's few people in the world better positioned to answer the question about what it will truly take to democratize AI, access to AI, and other digital tools. How do you think about that at Salesforce?
Sure. First, that this concept of democratizing access to technologies is fundamental to unlocking both the potential of the technology and unlocking all of the human potential, which means you make it easy, you make it empowering, you make it accessible, you give people confidence that whether it's artificial intelligence, agentic AI, or all the other areas, that's something that they themselves, that we can do together, right? So, how do you, go about doing it? Look, there are a couple priorities. We also do believe with great opportunity always comes, right, risks. And so we need to be thinking about, how do you think about responsible adoption of technology? How do we think about responsible, AI? One of the offices that we have created is our Office of Ethical Humane Use, right, of technology, and working on responsible and trustworthy AI in ways that, again, where trust is not an afterthought, but we really build in, early on, and then as part of the overall ecosystem, yes, how are we grappling with the different disparities? How are we thinking about, right, bias, right, and toxicity? And then ultimately bring all that into a framework where we believe in order to drive forward the opportunity, you need to be smart around the right governance. You need to be smart around the right guardrails. You need to be smart around the right guidance that enables people to just really be engaged with it. I think the other thing I would flag, so just last week, we had tens of thousands of people in San Francisco for our largest AI conference. We call it Dreamforce. And what we also announced was a concept called Agent Force, which was these agentic AI systems where you could use technology to take action on behalf of people and organizations. And what we said is for these tens of thousands of people, we said, let's not just operate up here of, oh, here's this great technology company creating those. We said, each of you, nonprofits, we had heads of states, heads of companies, just people though, sit with us, let's build your first agent. And I mean, literally, then you got a little button, right? I built my first agent. But I flag it more because it's the idea of getting people hands in the soil, right? And person after person came away from that experience and was like, wait, this is something I can do too, right? And then we were even learning the ideas that they were having and how are they going to bring that back, right, to their companies, to their governments, to their communities. And so it's these types of, I think, steady types of approaches that are going to be just really, fundamental to driving the impact, right, at scale that we need, and that has long been, delayed.
So just a kind of an optimistic question. So let's assume many of the things that need to happen to close this digital divide happen, that the efforts to expand connectivity with the help of organizations like your own succeed. Can you paint a picture of what life and business and societies will look like across the emerging world?
Wow. Big question. I'm sure actually many of you would have strong visions here around it. Look, what I would offer up, many of you have heard of, for example, the Edison Alliance, right, which is all part of how do you bring further connectivity. But the optimistic vision, which is achievable if we focus on the items that we're talking about today, I think probably has a couple of sort of components, right, sort of or phases to it. One is that the way in which we might be able to accelerate growth for developing economies, perhaps in exponential ways that we don't understand, is real. Number two, and we particularly thinking of this in terms of agent force and agentic AI and autonomous flows. How can we use autonomous AI to address where we have labor shortfalls? So, for example, the World Health Organization has said in certain areas we have there's 10 million healthcare workers needed to drive certain areas. I suspect the answer is sort of much higher. But in these areas where you have shortfalls, how can we use technology to grapple with the disparities, to improve, right, the sort of different sets of outcomes, to deal with these sort of different sort of sets of issues? One of the things we were sort of working with small businesses and medium-sized businesses last week is in this kind of low-code, no-code way, you build your agent, but here's what it can let you do. A small business, a medium-sized business, right, started by a family, started by a community, what have you, what if they can scale their operations? Right? What if they can achieve the efficiencies? I think you've seen the stats, and this is maybe not an optimistic point, but it's sort of the stats as they were. Most small businesses fail. Okay, well, what if we can use artificial intelligence, agentic AI, technology, new kinds of partnerships to have that not be the case anymore? Right? And I just think when you think about all these different sets of issues, and you think about it, look, globally, you think about it regionally, you think it nationally, you think about it locally, the opportunity and I think the excitement when you think about sort of the next 3 billion, look, yes, we bring the connection, but these are 3 billion people, users of sort of this technology. What are the ideas and the innovation and the impacts, right, that all of this, untapped, right, sort of potential, will have? And again, although I think stepping back, it will also come down to values. You and I were talking about this earlier. When we think of how AI and technology and the like can flourish positively rather than negatively, we believe at Salesforce you need an ecosystem approach, right? How are we building an ecosystem of trust, an ecosystem, right, of stakeholder and customer success, an ecosystem of equality, an ecosystem of sustainability, so that you have an ecosystem of innovation that benefits many, benefits all, benefits those regardless of kind of resources or background, or location. And that's when we really are going to, I think, have an incredibly exciting, prosperous and joyful and helpful future where we're really helping each other succeed.
Great. Well, thank you. On that I hear some claps. On that encouraging note, thank you, Sebastian, for your collaboration on this next 3 billion. Thank you for caring about these subjects. Thank you to Salesforce. And thank you for your inspiring and intelligent words.
Thank you.
Thank you.
Please welcome Microsoft President and Vice Chair Brad Smith and Semafor Senior Editor Gina Chon.
Brad, we have a lot to get into, so I'll get right into it. Microsoft has been very busy on the AI front lately. We saw the announcement of the fund with BlackRock and Abu Dhabi's MGX. You and your partner G42 are also investing $1 billion in Kenya. And we've seen a data center in Malaysia as well for $2 billion, just to name a few of the things that you're doing. So what is different about AI and we just heard Sebastian talk about the ecosystem, the infrastructure and the energy needs that makes this technology different and how it connects with this mission of the next 3 billion and getting people online?
Well, the first thing I would say is it's great that we talk a lot about what AI can do for people, and I'm a huge believer in that. Everybody, I think, in the tech sector is. What I think we need to talk more about is the economic structure that is needed to bring AI to people. And it's really very similar to electricity, hence it was great to have that conversation. But we should start by reminding ourselves of two things. The first is, it's been more than 14 decades since electricity first powered lower Manhattan, and we still have 700 million people in the world, 43% of the people in Africa who do not have it. What went wrong? Well, in part, the roots of it lie in the economic structure of electricity. Think about a power plant and think about the grid. It is enormously expensive. It requires enormous capital investments. And you can contrast that with what it takes to, say, invent an appliance that you can plug into the wall. That's where it's possible for, say, a startup to get involved. And the world never figured out how to harness the capital markets or get governments to spend the money to build power plants for the people all around the world. Okay, fast forward, now it's AI. We have data centers that are bigger than power plants. They require electricity that will involve the construction of new power plants. And we need to build that out. And so the question becomes, how the heck are we going to do this? Let's make it our goal to bring AI to the world, not in a century and a half, but in the decade ahead. And that's a big part of what we're doing at the infrastructure level. But the thing that I would really say we should all think about is you are never going to come to a UN week and hear anybody from the United States government say, guess what, the Congress has just authorized $50 or $100 billion to bring data centers to Africa and Asia and Latin America. It will not happen. We will not bring AI to the world unless we harness the power of the private sector and capital markets, build new partnerships with governments, put in place the right kind of local regulatory structure, and that's in effect what we're trying to do with our own spending, with new financial innovations. I think that is a conversation we need to have.
So you also just announced, and we were just talking about this new nuclear project with 3 Mile Island and with Constellation. Is that a kind of model that can also be replicated in other parts of the world? I mean, obviously you're bringing back online a facility that has been offline, but are there examples in other parts of the world where you could sort of use that as a model?
In part. I mean, obviously, I think we need to be committed as an industry to a few principles when it comes to the power needed for data centers. Number one, we need to add electricity to the grid, not take electricity that's already being used by others. Number two, we need to really double down on, say, carbon-free sources of energy. Number three, we've got to do all of this in a way that doesn't raise electricity prices for people compared to what they're paying now. So how do you do that? Well, first, we've got to look at important investments in, say, renewables like solar and wind, while recognizing that that's not the same as base load. You need some way to keep the power running when the sun isn't shining and the wind isn't blowing. And so then you look at sources of base load. One is geothermal. You look at the partnership between G42 and Microsoft. Kenya is a very good country for geothermal energy. So that's a green data center that will be built running on geothermal. Then you've got to look at hydro and nuclear. And I think for nuclear, there's basically almost 3 layers to the equation. First is use what has been built in the past that can be turned on and run safely. That is what Microsoft committed to do last week with 3 Mile Island. You've got other countries where that also is important. Japan, for example, that's a real question that the Japanese public will need to have. The second is, call it next generation reactors, so-called 4th generation or small modular reactors. Right now, we look at that and we'd say that is a solution for the 2030s, which will be good. They'll be here before we know it. But is there a way, just as we're pooling capital to build out data centers, to pool capital that will bring together purchasers that will accelerate demand and accelerate construction for small modular reactors? And then finally, we need to keep focused on the great hope. The great hope is fusion. Someday, there will be fusion power for the world. I believe that. I have no idea when. I'd like to hope that everyone who says they can do it by the end of the decade will turn out to be right. We should invest in helping them, but we need to be comprehensive in our approach.
And you mentioned Microsoft's partnership with G42, and the two of you recently announced the centers in Abu Dhabi around responsible AI and sort of trying to find ways to use the technology for societal good. What does that look like, and how do the sort of geopolitical pressures around AI and who has control of what kind of technology and the chips that power all of this, how is that affecting where you see these partnerships like G42 and trying to navigate this space? Because we're here with many people from African countries that have also been caught between this U.S.-China tensions, whether it was Huawei in the past or others now with AI at the forefront.
I think the first thing we need to resolve is that we will do better than we have in the past in bringing this general purpose technology. That's what AI is. That's what economists would describe it as. Like electricity, it'll serve every part of the economy. We need it, in my view, to bring it to the world as quickly as we safely and responsibly can, and put it to work so that it addresses real societal problems. And that's what we're doing with G42. That's what we're advancing in Kenya. That's what we're advancing in Abu Dhabi and other places. And a lot of that work is done by nonprofits. So you bring AI to a nonprofit, and they can really move healthcare forward, or water conservation, or biodiversity, or other practical needs. So that's one thing. The second thing, though, is it then takes one back to how do we bring this infrastructure to the world? And I think it's worth just then appreciating, just as there is a technical architecture for AI, think of it as an infrastructure layer, there's a model layer, there's an applications layer. We are going to need to construct as a planet a financial architecture to make the investments to bring AI to these various places. It can be companies. It can be like the fund that we announced last week with MGX, which is from Abu Dhabi, and with BlackRock, broader pools of capital. I think we're going to need development banks to get into this business. We're going to need government support to start to put the capital in place. But then the third, the point that you're alluding to, is there is governance that's required. There's global governance. That's been the focus here in the UN. You certainly have the United States government focused on these issues. And already they're focused on export control limits on the exports of GPUs, the fundamental chips that drive all of this. And I think that what we're going to need is ultimately a global standard around safety, around security, around the other issues that sort of roll up into this new field of responsible AI. And I would tend to expect and probably predict that there's going to be a bit of an equation where the US will get comfortable. I would argue the US needs to get comfortable with these chips being exported, but the other side of the equation.
And exported to places like the Emirates.
Absolutely, like a Kenya, like a South Africa, like a Nigeria, like a UAE, fundamentally to much of the world. And the other side of the equation will be that these will be deployed in data centers with the right kind of safety and security and privacy standards and the like. And we're all trying to figure that out. You see bilateral initiatives, multilateral initiatives, corporate initiatives. The good news, in my view, is you're starting to see the emergence of a consensus that would put these together. That's what we'll need to ensure that this technology is exported and available widely.
Great. Well, Brad, we'll definitely be watching out for that and see how that develops. Brad Smith, thank you so much.
There you go. Thank you.
Please welcome 4R Digital co-founder and managing director Nick Hughes and Irvin Tu, Group Chief of Investment Strategy and M&A at Process and Naspers. Semafor contributor Marcus Broccoli joins us to moderate this session.
Nick, Irvin, great to be here with you. That was a super interesting presentation from Brad Smith. We're here to talk about investment and growth, emerging markets, and just to jump right into it, Nick, you were involved in founding M-Pesa and M-Copa, which are two really interesting platforms that really transformed Africa payments. And through the mobile connectivity, you're looking at new investments in the region now. Can you talk a little bit about what the technology levers are that you're looking at you think are attractive for investing?
Yeah, sure. Well, those people who don't know what M-Pesa is now a digital finance platform that serves nearly 60 million people across Africa. And it's a great example of a technology solving for a real problem. The problem was, how do I move money between A and B? And way before we had smartphones or even Apple Pay or any of these other payment mechanisms, we built a platform to allow somebody who didn't have a bank account to move money between A and B over effectively what was a feature phone. And this thing filled an enormous gap in the market, and today 60 million people using it around the world, about 1.7 billion mobile registered accounts. So it's a big thing now, and that's taken 15 years to come through. It's a really important lever. So imagine the ability to move small amounts of money around between phones and between people or organizations that are not traditionally banked. I then co-founded a business called M-Copa, which was taking people in from non-consumption of energy. Great to hear what Brad was just talking about. We can design energy solutions that are distributed and work for small businesses and small households. And M-Copa started doing that using mobile payments to collect money and digital connectivity to watch what that equipment's doing and turn it on and turn it off. And today, M-Copa's got about 5 million customers financing assets such as smartphones and electric vehicles, and it's growing very fast because what you've done with those two levers, ability to move money around and the ability to connect a device, those are very powerful levers that we can use for lots of business models. And the thing I'm working on now is how do we use those two levers to get more access into carbon markets. So it's New York Climate Week. I expect many people in the room must be aware of that. The carbon markets, it's a beautiful concept. I need to buy credits to meet my net zero goal. You've got an excess supply of credits. Let's trade across the market. It's a beautiful economic concept that's very, very hard to make it work in practice until you bring in these new digital tools. So with the carbon value exchange, we're using data capture, using technology to watch that activity on the ground in sub-Saharan Africa. Could work in many emerging markets. And if I'm a corporate buyer in the West of carbon credits, I can see my money go to projects where I've got real data that represent that carbon removal or reduction. So directly between buyers and sellers, using digital finance and using digital technology, we can make the markets work much more efficiently.
And you can direct that money right down to a micro level so that an individual who has control of some carbon.
So today we've got farmers using solar irrigation pumps on their farms in Kenya. They would have chosen a petrol pump because the petrol pump is still cheaper. But if you can bring a new revenue source to them for the carbon credit by displacing that petrol pump, and they're using a solar pump, then we can move money all the way down to the M-Pesa wallet of that smallholder farmer. And that's a game changer because you're suddenly putting a little bit more money into that person's pockets or their digital wallet. And the numbers are huge. I mean, literally hundreds of thousands of people that could benefit in sub-Saharan Africa and Asia from this type of technology. Small amount of money linked to the data. And for me, that's a really exciting opportunity. It's where we can take mobile or digital finance at the next stage.
Use technology to move things forward more rapidly.
That's it, yeah.
So Irvin, maybe if you could talk a little about, you're thinking about emerging market investing. You guys are a huge investor in emerging markets, and obviously everybody knows that, you're probably your biggest emerging market investment was a long time ago, and China was an emerging market, and you guys ended up in Tencent. But you have a huge portfolio beyond that. And could you talk a little bit about how you identify opportunities in emerging markets and where you see opportunities and how technology plays into that?
Happy to do so, and it's great to be here. Let me just start with a little bit of intro on who we are, because notwithstanding the fact that some know us, some don't, we're not a company that seeks the limelight, but we are a business with a portfolio of $150 billion, most famously Tencent. We have a 25% roughly stake in Tencent, and that's these days call it 125 or so, and we have 30 billion of other stuff. So we do invest globally around the world. We have both investments in minority positions as well as operating businesses that we control and consolidate, and that set of businesses, roughly 6 billion of revenue, growing 20% plus. So we have operating businesses, we have investments, we're absolutely global, and our intent is to back the next class of disruptive innovators like Nick. If I had known Nick a little bit earlier, we would have backed M-Pesa.
We can still talk.
His new carbon offset thing, we can talk afterwards.
Yeah.
But the aspiration, of course, is to find opportunities where technology can genuinely disrupt a sleepy incumbent industry, whether that's in India, where we've deployed 7-8 billion of capital, or in South Africa, where we, of course, have a large presence in the form of Takealot. Some of you may be from South Africa and know Takealot. In Romania, where we are the majority owner of a business called eMag, which is an e-tail company. So around the world, Brazil, of course, some of you may know, we own iFood, which is one of the most successful food delivery platforms around the world. We look wherever that opportunity sits, and technology has to be the heart of the offering.
Are there technologies right now that you see that are particularly advantageous in emerging markets that maybe are going to turbocharge development of certain sectors? Or
I'd say the following. I think when looking at emerging markets and trying to access what are, we have to acknowledge, generally lower income tiers of consumers than you might find in developed markets, you have to be more flexible about what technology actually means. So what constitutes a full tech-first company in the US? Well, that definition you have to be more flexible about in India, for instance. So I'll give you an example. We recently invested, we're investing in a housing finance company, and this is a company which, you think of fintech businesses generally, you think of software and an app and a very digital interface. This is a company that actually has branches, physical branches. Because in India, the way banking gets done, the way consumers actually conduct their financial lives is often through physically visiting a branch. Yeah. So you have to be a little bit more flexible what the definition is of a tech-first business in an emerging market context. But the other part of it, as I alluded to earlier, lower income tiers, we are a big investor in a company called Meesho, M-E-E-S-H-O, which is by orders per day, the largest e-commerce marketplace in India, more than Amazon, more than Flipkart. And the reason they're able to do it is they sell lower priced goods sourced by sellers that heretofore, prior to joining the Meesho network, roughly 40-50% of them had never sold online. So this company is a play at accessing, we call it the next 300 million of Indians who are coming online for the first time, transacting, living the digital lives that many of us already live. Well, they're doing so through Meesho.
So what you're talking about, and Nick, what you do with M-Pesa, both of these, you're having to think a lot about people who have very limited income and trying to build a big business off of people who have small incomes is probably a different challenge than what the people in Silicon Valley spend their days thinking about. How does investing in emerging markets differ in terms of what you think about in terms of timeline, the horizon for an investment, in terms of scaling? You know, Silicon Valley, we talked about this before, we got up here, that Silicon Valley thinks every company has to scale to the sky, and you know, maybe that's not the best way to make money if you're actually an investor, or the best way to build companies.
I think it's a great question, and to your point, it's easy to fall into that trap of thinking, just get big and profit will come later. That's that sort of old, sort of Western world's approach. But this point about no disposable income in the vast majority of, or very low disposable income in the vast majority of people, means you have to rethink that business model. your product or service has to make a day-to-day difference to somebody. It's going to help them save a little bit of money or make a little bit of money. And if it doesn't, then it's just not going to scale, or you're not going to find a profitable business model. And it does take time, because you're stepping into an area where there's non-consumption, and you're trying to bring in a product that moves a consumer into consumption. By default, you don't know the business model. And it takes a while. You've got to pivot a little bit. I mean, with M-Pesa, we pivoted, goodness knows how many times before we said, okay, this is the answer. It's P2P. It's very simple. And then you can layer new services on top. The same thing with M-Copa. We started off doing pay-as-you-go solar energy, and we pivoted towards pay-as-you-go asset financing. I think you have to be flexible. You have to take your time, and you've got to find that sweet spot that's helping that consumer make money or save money. And if you're not, you've got no hope of getting into that. You know, there's no disposable income or spare cash in people's wallets to make available to you as a business. And so it's a really important point.
I 100% agree with Nick. Look, providing a compelling offering at a lower price point to a lower income tier is only possible if you have the business model that also enables the supply side so that you can provide that offering. Okay. For instance, again, I'm using Meesho as an example in India. On the logistics side, how do they get a good to a consumer? Consumer goes online and buys something. Meesho doesn't use the traditional, I'll call it larger scale couriers and delivery companies to provide the last mile logistics. They actually contract with, call it 3, 4, 5 person, we call it in the US mom and pop style logistics firms who have excess capacity, and they cobble together a number of these. There are actually as many as 5, 6, 7 hops in getting a product from a seller to a consumer. That's highly unusual in a developed market, but it's what enables the company to actually provide that product for that lower price point.
Great.
So the business model has to work both on demand and of course on supply to enable that.
I think the West the developed world has a fairly risk-averse approach to a lot of emerging markets. It's, I'm sure you've encountered this. People look at emerging markets and they think, you have to compensate me a lot for the additional risk. Do you think that the developed world investors understand the risk? Do you think the risk that they assign to emerging markets is appropriate?
You should go first.
Yeah, I'll go first. Well, we've had a tough couple of years. There's been a sort of correction in the valuation of fintechs. We've seen several big fintechs go to the wall in sub-Saharan Africa, and it's been hard. So you sort of understand that there's this risk premium layered into investments in Africa. But in my head, if we think rationally about it and think about a 20-year time frame, why the hell are we not investing in these emerging economies? If you look at the demographics, the population growth, the natural resources they've got available, and here we are struggling with 2-3% GDP growth in Europe, and maybe some countries doing better than others, but it's a hard place to look for growth opportunities, and yet there are these opportunities in front of us in emerging economies to make long-term plays, but we do have to adjust our risk profile because it's tough. It's almost the reverse of what we need. We need capital that's going to be willing to take a long-term bet, take the risk, because the prize is huge.
Let me answer it this way. Language is almost not our friend here because we use the term emerging markets for simplicity's sake. But not all emerging markets are created equal, right? Yep. There's a very different proposition investing in sub-Saharan Africa relative to India or relative to an Eastern European country which perhaps hasn't seen the limelight yet. It's still very different. What we would say is there are a set of parameters or conditions, of course, which we would want to see in any context. And that's to some degree, as much as possible, a stable political regime, a stable political landscape. Of course, the infrastructure, whether that's water or roads or electricity, power. My goodness, our friends from South Africa will know that power has been a problem in South Africa, and it can be a problem everywhere, Nigeria as well. So some of the basics have to be there to a sufficient degree that growth can emerge.
Yeah. Thank you. We have to leave it there. I think, we believe it or not, we've used up our time. Gosh. But thank you very much for the insights, and please thank you.
Joining Semafor contributor Marcus Broccoli now is Flutterwave's CEO Olubenga Igabula, and American Express VP and GM for EMEA Network Partnerships, Brianna Weisley.
Okay, thank you guys for being here. Let me just start right in. Flutterwave, for those people who don't know it, can you tell us very tight time, what is Flutterwave, what are you doing these days?
So at Flutterwave, where enterprises in Africa get paid and pay across the continent, we operate across multiple countries today in Africa, from Nigeria to Kenya, South Africa, Uganda, Egypt, we're everywhere. And our goal is to help corporates and enterprises get paid and pay across Africa. And also, we also have a very interesting cyber remittance product called SendUp, which Africans in diaspora can use to send money back home to Africa.
Great. And then how did you guys end up working together? Because you're working together.
We are, yeah. So I work with American Express, and we're trying to really increase our presence in Africa because we're seeing that move away from cash that's taking so many different forms, but also card. So we're looking for partners all across the spectrum. We work with large banks, and we work with exciting fintechs like what GB has created, and so that's how we got linked up.
So can we just talk a bit about American Express? You know, the perception of American Express, okay, my perception, maybe I think other people's perception, is that you guys sort of target very higher-end demographics. Are you going into Africa because you think there is an emerging, larger, higher-end demographic, or are you rethinking your strategy for whom you're trying to work with?
I think there's a couple of things. One is our target customer absolutely exists all over Africa, and so we want to make sure we're there to serve them. We also have really expanded out, I think, who we're talking to. So you'll notice here in the US, more and more people, maybe younger folks who you wouldn't have thought might have had an Amex before are now interested. We're trying to bring that to Africa as well. But then also, really importantly, American Express card members from all over the world are coming to Africa in more and more numbers. So through business travel, through personal and leisure travel. And so when they arrive in any of the countries in Africa, we want them to be able to use their card. And we want to make sure that those local businesses benefit from the spend that's coming in from those international customers.
So GB, how do you look at American Express as a partner? What does it do for your business, and how do you see the partnership growing?
So our goal at Flutterwave is to connect to all payment types available in the world today, right? We want to be the one-stop shop API for our merchant to get paid anywhere in the world, right? So American Express is one card network that we see as a major partner for that goal. We believe today via one API and via our infrastructure, you can access a myriad of payment types across the world, not even Africa. So when a Flutterwave merchant has our API integrated, their customer can pay now with American Express on our platforms in Nigeria, in Uganda, Tanzania, which we're going to be launching very soon. The goal is to expand American Network's reach in Africa via Flutterwave.
And what are the biggest impediments you face at Flutterwave in building out your company? Do you meet resistance from established banks and banking networks? Do you meet resistance from governments? Where do you encounter resistance as you're trying to build out your business?
Great question. So unlike Europe, where with one license in Europe, I can access the entire Eurozone, right? In Africa, it's the reverse. I have to get to every country, get licensed, get incorporated, get regulated, which we have to do country by country. So it's a longer journey for us to be able to actually access the entire African framework for our customers. We have to go into every country, get incorporated, get licensed, get regulated, get compliance set up, risk set up. It's a lot of work, right? But our goal is to get that done so that we can make Africa feel like a country to our merchants, right? Even though it's not one. And the goal is via payment, we want to solve that problem and make it one API that makes payment really seamless for Africa.
But there must be people, I'm just imagining there are people who benefit by having it not be one country, right? People who benefit by their own they own a national market, they want to protect their national market, they don't necessarily want competition coming from a fintech like you.
So the way I see it is very simple. If I'm sending money today, so before this collaboration happened, if a merchant in Johannesburg or Lagos wants to get paid by a customer in New York City, right? If they have an American Express card, that will not happen on our platform. But now, that can happen seamlessly via just one click. Put in your card number, pay, and it just works, right?
Yeah.
Now, if you think about money movement in itself, right? If money was moving from Nigeria to Ghana, for example, that takes like 2-3 days if you're going to go through the SWIFT network. But if you have an American Express card right now, it's just instant payment on our platform. And that actually expands the market size for an average African enterprise, or even a global a global merchant who wants to get paid in Africa as well. And the whole point is we want to make Africa the hub of payments across the world, not just even for Africa alone, right? We want to also compete in Africa and make it easy for any company operating anywhere in the world to bring their payment business to us in Africa, because now you can access American Express via Flutterwave. It's the same thing. It works.
And do you see your market expanding at some point beyond Africa, or do you just want to stitch together as much of Africa as possible?
Well, Africa is a lot of work, so we're still figuring that out. Yeah, so for now, Africa, but we want to deepen our roots in Africa. We want to go deeper in Africa, make it easy for merchants and businesses across Africa to get paid via Flutterwave, via any payment type, including, of course, American Express cards. So
what is the, I want to go back to something I was saying before. If you're in the market today, what is your biggest challenge in succeeding, what you're trying to do?
So it varies depending on sector, right? We have to obviously, we cannot grow the macro of the continent, obviously. We have to constantly help our businesses to scale in their sectors. For example, you have companies like Piggyverse in Nigeria, who is doing amazingly well in enabling savings with millennials and Gen Zs in Africa. We power them as well to do their payout in Africa. If you get into an Uber today in Joburg or in Cairo or Lagos or anywhere in Africa, they're on our platform. But the goal is, if we make payments so simple that you can focus on your core business, then you can actually start getting to the growth opportunity here, right? And with what we've done right now with American Express, you can actually now receive money from anyone, anywhere in the world. It's not just an Africa story, and it's a global story now. Right. If you get an American Express card issued in America, issued in the UK, it doesn't matter. It will now work on our platform, and we're exposing the entire Amex network to our merchant base, basically.
And so is American Express on the other side of this? Are you globalizing in ways that you haven't been before? I mean, obviously Africa is a new market, but where else are you?
We want to be everywhere. So for me, a huge focus is Africa, and what GB was talking about of making it easy for businesses to accept payments all around the world. Like, that's exactly why we link up with a company just like this, because I want to make sure that these businesses can benefit from the spend everywhere. So in my role, I cover all of Africa. I also cover Eastern Europe and Central Asia, so lots of places where maybe you might not have thought about American Express before, but we're there. And when you're traveling, you should be able to use your card, and the local businesses will benefit from that. So we really see it as a symbiotic relationship between those travelers around the world and also the local merchant base, but also local customers. Like, we have African card members in Africa, in Nigeria, in South Africa, in Kenya. They travel all around as well. And so every single one of our card members, we want to make sure they have a great experience.
Excellent. Well, listen, it's great to hear about the partnership and see what the success you have has been. And thanks for your time, and let's give them a hand.
Thank you.
Please welcome Fran Kosudis, EVP and Chief People, Policy, and Purpose Officer at Cisco, and Semafor Tech Editor Reed Albergati.
All right. Okay, let's get right into this. Fran,
yes.
We've been hearing a lot about this connecting the next 3 billion. There's undersea cables, there's data centers, there's power plants. But you've been focusing on, I think, something that gets less attention, which is people. And you started this AI-enabled information and communication technology workforce consortium. I had to read that; it's very long. But this is this effort to train 95 million people over 10 years. And I just wanted, tell me about the importance of people in this kind of like AI revolution.
Yeah, at the end of the day, it's really all about people. And I think something that's so fascinating is that in the past, when we talk about AI, there's just an assumption that it's about the technology and not about the humans. And what we're finding is that if you architect it this way, AI can humanize the workforce. I believe it can. The AI consortium that you're referring to is really trying to get ahead of how jobs are going to change with the impact of AI. And so what we did was we looked at 47 roles, and we did this with Microsoft, SAP, Google, Accenture, and we basically looked at how will AI impact these jobs. And what we find is that most jobs will be either moderately or significantly impacted, and there's an opportunity for us to make sure our people are ready.
Yeah, and I think when we've talked about upskilling in the past, it's been like, okay, let's teach people how to code. That's really changing now. I mean, because of AI, and
That's right.
you know, what are those skills? Like, how do you teach someone for this age of really kind of uncertainty around what skills will be needed?
So it's really funny, but I think it's less about the content and more about the frequency of the education. So for us, we go to school, and then you start working, and you feel like, oh good, the school part is done. And I think what we have to recognize is the school part is not done. And if you look at even some of the stats from the World Economic Forum, there's a belief that every 2 years, roles are going to change so substantially that we're all going to have to train again and again. So I think this is more about the cadence of change around our skills than the content that we need, because it will continue to just evolve.
Yeah, so just keeping people updated with everything that's coming down the pike. And you've also done such interesting work on security. I was reading this report, and it was kind of eye-opening to me that cybersecurity attacks happen with more frequency in Africa than anywhere else in the world, like by this huge margin.
Yeah.
And how does that affect things? Like, why is that so crucial to kind of like take care of, I guess?
Okay, so this is everything. We do have to talk a lot more about cybersecurity, because when we look, as an example, at the GDP for the African continent in 2021, it came down 10% because of cybercrimes. And so that's something that we actually have to get ahead of. And something that I worry about is when we connect the next 3 billion, will they be more vulnerable to cyber attacks? And what are the things that we have to do? And so what we find is there are opportunities from a policy perspective, there are opportunities from an education perspective. Today around the world, there's an estimate that there are 4 million security jobs that are not filled because we don't actually have the talent. And so if we can create an easy path, about 50% of these roles are at the technician level, we can create the talent that can create the security for the next 3 billion.
So it's back to the people. There's also this role of the AI minister that you're seeing popping up in all of these countries. And you've talked to a lot of them. I think you see, are there commonalities between all of them at different countries? Is there a playbook that everyone should be following?
So I think what's happening is around the world, countries are trying to figure out the extent to which they centralize their approach to AI, or whether they have the rest of the ministers, as an example, take on this work. For the ministers that I've talked to, what I find, there's an interesting balance in their focus. One element of the focus is on the digital divide and ensuring that technology, and in particular AI, doesn't leave people further behind. The other element of it is the economic opportunity. And my sense is, I think we always have to look at it that way. I think we have to look at the opportunity and know that the more that we're able to quantify that, the more that we'll be able to really create the case for the education and the inclusion that we want to see as it relates to AI skills.
It's interesting. Topic of diversity here. You've done some really interesting research on, we have issues here in the U.S. with diversity and technology, but I think it's even more pronounced in a lot of African countries. Why is that, and what can we do about it?
So yeah, I think it's something we absolutely have to pay attention to. If you take an area like cybersecurity as an example, in Africa right now, only 9% of the cybersecurity professionals are women. And that number should be so much stronger. And if you think about it, I mentioned that there are 4 million jobs that are open. Imagine if we made a push to get more and more women into those roles. It would be incredibly compelling. Around the world, for the rest of the world, we see about 25%. So there's a huge opportunity for us to focus on women. I think one of the challenging things is that when an environment is such that you don't have a lot of that diversity, it doesn't create the easiest environment for women or for anyone else, whatever diversity you're going after, to really break through. And so what that means is that you just have to put tremendous focus on programs that will help bring people in. And so as an example, we have an AI and cybersecurity edge center that we opened in Nairobi. And the whole point is to showcase the technology, but to also train the talent that wouldn't normally come in so that they can be running the center in the future as well.
There you go. You also, when you're educating people, AI can actually come in handy in this effort, right? We talk a lot about AI actually used in education. What are you finding there? What's working in that world, and what do you like to see in the future?
Yeah, I do think this is going to be an area that we can definitely have some optimism around. And so from a Cisco perspective, we have trained 23.5 million students over the last 25 years. And the students that we train are students that maybe wouldn't normally go to college. Maybe they decided later in life that they wanted to get into technology. And I think that those paths are incredibly important. But when I look at that, we train in one way. I think as we look at AI, there's going to be such an opportunity to meet each of us with the way we want to learn. And I'm incredibly visual, so my training has to be a little bit more hands-on than someone who learns by reading, right? And so AI will give us this capability. What you see a lot of companies doing at this moment is using AI either as a tutor or as a coach. And these are some of the opportunities that will be there that I think will help people as they step into technology as well.
Yeah. I want to ask you one question about Cisco, because you've had this amazing career at this company. Started off in the dot-com boom of the 90s, and I'm sure it's changed so much since you got there. How is AI changing the company, and what's Cisco going to look like in 10, 20 years?
It will have tremendous impact. And I don't know all of you in the audience, but my sense is that AI will have tremendous impact on your companies too. I think we're just going there. From a Cisco perspective, 3 things that I would say. The first is AI will intersect with the entire portfolio. The second thing that I would say is we are going to build technology to help our customers manage workloads as it relates to AI. The third thing that I would say is that every single function in the company, whether it's government affairs, whether it's the people organization, finance, we're going to use AI in very different ways. Now, what's so interesting about your question is that the job that I started Cisco at was actually in our technical contact center. That job isn't going to be around. And already we're managing so many of those cases now via AI. And so it's just a good signal to, I think, what is to come. And what you'll see is other jobs come up in its place, but I think the changes will be significant.
Yeah, it's so interesting. I think we have maybe like one short question left in our strict time frame, but like, what is if you could just leave us with like, what's the one, if you could just erase one of the obstacles to this goal of, that we've been talking about, what would it be?
I would say in the 37 seconds that we have, public-private partnerships are so important. I think that companies have to come together in service of outcomes that are meaningful, whether those outcomes are about education, about responsible AI practices that we want to adopt more broadly. I think we need to have more conversation. We have to work harder to make sure that people are not left behind. I think that's very possible. And to recognize there's amazing work that's being done that we can scale.
Thank you so much. It's been really interesting.
Please welcome Hassaneen Hiradiji, CEO at Axion Group, and Diana Layfield, Chair of the British International Investment. Alexis Aguagiram returns to lead this session.
Well, good afternoon and thank you. Welcome to this session. This is Accelerating the Digital Transformation. And I'm delighted to be joined by you both, Hassaneen and Diana. What I wanted to start off by asking is just the obvious question, what is the key to accelerating access to digital technology? And I wanted to start with you, Hasnain, because you can come with the perspective of running a massive conglomerate.
Thank you very much, Alex. It's a pleasure to be with you today. Listen, we at Action Group, we are mobile and fixed operator on the continent. We're active in 8 markets. And we see that the key elements to create a digital transformation, you need to have a proper ecosystem composed first of a good regulation, secondly, by skills in the environment, and last, what is very important is to have good networks also. We're here to have a good, proper coverage. Today, what is good in Africa, operators manage to cover 80 to 90% of the countries. So we did a tremendous development over the last 10 years, and we are now totally covered.
And that's the business perspective. And then I wonder, Diana, you as a DFI, you've got to make these investment decisions. What does it look like to you in terms of the keys to the key factor?
So I think the good news is there's actually been a lot of acceleration. Many of you have felt it tangibly, but over the last few years, we've seen 160 million new internet users across the continent. Over the 6-7 years to 2022, we've seen nearly 200 million people who'd never made an internet payment make an internet-based payment. So there's a bunch of good stuff going on. I think the challenge is that's still not enough. So still only 22% of Africans actually regularly use mobile internet services. So, and it's challenging even in parts of Asia. So in South Asia, you're still seeing nearly 40% of the population across Asia without meaningful internet access. So this isn't limited to Africa. How do we accelerate that? I like your ecosystem point, but I think it goes way beyond the operators. So I think you have to, it's a bit like delivering climate finance and scaled energy. If you're missing pieces of the pie, stuff's just not going to join up. So you have to make sure that the cables are landed. You have to make sure you have a fiber network. You need to create hotspots. You need to make sure that your MNOs are strong and they're built on great infrastructure. They need towers. They need all of the equipment associated with that. You need competition with MNOs. We've invested recently in a new operator in Ethiopia. As a result of that, there are 40 million new subscribers with first access, but also the prices of mobile plans for the national operator has come down 70%. So I think there's a sort of competition basis here that's really important as well. And we look to try and essentially make that entire system, and that also includes handsets and devices. It also includes the content ecosystem, and I'd love us to talk about that in a little while, but you've got to make sure that all of those pieces work in a country, you've got no gaps, and you've got enough competition in key areas that pricing is reasonable for people. Because that 20% would go up. If everyone has a handset and everyone has a cheap plan, you saw in India when the huge investment by Mukesh Ambani completely transformed access in the country.
And I mean, there's some overlap between both of you and what you're saying. You both refer to the importance of networks and coverage. You spoke about skills in particular. Is there any one thing that you think stands out? I mean, so for example, handsets. I know, Hasnain, you're very passionate about handsets. I mean, do you think there's one thing in particular you think is a fundamental key that it's really worth doubling down on and making sure that works across emerging markets?
I mean, Diana was saying something that is very important. Today, we don't have any more coverage gap, but we have a big usage gap.
Yeah.
Today, the mobile data consumption in Africa is still very low. Why? Because the cost of a device, when you bring it compared to the purchasing power of African people, we are 3 times higher than the average of the world. So we need to give them faster, better access to devices. What are the solutions? In certain countries, to import a device, you've got custom and duties between 25 to 40%. Secondly, access to financing. I mean, the device is expensive. You must help your customer. And last, the IP cost. Certain devices, you've got IP costs between 15 to 25%. So I mean, we know what are the solutions to crack the model. To crack the model, we need to accelerate in terms of asking the government to stop taxation that is useless on devices. Secondly, we need to support the access with device financing policy. In Tanzania, we're doing device financing since the last 6 months we're seeing tremendous effect on the market. Acceleration of consumption of data, penetration rate in rural places. I mean, it's incredible, but we cannot do it alone. I mean, we need kind of coalition. We need to partner with people to support the balance sheet effort that we need to have.
And I mean, I think, obviously we're speaking across the board about emerging markets, but there is quite a heavy focus on Africa here because obviously we have Semafor Africa, but then as well as that, and many of these issues are more acutely felt on the continent. Now, one issue that I think is worth us digging into here is that we're talking about an entire continent, and there might be issues around interoperability in terms of software and in terms of regulatory frameworks being different in different countries. You've obviously experienced this as a business. What are your thoughts on that, Diana?
So I think, to me, I think it's a really interesting question about the content ecosystem, because I think handsets are important. By the way, on handsets, I think the bit that we're missing is local assembly. And we invested in Copper, who you heard about just now. They're now producing over 150,000 handsets a month assembled in Kenya. And again, you saw in India the power of having a kind of locally produced device. It's not all the components locally produced, but being able to generate that locally really helps. On the kind of continent, there is a challenge, right? This is an entire continent of many countries, many of which are not huge in terms of population. So I think you have a gap in terms of both the app ecosystem and content. You see with something like YouTube, the incredibly compelling importance of local language and locally relevant content. So I think thinking about new ways to try and stimulate the content ecosystem across the continent would be helpful. From an app perspective, it's how do you get apps that work across the entire region? So WhatsApp's fantastic, it works globally. But if you're trying to drive something like TikTok, which we know creates really compelling usage, how do you create that content ecosystem? How do you get things that are relevant both in individual countries and more broadly? So I'd love to see a little bit more discussion about the app ecosystem.
Do you have any answers on how that can be done?
So I think what you haven't seen is people investing at scale across the continent. You see individual small-scale apps within country. I know Liquid were trying to create, I can't even remember the name of the app now, something that was a social app that had broader regional relevance. But I think there's space here for entrepreneurs, particularly people who have relevant health content or weather content. How do you try and scale those across at least East Africa, West Africa?
And again, you mentioned scale, and this is something that I think applies to both of you. In terms of scale, when we look at transformative digital technologies, for example, AI, a lot of this is energy intensive. So I know with Axion, you have data centers. That requires a lot of energy. So what considerations are you factoring in terms of that energy consumption? I mean, is it an issue for you? Is it difficult? How are you working around this?
So, Alexei, we're going to be very honest.
Please.
Of course, we've got the challenge of the energy because for the moment we were questioning, is our energy is green enough? But I would say, let's be serious. In certain places, in certain countries, we don't have, where we're operating, we do not have energy at all.
Yeah.
So green or not, we don't have energy at all. So I mean, okay, first we'll try to make. The second challenge we have when we're talking about energy, the needs are growing absolutely. But one important point after the reliability of energy is that when our people doing and working around that, the skills gap is huge. So this is one of the important points after the energy access, etc. Skill is very important. We're seeing that there is a big gap in skill. Third point is the government should accelerate in terms of creating all those talent pool, all those universities to push this digital literacy. And the fourth and last point in terms of challenge that we're seeing, Alexis, is, I mean, there is a great opportunity to develop e-administration, digital ID, and this will unlock a lot of things around the digital transformation. But still, we're lagging because, and exactly as Diana said earlier, in terms of common effort, common transformation program, scalability is not there yet.
And are you seeing, are there any countries that you think are actually doing a good job of what you were talking about in terms of, say, electronic administration, the use of biometric technology, for example? I mean, are there any best case examples you can point to?
Yeah, we're seeing in certain countries, in Rwanda, we're seeing that they have achieved good digital transformation by bringing digital ID programs. In a country where we're operating in Togo, the Ministry of Communication has done tremendous effort to have a direct access to all of the citizens via digital ID program, etc. So this is starting, and it is enhancing the program, the development of the countries in terms of digital literacy, digital transformation. But still, we need to be much more ambitious. And there is so much to do. We've got great example in India. I mean, everybody are aware of that. And we should do the same in Africa, because in terms of financial inclusion, in terms of digital inclusion, those are, I mean, common goals we should have all together.
And Diana, on the same energy question, this is a different perspective, because as a DFI, you have clean energy commitments, and as Hasnain pointed out, well, vast swathes of the continent has struggled to have basic access to power. There's an entire debate, isn't there, around gas as a transition fuel. What are your thoughts? Like, how do you factor that into your investment decisions?
So for us, everything we invest in is Paris aligned. So we care deeply about emissions. But I think, again, here it's about building local solutions. We've invested additional investment in Liquid Telecom to help build their data centers. This is about building local data centers with renewable power. In most parts of Africa, the places where you're going to build data centers, you can build a solar farm around that data center and actually create locally available power. So for me, it's the combination of renewable energy and local data centers that's going to make a difference.
Okay. And I also wonder, is there a danger that Africa as a continent, African countries are going to be left behind in the AI revolution? Because they're starting from so far behind. We spoke earlier, throughout the day we've been asking people about this. We spoke to Sim Shabalala from Standard Bank, and he pointed out that something like $3.4 trillion will be needed to just get the continent to where it needs to be. So to what extent do you think there is a danger of the continent being left behind? I mean, maybe I'll start with you, Diana, and then to you, Hasnain.
So there's always a risk, but I'm pretty optimistic about this. I mean, I think the benefits of AI vastly outweigh the disadvantages. And I think what we're seeing is AI's potential to really help optimize power grids, to help optimize electrification across the continent. There's an ability to really try and change the level of efficiency around this. So to me, it's just a question of making sure that that data center availability is there, because that is critical in the AI space. And that people start having capable devices that they can use, and that there's local content. One of the challenges with AI is all the content it's trained on is English language content. So when in a kind of another life, I had to think about launching AI foundation model trained on other languages, Japan is fine, India is fine, Spanish is fine, but actually when you get into other languages, the content isn't super deep. So I think you then need to think about translation of content. So there is an effort required to make local language capability available in the AI space. But if you have the infrastructure, that just takes some thoughtful initiatives at local level.
And Hasnain, your thoughts on that? Thank you very much.
Alexi, I totally agree. Of course, there's a big risk that Africa stays behind for AI. But let's face facts. What are the priorities for the moment? Priorities, we should focus on bringing the key of digital transformation to Africans. And the key of digital transformation, help them to get access to devices. Help them finance the devices. First, we've got a usage gap. We are only at 20%. That is the first step in terms of priority. Second step, help them to get the proper skills, have proper university, proper institute. Third, have a very accelerated, innovative regulation. And last, then, of course, AI, I mean, the large language model about which language, et cetera, is going to be key. But I think let's go in order. And for me, the risk is that if we don't get access to the devices, it's going to be a very problematic to everybody.
Thank you both for your time. We have to leave it there, but it's been great to speak. Thank you very much.
Thank you. Thank you.
Please welcome back Semafor Tech editor Reed Albergati, joined by Avi Fili, Director of Global Policy at Credo, and Dr. Bosan Tijani, Minister of Communications, Innovation.
Thank you.
All right, we got a fan club. It's great. Thank you both so much. This is going to be great. Dr. Tijani, I wanted to ask you about this. You're 90,000 kilometers of cable that you're building over the next 2 to 3 years. This massive $2 billion investment. What does that mean? What does that do for the adoption of AI in Nigeria?
Thank you for the question. Good afternoon, everyone. What does it mean for the adoption of AI? I think we need to start before even talking about artificial intelligence. We need to look at the reality of the country. Nigeria is a nation that is extremely blessed. About 70% of our people are under the age of, I think, about 25, thereabout. When you look at our natural resources, there's so much of it going on. There's so much we can contribute to the world. But I think there's this age-long set of challenges that we've faced as a people, and there are 3 of them that I often talk about. First one is optimizing the use of our resources, right? How do we ensure that we're using our resources appropriately and in the right ways? The second is raising the level of productivity across our key sectors. So many people will talk about the state of the nation, but when you look at the agriculture sector, you see that Nigeria is not optimal in that sector, so we can't even feed ourselves. When you look at education, there's so much we need to do in that space that we currently can't do. Transportation, name it, healthcare. And the third one is this conversation that we must diversify our economy. Right? Governments after government has been working on diversifying the economy. So if there's anyone in the room with the slightest understanding of economics, you understand that you can't really drive up total factor productivity without the introduction of technology. So this is why technology is important, is why connectivity is important. It's not just a good to have tool. There's absolutely no way for any African country to develop without investing in technology. But we also then know that digital technologies are the frontier set of technologies that are changing the world, right? We've seen it in Nigeria. If you look at the current startup ecosystem, which I was fortunate to be part of when it started about 15 years ago, the current iteration of it, Nigeria wasn't even rated as a destination for capital at all 15 years ago. But because we've prioritized the startup ecosystem, Nigeria is now top 2 on the list of destinations for funding for startups in Africa. So the idea of accelerating the deployment of good fiber optic network is really to give opportunities to every Nigerian regardless of where they find themselves. So if you're a young person in Calabar, you don't have to move to Lagos for your dreams to be valid, right? There's a global digital economy that you can be part of. There's content out there that you can consume and use to improve yourself. You can work remotely. You don't have to move to New York or anywhere in the world to find good employment. So for us, the future that we're trying to build is solidly linked to ensuring that our people are deeply connected. And we have a president that is taking really difficult decisions. You know, whether people like these decisions or not, they're reforms that are meant to help us reshape the direction of our economy. But we can't reshape if we don't build. But we know that the young people will build, but you just have to empower them. Look at what we've done in entertainment. You know, people talk about entertainment from Nigeria, but people don't talk about how much connectivity is done to that. The fact that a young person can create a short video in a small corner of Nigeria, and that video can go viral all over the world. So we know that the secret to unlocking possibilities for Nigeria is ensuring that everyone is meaningfully connected, not just being connected via mobile phone, by the way, meaningful connectivity.
Yeah, and I want to ask Avi a question here about this. I know Credo AI is not in Africa, but you are in Brazil and expanding to other emerging markets in APAC, and you're out there talking about these to these countries that are, like developing AI, right? And they all sort of look at it differently, right? And I just wonder if you could talk about, I mean, your role is to figure out governance around AI, how to make sure that it's implemented safely and according to regulations. But what are the different ways that countries look at this? Why do they all look at it differently?
Yeah, great question. I think, I had the pleasure of hearing Renata Dewan speak last week, and she had this very funny critique of the United Nations that it moves slowly and breaks things. And I think that this is common refrain we hear in the governance space of, we want to capitalize on AI, we need to make sure that we're using it, investing it, developing it, and governance is just going to get in the way. So a lot of the time that I spend at Credo AI is talking about how can you have regulation and governance appearing and developing alongside investment and capacity in building for AI. So at Credo AI, that's our focus as a responsible AI governance platform. And when we're in these different markets, the enterprises are asking us, how can we build something responsible and sustainable while capitalizing on the benefits of AI, because we don't want to be slowed down. We don't want things to break or not happen. So we look at these regulations, we look at different policies in these markets, and there is a lot of commonality. So from an enterprise perspective, we talk about the ability to have a registry or an inventory of your AI systems, being able to have human oversight, human in the loop, human over the loop. These are concepts we see in the APAC region. They're also in the United States and Europe. I think Africa has done an amazing job of investing in a lot of national AI strategy development and thinking about these principles as well. But how do you introduce transparency and accountability alongside the development is really our focus. And I would say at the enterprise level, we try to share these commonalities and build this into the process.
Yeah, do you agree with that, Dr. Tajani? Like this concept of, okay, we're kind of putting the cart before the horse here and talking about controls around this technology, and in the meanwhile, like as you were saying before, we just need to get it here. We need to build it and use it.
I agree. And people need to understand where this is coming from. So whilst the world is just talking about AI, thanks to ChatGPT, this is something Global North has been investing in for years.
Yeah.
It's already in existence, it's matured. The reason why this conversation is hot at the minute is because of frontier AI, which everyone knows that it has potentials to be extremely negative in terms of the outcomes for humanity. And that's why we've prioritized it. If you go back to Nigeria, probably half of the people in the room will tell you, I'm wasting my time working on artificial intelligence. But I actually think every learned Nigerian, African should be pushing artificial intelligence, because these are a set of technologies that will eventually, it's already doing it, it will eventually determine what we think about, how we think, what we do, your mood when you wake up. Many people already wake up going onto their social media platforms. But these social media platforms are being controlled in terms of what you get to see. The algorithm behind them will determine what they want you to see. And they influence what you spend your day doing. But AI is going to be much more impactful in terms of how we are rebuilding the future of humanity, literally with AI. And there's no future where certain part of the world is left behind, where certain part of the world is not part of that development. So we may end up with massive divide in society because AI is being built from just the perspective of the global north. That's why we have to prioritize the collection of data sets. We can't leave it to ChatGPT to ensure that their models are inclusive, because the reality is ChatGPT is not going to come to Nigeria to help us, or anywhere in Africa, to help us digitize our reality. Yeah. The bulk of our reality is still dark, is unconnected, is not being used to train a lot of these models. We have to accelerate it. We know artificial intelligence is good for humanity, but it's also dangerous if it's not inclusive. And we have to take responsibility for it.
And that's one of your big initiatives in Nigeria is taking the country's data and making it accessible, right? And that's been a big problem with these data silos. I'd be interested in AV's view, or maybe there's a back and forth here on like, what are the dangers in doing that? Like, what do you need to look out for as you sort of prepare this data for these massive large language models?
Yeah, well, I think as Dr. Tijani has already articulated, it's important to have that accessibility everywhere in the world, right? AI is a global product, it's a cross-border product in terms of how it's sourced and developed and fine-tuned and trained. So the importance of having data sets available in Africa that are culturally and linguistically diverse is going to be critical to the development of AI on the continent. But I think thinking about this globally, I want to tie it back to an issue related to AI literacy, because it's something we hear a lot about, the need to be AI literate. It's something that regulations are calling for. You know, you must ensure that your organization, your enterprise has developed AI literacy. I think it's important to unpack what that looks like for AI, because we often hear that if you are managing your data, if you're doing proper data governance, then you're handling your AI risk. No, I want to point out that that's actually not the case, because the concepts we've drawn upon from regulation, like the General Data Protection Regulation in the European Union, ask for you to be a good steward of the data. That's not going to be enough when you're managing AI risks. So again, when we think about building capacity, investing in AI, it's important to invest in AI literacy that also showcases the risks unique to AI, things like accountability, robustness, performance. Being able to understand that and develop those alongside the data center investments is going to be critical.
Yeah, but I wonder if you worry about being held back in a sense, right? Like in the US, we have all these regulations that really prevent, I mean, we have a lot of data, but there's a lot more valuable data that we can't, that AI companies can't access. Do you worry about that sort of red tape in Nigeria?
No, I don't. I think we're fortunate. We're one of the few countries on the African continent that is now passed its Data Protection Act. We have a Data Protection Commission, which is, I think, just about a year old. But the reality is the commission in itself, which I supervise, is still playing catch-up. Right? You still find developers who are collecting sensitive data and taking them out of the country. You know, in the name of helping to build AI. So I think for Africa, we're still far from it. You know, for Nigeria, if I can speak directly to Nigeria, I think we're still far from the point where regulation will get in the way of people building. But I think the approach we're taking is also saying to ourselves that this is not just the responsibility of government. Where AI is going, it has to be our collective responsibility, which is why we've set up the AI Collective, which we're going to be announcing on the 9th of October, I think, funded by Pierre Omidia, the founder of eBay. And the idea is to bring everyone from civil society organizations, startups, academic institutions, working in artificial intelligence together to help us implement our national strategy, but also ensure that the development of AI in the country takes into consideration safety, but also ethics as well. And we're taking that a further step because we understand, again, government doesn't have all it takes to help us accelerate development of AI. So we're working on designing our national AI trust, which is going to be a body of people from the society that are reputable individuals. Government will have a seat on the trust, and their role will be to ensure that Nigeria is exploring, developing AI ethically. But I think most importantly, because we're also building our large language model, we don't want to take a close approach to it, but we're exploring the possibility of commercializing it. And whatever we make out of it goes into the trust, and that fund is then used to develop AI in the country.
That's so interesting.
Thank you.
I love when we get a little applause here. You know, we talked with James Manika from Google earlier about the fact that you know, there are 118 countries that just haven't been involved at all in any of these international discussions around AI. So you talked about within Nigeria, but what about outside? Do you think that's something that needs to happen more in Africa and, you know?
Absolutely. I'm actually particularly interested in how developing countries, and particularly countries in Africa, how we look for smart ways to be part of the AI race. Because as you know, this is an expensive endeavor. Typically, if you talk about AI in Nigeria, people will immediately remind you that we don't have enough electricity, so you can't be part of it. We don't have resources for compute, so you shouldn't be talking about it. But my take is that there are creative ways in which we should be participating. Right? I think even on the electricity front, there's a unique opportunity for us, because most people talking about investments in AI and energy are thinking of more smarter, cleaner form of energy. So it's an opportunity for us to reimagine what that will look like. On the capacity front, it's being projected that in a few years, Africa will power the world when it comes to workforce. Because many countries in the world, population declining, aging, whilst in Africa is growing. I think Nigeria, we're adding about 5 million or so people annually. Right? Just about 10, 15 years ago, our population was 160 million. Now we're 230 million. That's projected to continue to grow. So there's no future where Africa is not powering the workforce of the world, not just for Africa. So we have a unique opportunity to also take the role of enlightening our people, skilling our youth to ensure that they can actually power that development in the world. And I think lastly is that Africa can innovate around inclusivity in AI data set. Yeah. Because like you're saying, in Global North, you already have digitized content. In Africa, we don't. So we can come up with really smart ways to help improve the quality of data set that is being used to train AI models. And that can be an innovation that we bring into the AI ecosystem, which we can easily monetize as well.
Right. I think this is interesting, Avi. I wonder, you've been to all of these, I think, AI summits, right? Or many of them. There's one coming up in Rwanda, right? Is that on your radar? And like, I wonder if that's a sign of a shift, that the conversation is kind of broadening.
Yeah, I think to Dr. Jilani's points already, the conversation needs to shift. It must. This is a global conversation. The UN, to its credit, with the recent report released by the High-Level Advisory Board on AI, emphasized that we need a disaggregated but global approach to not only developing and investing, but kind of resolving the asymmetries we see in information and capacity and governance for AI. So yes, I think it's a necessary conversation. It should be on my radar. I'm hoping to be there. So I think that the conversation is important to have all these stakeholders at the table, making sure that we're developing the AI safety measurements, metrics, ways to invest in that alongside the capacity development as well.
And just to add to this, so you're not seeing investment and attention from a lot of countries because conversations around AI is technical.
Right.
And unlike many other technologies where your private sector can drive its development, there's absolutely no country in the world that is strong in artificial intelligence without the government getting involved. Mm-hmm. So I think the private sector folks needs to prioritize scaling, building the capacity, and encouraging government to jump on. This is what I've seen. Most countries are not coming on board because there's gap on the public sector side. So if you pay attention to it, any country that is listed in Africa is listed because there's some sort of knowledge in the public sector. It could be one or two people championing it. And most countries are not. So you may find countries with a startup ecosystem that is quite strong on artificial intelligence, but still you will not find them participating in global conversation because this is not something that is being led just by the private sector. So I think we need to mainstream that, building the capacity of governments across Africa and the rest of the world to be able to engage this conversation.
It's interesting. I think you know, there's been a lot of data center growth in Nigeria, right? I mean, one of the leaders in the continent. There's the Amazon GT Bank partnership. I thought was really interesting. But where do you see that going? I mean, speaking of public-private partnerships, I mean, are we talking about one day having accelerated compute clusters in Nigeria? Is that the goal?
I think so. So full disclosure, I think Nigeria is still disadvantaged when it comes to these conversations. There are large hyperscalers that are looking to come to Africa. I think they prioritize South Africa, Kenya, ahead of Nigeria. But in terms of business case and the future, it doesn't make business sense. Because Nigeria has a population, it will continue to grow. The need for edge technologies will be more. We have 8 submarine cables. We're investing in 90,000 kilometers of fiber optic network, which is going to be the 3rd longest. And it's probably going to be the longest eventually because that network will have the potentials of extending into Niger, Republic of Benin, Cameroon. It's not a country that we can look down on. It's not a choice as to whether the energy is more consistent in East Africa or Southern Africa, and that's why you're not going to come to Nigeria. I think in Nigeria we have good body of water, which is required for future-focused data centers. I think in terms of energy, we can be creative in terms of finding new sources of energy to power this data center.
Sorry to interrupt, but there was the geothermal deal in Kenya with Microsoft. That was interesting. I'm wondering if what have your conversations been like with the hyperscalers?
It's not been as progressive. Let's leave it at that.
What are their, what's standing in the way? Like, what's their biggest, what do they say is the biggest
It's a conversation that is much more than just a country and one hyperscaler or two. It's also at the government level. If you look at what's happened in Kenya, it's not just been company to country, it's been country to country. The US worked with Kenya to make that deal happen.
Yeah.
And I know there's conversations as well on possibilities in Nigeria.
Yeah, maybe Avi, you can make a quick point on this. Like, is it important for these countries to be able to control their own fate when it comes to like inference and compute?
Yeah, I think when it comes to AI, as we all know, it's very contextual. It's very context and use case specific, and there's always going to be different approaches to risk thresholds and what's acceptable risk. So again, pointing back to countries and the way that they can kind of collaborate on a global level, there's a lot already existing in different fora like OECD, UN, GPI. But I think it's important that we recognize when stakeholders are not at the table for seemingly, I guess, unsexy topics like standards, because they're the underpinning of what enterprises are going to do. When we look at the enterprises, they're not so concerned with politics and what's happening at this geopolitical level, but if they're required to do something by a standard, by an internationally accepted standard, they're going to implement that as a company. And then wherever they go, they're sort of raising the bar in that way. So I think that's another critical piece of the conversation.
Well, we've got a lot to look out for the next few years. I'm interested. Thank you so much, both of you. Appreciate it.
Thank you.
Please welcome Thabani Mufasa, Managing Director of Country Programs Delivery for Gavi, and Africa Director at the Bill and Melinda Gates Foundation, Pauline Bazinga.
Thank you very much. Thank you very much. Not easy to start a session in the middle of afternoon. How are you all feeling? You still have some energy? You still have some energy? Perfect. So let me introduce myself. I'm Pauline Bazinga. I'm a medical doctor by training, specialized in public health. Those public health doctors that pretend to be doctors, but they don't see patients. They just talk a lot and try to raise money to make sure that health systems across Africa and other places where our 3 billion people live have actually good health systems. So today I'm here with my brother, Thabani. I'll let him introduce himself, and then we'll have a 10-minute quick conversation. And we really want you all to listen to the topic of health. Thabani.
Thank you, Pauline, and greetings to our audience. I'm Thabani Maposa. I have a passion for children, and that's why I'm at Gavi. And I'll tell you more about what Gavi does. I'm the managing director there, and I oversee our work in about 90 countries across the world. Thank you.
Thank you very much, Thabani. By the way, to be able to reach 3 billion people and work in partnership with governments, we actually need to have scale in mind. That means if you go, I'm sure all of us, we've been in rural areas across Africa and other places, and there are community health workers that go visit facilities. There are health posts, there are health centers where the majority of kids get their vaccines. To be able to get commodity in those places, you actually need a global architecture to be able to buy vaccines and TB drugs and malaria drugs in bulk, good prices to get them there. So this is the work that Gavi does. Who has heard about Gavi? Can we just put you? Fantastic. What about global funds? I'm sure WHO, because of COVID, we all know about WHO, and the role of government. So, you know, in the past, I would say 15, 20 years, we've seen amazing progress in global health. Gavi, they've vaccinated close to 1 billion people, even more than 1 billion kids around the world. And Global Fund have saved many, many lives. because of treatment for HIV, TB, malaria, etc. And now we're really in the moment to try to boost global health in a very significant way, because when you look at the MDG, the Millennium Development Goals, from 2000 to 2015, we saw a significant decrease in under 5 mortality. As a world, we used to lose 10 million kids every year. Now, that number goes down to less than 5 million. Huge progress. I think we need to clap for the world about that. It's great. But then we saw from 2018-19 up to today a stagnation of that progress because of COVID, the war in Ukraine, etc. Many donors are not putting as much money in global health as we would expect them. In the past, we used to have almost 40% of all global aid going to Africa. Now it's close to 25% of that. But Gavi and Global Fund are some amazing mechanisms for us to actually support. So Thabani, what is Gavi? Can you just explain to us? People have heard about Gavi, but what is that mechanism and what do you do?
Thank you, Pauline. I think I saw that a lot of people know about Gavi, or a bit about Gavi. Gavi is a partnership of a number of players, and some of them, he just named them. The WHO, UNICEF are the core part of Gavi, and BMGF, we call it the core alliance of that partnership. But there is the private sector as well, and at the heart of it, there is governments. And so it's a partnership of a number of parts coming together. On the ground, it's about delivering vaccines. On the upside, it's actually coordinating on supply, making sure that there is cold chain, and that the vaccines get to where they are needed most. And some of the things that we obviously do at Gavi is to identify some of the important diseases that are vaccine preventable. At the moment, you would have heard of Mpox, and Gavi, WHO, and UNICEF, and Africa CDC are at the center of that. The model of Gavi has always been about partnerships, but coming around governments, because governments are at the center of everything we do.
Fantastic. I think the role of government is critical. Is that government need to provide the facilities, the policies, even the co-funding to make sure that staff that are providing the vaccines or TB, malaria, etc., they are available. Now, the theme of the day today is unlocking the potential of the least resource 3 billion. So Thabani, why do you think the leaders in this room should really care about global health? And what are the innovations that you've been really excited about that we should all, as a world, continue to support?
Well, I think that this room should care about global health because there is no wealth without health. And so we have just got to begin there. We need to have healthy human beings to be productive and to propel our economies. And that's the first thing that we actually do. But during COVID, we also said something that I'll repeat here. We are not safe until everybody is safe. And it is extremely important that global health institutions continue to keep us safe and anticipate diseases that could otherwise paralyze economies and our ability to grow our economies. Then in terms of innovations, there is one interesting secret that is not known. One of the best drone program in the medical field is actually in Africa, in Ghana, and it is a partnership with Zipline that delivers vaccines to difficult terrain. And I think some of those breakthroughs are showing us that a high-end technology can actually really be important in actually reaching the last mile and making sure that those who don't have access to health are able to access it. But let me also share another story here. In this world where artificial intelligence is picking pace, we have found that artificial intelligence can be a friend or it can be a foe. And for us, it can be a foe in terms of misinformation. But you cannot fight misinformation with traditional ways. You need to scale up and meet the challenge at the same level. And so this is where we need leaders and innovators to bring artificial intelligence to actually help us to respond in a meaningful way to some of the challenges of misinformation that we deal with.
Oh, thank you very much, Tabeni. I think you mentioned some really great innovation in terms of both service delivery and then also adapting our services to the people. But one thing that we are seeing now is just because of climate change and security, etc., almost 70 to 80% of our people live either in places where services are not available or close to a lot of conflict. We are seeing droughts, we are seeing inundation, etc., that are disrupting service delivery. So what is Gavi and Global Fund doing to actually adapt and support government into this very, very changing world?
We have recognized that strengthening government capacity is important. And in working with governments, we've been working towards what we call resilient health systems. And these resilient health systems are ones that are bespoke and they are responsive to some of these areas that are cut out. I just spoke about mpox now, and one of the things that we are doing with mpox is really to recognize that where mpox is happening is a place of conflict. But how can we work with mobile teams in terms of reaching those places? How can we work with GIS for micro-planning to make sure that we target populations and reach them exactly where they are so that we are targeted and effective in our reach?
Fantastic. You know, now, have you heard about zero-dose kids? No? So zero-dose kids are kids that have never received any vaccine in their life. As you know, we're all parents. Our kids need 12 to 14 vaccines before the age of 5 to actually survive all the preventable diseases. And there are many kids in the world that are still zero-dose. And Gavi is doing a lot to achieve that. But now the Global Fund as well, treating HIV, TB, malaria, and other partnership. Now, as we close for this week, Tabani, what is the big ask that we have for this audience to make sure that we prioritize health and Gavi and Global Fund funding, given that donor countries are actually having a lot of other issues, the war in Ukraine, et cetera, but how do we keep that into their attention?
Well, the big ask is that Gavi has been doing this for 20 years, and in the course of these years, we have learned a lot. But also the big ask is that when you are going to join us, you will be joining governments that are committed to protecting their children. And protecting the next generation is something that is achievable because of our model and how we work. In the next 5 years, between 2026 and 2030, we are going to see governments contributing 4 billion of their own resources towards this. And Gavi is asking for 11.9 billion to be matched with the domestic resources that will be raised in that regard. In the 23 years of Gavi's life, it has graduated 19 countries. It's a model that says when you have grown up and you are doing well, we thank you and we celebrate you and we send you on your way. In my household, I just have an empty nest recently. My kids have left the house and I've said to them goodbye. And we are looking forward to saying to some countries when they are able to do that, what they can do for themselves. Go well. We wish you all the best and we will support you.
Thank you very much, Tabani. I think you welcome and thank you very much. And we would really like to thank Semafor for this platform as well. So thank you very much for the opportunity. Yeah, thanks. Yeah.
For today's final session, please welcome President Lazarus Chakwera of Malawi. Semafor Africa editor Yinka Adegoke returns to lead this final interview.
Hello, everyone. Good to see so many people still here. So late in the session. We have saved the best till last. It's my distinct honor and pleasure to have the President of the Republic of Malawi, President Lazarus Chakwera, to speak with us about his vision for the topic we've had today. We've been talking a lot about, obviously it's there in the name of our event, the next 3 billion, how we connect people, how we ensure that we bring more people into, connect more people to the modern global economy. And Malawi is a country that has undertaken a lot of changes under the President's watch, and we're going to learn a little bit about some of the strategies you've employed in ensuring that more people can get connected. So I'll open with the broad question as to what your vision generally is with regards to connectivity, how that fits into moving the country forward, transforming the economy in general.
Well, thank you, Yinka. In this era of digital revolution, connectivity becomes a vital force in driving nation economic growth. And yet in Africa, we remain largely disconnected. Mm-hmm. With just 36% of the continent having access to the internet. And this is a digital divide that must be addressed, and it must be addressed with urgency. Although Malawi's situation is not any better than that of Africa, our connectivity rate is now at 37.9% as of 2023. But it must be viewed from the perspective that in 2020, we only had 18%.
Okay.
And so we believe that we have made significant strides and achieved a transformative shift that underscores the potential of digitalization in reshaping our economy. COVID-19 pandemic starkly highlighted the consequences of limited digital access by disproportionately affecting our most vulnerable communities and public institutions adversely. We have learned that digitalization is not just a tool, but a critical driver of economic progress. A World Bank study shows that a 10% increase in internet penetration can boost GDP by up to 2%. And so it underscores the fact that economic potential is there through connectivity. Moreover, digitalization promotes government transparency. We want everything out in the open, expands domestic revenue, and enhances service delivery. So Malawi's long-term development plan, we call it Malawi 2063 vision, has identified industrialization and digitalization as key pillars in our development strategy. Now, briefly, that vision talks about Malawi becoming an increasingly wealthy and self-reliant industrialized nation, upper middle income economy by 2063, which will be about 100 years. It's patterned after the Africa we want, Agenda 2063. But we want to bring it as fast as we can. And so we believe that the groundwork now in national plans by prioritizing affordable connectivity, expanding digital infrastructure, leveraging regional data corridors, and fostering digital literacy. Our partnerships with innovative platforms such as Starlink illustrate our commitment to making internet access universal and reliable. I have several points here that I wanted you to understand and to know in order for us to harness this for economic growth.
Let me try and get to a couple of points, because I'm interested in, you talked about that move from 18% to 37%. What happened there? Was it something you did as a government? Was it some sort changes in the environment, or is it just natural organic growth, or as more people want to come online?
If we leave it a chance, it's not going to happen.
Right,
so we have to intentionally work with our regulatory authority, work with private sector companies in order for us to have that kind of synergy. Our data was one of the highest on the continent. Now it is the cheapest.
Yes, in terms of the costs, right.
Yes, it is now the cheapest. But
did you have to enforce that? I mean, these are private companies,
yeah.
Obviously. Did you have to enforce that in some way? Did you have to put in some new rules? How does this work?
We have pretty much put policies in place that enables them to expand without having to feel us breathing down their necks. And so we feel like this is a way that the private sector can really thrive in an environment in which we want, like if you find a village nobody has any shoes on, and then you celebrate because you say, now, tomorrow, I'll bring me pairs of shoes. And so with lack of connectivity, now we are discovering that we need, for example, gadgets that will enable more people to get connected.
Right.
Because the infrastructure is there.
Right. So with the gadgets, so are you talking in terms of personal devices and smart devices that people will use?
Smart.
Yes. to access these services, be they government services or just entertainment. It could be anything, obviously. How are you thinking about the VAT you've had on devices? I read that some of them are as high as 17.5%. Is that something that you are considering reducing or cutting? I was talking to the South African Minister for Communications this week, and he told me that this is something that they're focused on. I was wondering if you're thinking the same way in Malawi in terms of making these devices more affordable for
what we have
people.
done is to have consortiums, and we are talking with various investors.
Okay.
And some have actually shown interest so that they could begin assembling devices within the country and for the region at affordable prices. And we feel like this will be the way to leapfrog all this.
By getting investors to come in and making it cheaper.
That's right.
And more affordable.
And they can do a PPP deal, private public partnership style thing, or they can just come invest. We have actually passed legislation that encourages investors to come with the needed laws so they get their business protected in as much as the country benefits from the creation of jobs and so forth. So we feel like this is the right time to move into Malawi.
And how much interest has there been so far from investors or operators who want to come into Malawi at this? It sounds enticing, but I'm wondering how much...
they will have some tax rebate, but these things we have left a kind of a corridor where you can navigate and negotiate whatever it would be best for you and for the country. We feel like we should be flexible so that we don't get broken in the process, but we can work with anyone who wants to come and invest, and we have pretty much set the infrastructure where it shouldn't take more time than is needed.
I also want to get to financial inclusion, because I know that's also an important part of your vision.
Right.
You have, I think last year, somewhere around mid last year, you had about 11 million mobile money wallets. I mean, do you, how are you thinking about trying to increase that number, trying to get that penetration to rise in the country? Do you have any particular strategies, or are you pleased?
Well, you just need to understand that the mean age for Malawi is 18.
Right.
You are dealing with young people who are already, you don't even need to convince them. They are already sold onto this. What we need is to make sure that now we have opened up space for them to be able to thrive. They're doing business, they're Some are even getting engaged in agricultural production, big time. And so they will need all of the help they need for them to be able to prosper in their businesses, creating more jobs, creating more wealth, and making sure that everybody has something to do. And that will be enhanced through digital enhancement.
And moving a little bit away from digital, although I think these things are all connected, when you think about the economy, the broad economy, and thinking about trying to see expansion of the broader economy and alleviate poverty in Malawi. What are your sort of, as you think for the next sort of 5 years, you talk about 2063, but even over the next 5 years, how are you thinking about the key areas you're trying to focus on for the country for alleviating poverty?
And so for us, in trying to reach that Malawi 2063 vision, we have developed a 10-year implementation plan. But within that, we also have developed what I call an ATM strategy, so that agricultural productivity and industrialization, mechanization, commercialization, agriculture as big business with all the value chain, so we have value addition done in the country. This creates more jobs for everyone. And then tourism. We put much emphasis on establishing infrastructure, making sure we have good roads, we have hotels. The Lake Malawi is one of the most beautiful lakes you will ever find on planet Earth, with variegated tropical fish you can't find anywhere on planet Earth. And you need to visit that Clearwater Lake, third largest in Africa. It is a marvel to watch. And so we have tours, we have shows. Lake of Stars is bringing artists from all over the world, and many more. And then we have majestic mountains, tallest in southern Africa. We have hills and valleys that just take your breath away. But we need the infrastructure. Up north, we need people to visit, the plateau there. That is almost like Europe. The weather is so different. It's almost raining every time of the year. But you can then invest in that. You need connectivity to be able to do all of that. You need the internet to be able to do some of that business. Thirdly, we have emphasized mining. We have rare earth, we have uranium, we have, in fact, even alluvial gold, which shows you that there's a belt. We thought we never had these. We have the largest deposits of rutile and graphite, and the green economy of tomorrow will depend largely on some of these and the development of some of these minerals. And so we are thinking Malawi is poised really to grow exponentially if we do the right things, and the foundation of which we have laid now, we think we are ready to take off.
I mean, the tension that we see in so many countries, particularly around mining and the green economy, is this concern that, and I know you will say this as well, we do not want our countries to be exploited and get left behind in this new green economy. I'm sure you would say the same thing. Mm-hmm. What sorts of steps are you taking to ensure that? Because the argument is, how do we move up the value chain, right?
Right.
How do we not just be somewhere from which we are extracted? How are we a part of
we are already
those batteries?
Encouraging people to do the value addition within the country. Like we already have someone purifying the gold that people are getting along our rivers and stuff within the country. We want people to be able to add value to whatever they have within Malawi. And we have the advantage of being almost the last kid on the block, because we never thought we had any minerals. And so now we're taking advantage of those who've had experience along this line, talking to our friends in Zambia, Zimbabwe, South Africa, and Botswana, for example, and making sure that we have international teams of lawyers helping us to say, rather than get a raw deal, let's read the small print in some of the mining agreements that people just get so easily, signed, and then they never thought that they had entangled themselves. So we wanted to do that, but we know that we can't be as perfect, and so like in a vehicle, you are able to maneuver and drive it if it is moving, not stationary. So we have recently signed 3 mining agreements, and we hope that we'll go on to do something better than we have been able to do in the past.
Where has most of the interest come from internationally?
Internationally, we have local folks that want to invest. Some Malawians who have been working in South Africa and have established businesses there, they want to come. We have from down under in Australia, people that have shown interest. In fact, we even had some who were mining uranium at some point. And then we have people from Europe. We have people from the United States who have already moved in and have gotten licenses to do. So we're getting everyone from everywhere.
Okay. Mr. President, unfortunately, we have run out of time.
Oh, I didn't. Oh, my
Yes,
goodness.
we've run out of time. It's an excellent conversation, and if nothing else, everyone here needs to go to Lake Malawi. That's the big lesson we've learned.
That's it.
Thank you very much, sir.
You're all welcome to the warm heart of Africa. Mama.
To close Semafor's Next 3 Billion Summit, please welcome back to the stage co-founder and CEO Justin B. Smith.
Good luck with this. So, wait a minute. Abby? Thank you very much, Yinka. Thank you very much, Mr. President. We appreciate you closing us out here. Thank you. Yeah. I'm not going to keep you long from the bar. Is there a bar? I guess somewhere a bar. Really, just this gentleman in the front needs a drink, apparently. I'm really just here in a ceremonial role to thank you, honestly, to thank all of you for sticking with us, for coming to Semafor's first ever Next 3 Billion Summit. This was just an idea a few months ago. And we are just very, very proud to have spent the day together. And frankly, the day was really made most special by all of you in the audience who were truly, truly fantastic. So thank you. And Joel Embiid, of course. But no, I hope you may have noticed across the day the thread of high-quality journalism which existed in all these conversations. These conversations were curated by journalists, some of the best journalists in the world, some of the best journalists in Africa, and that is the sort of the core idea and DNA of Semafor and Semafor Africa, led by Yinka Adegoke and Alexis Akwajiram. They truly are brilliant journalists, and that is what we do and how we differentiate ourselves. I would like to say thank you again. I know this is sometimes boring and left to the end, but there are some companies, as you can see behind me, who really made this possible. Verizon, Salesforce, Cisco, the Shell Foundation, the Bill and Melinda Gates Foundation, the Partnership for Digital Access in Africa, and the Africa Finance Corporation. Please give them an applause. We really appreciate them. Thank you very much. And lastly, our young company, as I mentioned earlier, we're about to turn 2 years old. If you want to come to our birthday party, just let us know. We're having a few parties in DC, New York, here and there, maybe in Lagos. But we are very focused on live convenings like this that are based around journalism, and we actually invite all of you to join us in October in Washington, D.C. for our next major event of this nature, which is called the Semafor World Economy Summit, against the backdrop of the IMF World Bank meetings. So please come. You can go to our website. You can sign up. And please sign up for our news products. They're impartial, balanced, and intelligent, and very global. And I think it'll make your life better, and certainly your news knowledge and insights better. So thank you so much for coming. Appreciate it very much.